for 13%. That's an 8% revenue upside. So that's an indication we're continued in that spot of higher for longer. Separately tonight, we're going to get at 4 Eastern. Jensen's from NVIDIA is going to be giving his keynote at CES. The last time he gave a big keynote was back on October 28th. He gave guidance essentially for 54% revenue growth this year. The street's at 50, and that excludes China and any new bookings. So I suspect that NVIDIA is probably going to grow 65% plus this year. And then lastly, 9:30 Eastern tonight, we're going to get Sue from AMD. She's going to give a keynote also at CES, and I expect her message to be pretty straightforward, that we're still early. So Becky, when I put all this together, I recognize this feels like too well-traveled of a playbook to continue to be a success, this continue to be long AI, but I'm optimistic that the numbers are still too low for this year. We're still early.
Yeah, Gene, just in terms of what you're anticipating, let's start with NVIDIA. You said the street's at 50%. You're looking for 65% or even north of that this year. You think Jensen Huang's going to lay that out today, or do you think he'll be a little more cautious in what he's explaining or describing? Because, I mean, those are pretty lofty expectations to try and beat.
Well, the 54, it's not lofty if you think that they can grow 65% plus, and it's not lofty if you believe we're still early in this.
No, so but do you think he's going to signal that today? I realize that's what you're looking for, but do you think he'll actually say that today? Because so much of what happens in the market is expectations, beating expectations, being able to anticipate that things are going to be even better than what they've said to this point.
In a bubble.
Yeah, thanks for the clarification.
All last week.
The bottom line is
bubble on the video.
October 28th. We expect $500 billion in cumulative Blackwell and Rubin revenue through the end of calendar 26. That implies 54% growth. I also believe that he will reiterate that excludes any China revenue and excludes any additional bookings, which I think he will make indications that things continue to be strong. And so I think the exact details of his guidance are going to say this 54% number.
This could be the week.
Side to it. And I think it comes down to, I think that gap between where the street's at versus what NVIDIA has been saying, what we're seeing in the marketplace from Foxconn today, that gap gives you a sense of kind of some of the apprehension that investors have, that analysts have, that this bull market's going to continue. But to answer your question, yes, I think that today's going to be a good day for NVIDIA. I think tomorrow's going to be a good day too, because I think Jensen's comments are going to continue to reiterate that they essentially can't keep up with demand.
Is that your favorite pick, NVIDIA?
So we, Deepwater, we do own NVIDIA. So that's, I think if you want to know what our favorite picks are, look at what's in our portfolio. NVIDIA's in there. I think for calendar 26, Google is going to continue to be a big surprise. Today, Samsung talked about doubling their Gemini devices for calendar 20 to 800 million shipped this year versus 400 million next year. So Google also at the top of the list. And this Foxconn news that I talked about is also positive for Apple, and that's we think that's going to be the best performing large cap in the first half of this year. So I think those are the big three that we're focused on.
Wonderful. Gene, thank you for your time this morning. We appreciate it. Squawk Box will be right back.
I will be back. Promise you. You won't like it. NVIDIA. Resistance today on the SPY to break is going to be the channel of 686.03 to 686.40, maybe higher even, but definitely that. If it starts respecting that 40, whoa, with support on the 5-minute at the 200, allowing 684 to be support, with a buy down there right under 683. And that would be the SPY. Much Tesla and NVIDIA. They're talking about NVIDIA again this week. Programming will resume shortly. Let's see about that.
Top story, the reaction to the U.S. capture of Venezuela's leader, Maduro. Amy Javers is in Washington this morning with the latest. Good morning.
Yeah, good morning to you, Andrew. The United States says it was strictly a law enforcement operation, but Friday night's explosions, gunfire, and darkened helicopters sweeping low over the Caracas skyline gave it the feel of something very different, regime change in Venezuela. And by Saturday, with Venezuelan leader Nicolas Maduro in handcuffs in New York, it was clear that the clandestine U.S. operation was about both enforcing U.S. law and changing leadership in Venezuela. Now Maduro is expected to make his first appearance in federal court to face federal drug charges later today. And in the meantime, President Trump says the United States government will, quote, run the Latin American country for an unspecified period of time.
We're going to be running it with a group, and we're going to make sure it's run properly. We're going to rebuild the oil infrastructure, which will cost billions of dollars. It'll be paid for by the oil companies directly. They will be reimbursed for what they're doing, but it's going to be paid. And we're going to get the oil flowing the way it should be.
In the president's first remarks to the public, Venezuela's vast oil wealth was front and center in his explanation of what's going to happen next there. The country has the largest proven oil reserves in the world, 303 billion barrels, which amounts to 17% of all global reserves. That's according to the U.S. Energy Information Administration. And even as they were briefing the press on the operation in Venezuela, administration officials over the weekend had one eye on another country altogether, that is Cuba. Secretary of State Marco Rubio appeared on TV over the weekend saying that the Trump administration doesn't like the Cuban government, which was, of course, closely aligned with Maduro, and said that, quote, if I lived in Havana and I was in the government, I'd be concerned. And last night, President Trump, briefing reporters on Air Force One, said that he believes that the Cuban regime is set to fall. Guys, back over to you.
Eamon, we've got some live shots. We're seeing a lot of movement and action in Brooklyn right now. I want to show you what's happening. Some heavily militarized vehicles around that area where the former or current Venezuela's president is in U.S. custody. Of course, this is where he had been moved. We do expect later today there to be some kind of arraignment or hearing. Unclear whether they are moving him from this prison to the courthouse at this hour or there is something else taking place. But we are keeping our eyes on this, and there's a lot of movement.
We do know, Andrew,
Andrew,
we do know that they moved him last night in an armored vehicle when they did move him originally to the jail where they were processing him. Now we are expecting to see him today appear in federal court. So, we could be looking at a movement here ahead of that so that he can make his first public appearance. We do expect spectators to be allowed in that courtroom, and you can imagine the media will be there. So we'll watch for all of that later today.
Okay. Eamon, we'll be coming back to you, I am sure, in just a little bit in Washington, D.C.
All right, coming up this morning's top movers. Plus, we'll get a rundown of the media industry, including today's big debut from Versant. We're going to talk to Lightshed Partners co-founder Rich Greenfield. Then later, Minneapolis Fed President Neil Kashkari will join us. That's at 8 a.m. Eastern. Squawk Box returns in just a moment.
I don't see how you can say that with a straight face. Kashkari. I really don't. It's a toughie. Mr. Kashkari. This is The Spy. My name's Washboardjim. And I truly believe that resistance to break, resistance channel, and I typed in resistance. And we're going to type that in right here. Okay, get ready. Ready? Say yes. I want them. And we're going to type that in right there. There's something wrong right here. I need to fix that. We had a little problem right there. You got that fixed, Jimmy. Good job. Put that press sign right there. It's going to go right in here. Boom, right about there. A bit lower, a little bit lower, a little bit lower. Boom, right there. Lefty stitching, go up to the resistance line, hit that, got it, hit return. Okay, you ready? Say yes. 686.03 slash 636.0.838. Okay, I can tell that today's going to be a lot of 3s and a lot of 8s. So this is the way I'm going to seal it. We're going to go 3838, 38, 38, 38, 38, 38, 38. And there's been there's already, got an issue. That channel cannot be that big of a support. That should be 686. Okay. Now I got a channel of support right here. Whoops.
Okay, there they are. Checking the futures this morning. You can see
got a problem.
33 points now on the Dow. NASDAQ up 186 points, and
No, don't.
S&P.
No, don't.
See up about 43 points.
Okay.
Dow's doing pretty well. There's some oil stocks in there.
Sorry, Joe, but I
There are.
gotta. Oh, Becky, I hate to get in between you two, but resistance to break will be the SPY. You ready for this one? I've never called this one out before. 686.03, and then a hard resistance to break at 686. Get ready for this. 38, 38, 38, 38, 38, 38.
gold to digital gold, so to speak, and that's Bitcoin prices. 93,102 right now is the last trade. Pretty much kind of recovering from the sell-off that we've seen over the course of the last month or so. The possibility of more oil coming to the global market from Venezuela is likely boosting some of those risk appetites across the crypto side of things. If you take a look at some of the crypto names that are involved, like Coinbase, they're moving up now from Bitcoin's valuation because Goldman Sachs is upgrading Coinbase as well to a buy from a neutral rating. The analysts there are citing structural growth, especially in prediction markets.
That's not true.
4.5% for Coinbase, so keep an eye on crypto and those crypto stocks.
That's
Moving
not
over to
true.
shares of NVIDIA right now, they're up just about 1.5% in the pre-market trade after Bank of America called it a top AI pick for 2026. Those analysts there are remaining constructive on AI-related chip semiconductor stocks, despite the possibility for more volatility. B of A says that NVIDIA is the best positioned one because of its strategy to optimize the full AI stack and tighten supply chain alignment. So NVIDIA shares up about 1.5%. And finally, we'll turn to retail and Costco shares. They're on just about maybe 1% or so. After Mizuho upgraded that stock to an outperform from a prior neutral, they also raised their target price to $1,000 from $950. That's an implied upside, by the way, of just around 17% from Friday's closing price. Those analysts at Mizuho say that they see no clear signs the core Costco business is being impacted by external factors like tariffs and competition. So keep an eye on Costco shares up nearly 1%. Now, for more on those and other top analyst calls of the day, just head over to cnbc.com/pro, where subscribers get all the context and detail around the notable upgrades and downgrades each day. Joe, I'll send things back over to you guys.
Okay, Dom, too. Thank you.
You got it.
We'll talk.
Coming up, Versant making its public debut here at the NASDAQ later this morning.
All right.
Parent company of CNBC, MSNBC, USA, Golf Channel, and so many others. We're going to get into all of that, the rest of the media landscape, with Lightshed Partners co-founder Rich Greenfield when he joins us next.
Let's hope it crashes.
Don't go anywhere. Squawk Box coming right back.
I'm looking forward to it. It's now 6:20. Okay, I think I'll put my chicken tender leftover thing right there, what I had yesterday. Well, I hope the taste of food in heaven is good.
This is happening just moments ago. It's a soccer field near the Brooklyn Detention Center.
And that's Majero, by the way, with the orange,
And he's
what looks
on
like
his
orange
way.
sneakers, if you can see that.
Headed in, yeah.
Brought into that helicopter.
And we saw him
Maduro!
go into an SUV, and here we are at this soccer field in Brooklyn.
Oh, he's already in there?
And, he'd make a little visit over here, no doubt, to the island of Manhattan, and I guess we're talking about an arraignment. This morning we just actually spoke to Jay Clayton, the U.S. Attorney for the Southern District, who was involved, as he said, since 2011 with what you're seeing.
Is it the district has been?
Yeah, district has been.
I'm surprised, maybe, am I wrong to think that, I mean, we're flying him back and forth between Brooklyn and New York rather than just driving in armored vehicles?
No, I would use the full power and assets of the federal government are available here. I would do it with a chopper. Wouldn't you think that's better? Why do you think it's?
You think the bridge is dangerous?
I don't know if the bridge is dangerous, but get them right where you want to be. Yeah, I don't think you need a motorcade with the bureau. I know you'd rather go in a helicopter.
No, I prefer not to go in helicopters. You know.
Well, how about the Hamptons?
I would drive. I would drive.
You can't get there from here. There's only one road.
I would drive. Nonetheless, we're going to keep our eyes on what is a series of remarkable shots this morning as we get ready for what will be a hearing where the former president, or I should say president of Venezuela, will be
I think former's fine.
arraigned of sorts. I'm not sure if it's going to technically be considered an arraignment hearing or not. Nonetheless, though, some other news this morning for you. This is media news, and it relates to us. CNBC parent company Versant is going to be spun off from Comcast as an independent, publicly traded company as of today. Of course, Versant includes CNBC, MSNBC,
Versant,
Golf Channel, USA Network. I'm thinking now of Rotten Tomatoes, Fandango. There's a whole number of fascinating and interesting brands. Sci-Fi Channel, and then rights to things like the WNBA, NASCAR, Premier League, and other things. Joining us right now is Lightshed Partners co-founder Rich Greenfield. We've been talking about this prospect now for close to a year, more than a year.
Takes a while.
Takes a while for these things to happen. The stock is going to come out this morning. I think it's you get one share for every 25 shares that you own in Comcast. How does it trade? How do you value it? How do you think about what's about to happen next?
I think it really comes down to what Mark Lazarus, the CEO of Versant, what the strategy is going to end up being. I think a lot of investors
don't know.
assume, hey, Versant's being spun out from Comcast, and it's going to be combined with something, you know, whether it's Discovery Global, which WB, Warner Brothers Discovery is trying to split off. Like, everyone just sort of assumes that this is just going to be yet another piece or pawn to merge with somebody else. And I don't think that's the plan. And I think it's going to take time for investors to understand that Versant has a different strategy than what we've seen in media. Because the long history of media has been, hey, let's just jam more and more cable networks together. And as we've seen, Andrew, that hasn't really worked for anyone in the sector over the last decade.
So you've heard the strategy. There has been a presentation about it.
Okay.
Are you a fan of it? Do you think it can work? And
as far I'm not feeling it.
if it's a show me situation, how long do you
We'll
think that the management
I'll be
has
back.
to show me?
Well, look, it's going to take time. You know, in the near term, right, there is the obvious headwinds. Cable network subscribers to linear cable networks are declining. And we're seeing more and more smaller bundles. I mean, we're going to see, you know, you're going to see things like YouTube TV launch smaller bundles in 2026, right? So there's going to be more and more pressure, not so much from people leaving the bundle entirely, but from smaller bundles. I think that's going to be a major, major theme of 2026 is this cord shaving. And so that's going to hit not just Versant, that's going to hit every company in the ecosystem. So what Versant needs to do is to show that it can find new ways to grow, new businesses to build, like a Golf Now. How do they take these assets, like the CNBC that we're sitting here, and figure out businesses to leverage that grow within the financial world that are not cable networks, because buying more cable networks or investing more in cable networks is not going to appease investors.
Lazarus has explained it succinctly. I can read it exactly what he said. This is a big profitable portfolio which has been historically managed with different priorities. And we know what those were. Investing to build these brands was simply not a priority.
Correct.
That won't be the case anymore. And we all have worked here and we've seen it. We have funded, our cash flow has funded a lot of ventures for the parent NBC. Peacock, whatever. And not given back to try to
I mean,
bolster.
look, Peacock's now lost what, 11, 12 billion dollars since launch. I don't think most investors believe Peacock is a great long-term business. You know, I think if you were to ask most Comcast investors, they are not fans of Peacock. And so
forget about Peacock. What do you think of
redeploying that capital and thinking about how do you take the cash flow and either return it to shareholders or invest it in businesses.
So that's my question. My question is, there's two pieces to this. What would you like to see them buy when you say invest in? I assume we're talking about acquisitions. If not buying things, building things, would you like to see them, there's going to be a dividend. Would you like to see a bigger dividend? Do you want to see buybacks? Is that helpful to you? Is it not helpful to you? How do you think about that? And then the last piece, which I actually think is actually critical, is there's a sort of view in the industry that the bundle, effectively, or cable subs go to zero. I have a view, which you may disagree with, but that's actually not true. That there actually is a much higher floor than is being described. Where do you land on all of those things?
There's a lot of people out there in the industry that talk about a floor. I don't think there is necessarily a quote-unquote floor. I think that's it's misunderstanding what's actually the problem. Because we're not talking about one set bundle. You know, it used to be everybody had one bundle, had basically every channel. Sure, you could buy HBO or Showtime when Showtime existed, but basically everyone took the same thing. Now we're getting to a world where everyone is taking different bundles, and what's in those bundles are different. And so you may see some bundles, Comcast now has bundles with sports and news channels that don't include other channels. YouTube TV is going to launch the first sports bundle that doesn't include news channels. And so as you start to recompose the bundles, the idea of what the floor is going to be by channel. And so there may be some channels like broadcast networks that have a much higher floor because you need those to have all the sports. When you're thinking about just pure cable networks, whether it be, think about a Bravo, think about a USA, think about an MTV, they may not be in all of those bundles, so the floor will be lower. And so I think from that standpoint, you're going to see a change in how people talk about that floor. They're going to talk about it per network rather than an overall
But Rich,
floor.
what would you like to see Versant build or buy?
I think Versant's got to figure out, we all use, CNBC is on in my office every single day, all day. To Joe's point, it is an incredible asset, right? Everyone has to have CNBC on. But they haven't figured out how to build a digital financial business, right? Like, we don't use CNBC the way we use a Bloomberg terminal. I think figuring out, the Golf Channel and Golf Now is a good example, but how do you actually take the brand and the IP and figure out adjacent businesses that are not linear cable networks that you can build with? Sure, maybe WBD spins off Discovery Global, and maybe there's an opportunity to buy a food network or something that fits very thematically with what Versant is all about. But I think just buying more cable networks to have more scale, that will be a failing strategy for Versant. They have to figure out how they go beyond cable networks and leverage the brands to do more with those brands. And I don't even know I honestly don't know what that is, Becky, because I don't think anyone would realize how big a business Golf Now is for the Golf Channel. But it's taking that idea and going, how do we extend these brands and figure out new things to do with them? That's what's going to make Versant successful or a failure from an investor standpoint. I don't think that happens in the next month or two. I think that's going to take time for Lazarus and your team to prove that to investors.
Just as a side note here is the helicopter. This is President Maduro of Venezuela being led now out of a helicopter that has gone from Brooklyn to Manhattan, where he is going to be presented at a hearing later today. We saw Jay Clayton, who runs the Southern District of New York, on our set this morning. He was headed down there himself. Now we're watching images of a handcuffed President Maduro being led from that helicopter. We imagine to some vehicles which will then move him towards the courthouse.
Apparently that's his wife behind him as well, Maduro.
These are some remarkable images.
Like that EEA guys.
To see all of this going on. Look at this. See, this is as long a perp walk as they get,
That's
and
what it is.
you're getting a lot of video of it. By the way, Rich Greenfield, this is where live television comes in handy. There's not a lot of it left, and I'm sure this will all get clipped up on social media 100 times. But this is when you get to see it live.
Well, it's funny you say that because I'm heading to CES later today, and Amazon's making a big push on the power of live, and it's part of their big presentation at CES this year. And I think it sort of plays into what we've been talking about with Versant. Live still matters for advertisers. I mean, that's why CNBC is as profitable as it is that live still matters a lot. And every advertiser is trying to figure out how they reach viewers in a live TV world.
A huge fall from, it's just humiliating, obviously, for the Maduros at this point. And I don't think that's an accident in terms of the way the optics are being laid out.
We're going to keep our eyes on that military truck as it makes its way towards the courthouse.
It's armored, and I think that's probably why it was a helicopter. You don't want, you want it to be not in a position for anything that could go wrong as, with a minimum of time. Get him right to where he's going.
You are headed
This
to
is
see.
the same place where Luigi Mangione
Yes.
kind of walked through as well. It's that same area for this. And El Chapo, during his trials, they were also worried about the bridge, so they brought him in the helicopter as well.
Yeah.
You're headed to CES.
I am.
To take us down a different road for a second. What are you expecting to hear in the media landscape as it relates to the technology landscape?
Look, we're going to come out with our top 20 for 2026 later today, but like the major topic I think you're going to see, it's going to be two major things: AI and autonomy. Like those are going to be the two topics that everyone is talking about and everyone is thinking about from a media standpoint specifically. And I think this relates to Versant as well. How are we using this technology to reduce the costs? How do we use it to move faster, create content, and importantly, from a driving revenue standpoint, how do we target ads to the right person at the right time?
Okay, final quick question. There's been a lot of debate about Paramount, about what's going to happen with
I've heard about that.
Netflix, and of course Warner Brothers. Do you think that Paramount comes back with a better bid? Do you think that the board says that the Paramount bid is acceptable? What's going to happen here?
The board is clearly not going to come back this week believing that the current $30 bid is acceptable. Will Paramount ultimately bump a little? Probably. I think the issue for Paramount is if they could have bumped a lot, my guess is they would have. They're already 7 times levered on this bid, so they have to come up with more equity. And so can they raise more equity from the Middle East? It's possible, and I think you'll see them raise some additional equity. Is it enough to overcome? I think that's where it gets really challenging because the math on this, once you get past, and we talked about $30 as sort of being where this was going to clear weeks ago.
Where do you value that stuff? I mean, if we talked about the versus Versant.
Joe, it all comes down to does somebody want to buy it? And I think there's clarity.
I'm just saying, just on a valuation basis, Versant's debt is far lower, right?
Sure.
All right, so they're saying $4 is what the Discovery stub is worth. What would that value Versant at with those same metrics? Much higher than where it is right now on a one-issue basis.
Sure,
right?
because I think what you're looking at, the reason why people are excited about, or the reason that I think there's interest in Discovery Global, is not where it would trade on a standalone basis as a pure play company. I think it's because somebody wants to buy it. And you've already seen that in the filings.
So there's a big premium.
There's absolutely, like the board, obviously, I think the Warner Brothers board knows there are buyers for either CNN and or all of Discovery Global, and I think that's why their view of the value of splitting the company. And again, look at what's changing. We just talked about cord cutting and cord shaving. The risk of not splitting, I think, is what is driving the board. The board is worried that if they don't split, they're going to get stuck with the whole company in a worse position in 2027. They really believe that there is far more value in splitting now, and that unless they get paid a ridiculous amount of money, they're going to split the company.
For Versant, does Versant want that split to happen or that company to stay together? Does Versant want to look at the assets that come from that split?
I think Versant would probably love to, if it gets split, you know, I think, look, there's lots of buyers of CNN. I mean, just like CNBC, if you put CNBC up as a standalone basis, like pure play live news, to your point, Andrew, there'd be lots of buyers. I think if you're Versant, sure, you want that because there might be smaller networks. Like, you might be able to find like a food network which has that same sort of idea of vertical.
We should be rooting for Netflix then. See, I'm rooting for Barry Weiss to run CNN. That's my whole.
If you all were sitting here, I think you have to be looking at the split because that will force Discovery Global to be in sort of strategic, you know, sort of rationalized mode, and that might pull out assets that could be really interesting for Versant, as well as many other companies.
Rich Greenfield, thank you for coming.
No, thank you.
Looking forward to
Congrats on your big day.
Thanks.
Pull it out
And
of
happy birthday.
Thank you. Tomorrow. Pull it out of your assets. I like the way you said that.
We got a programming note. Mark Lazarus, the CEO of Versant, is going to be our special guest right here at 8:30 a.m. Eastern Time. We'll talk about all of these issues and so much more.
A young, dynamic leader. I mean, this is really amazing. Coming up, Venezuela's interim leadership, Nicolas Maduro, a longtime president. Delcy Rodriguez is in charge for now. She's like cut from the same cloth. It's bizarre. We're going to talk to a former top Chevron executive that ran the oil giant's Latin American business about Rodriguez and how the country can ramp up production. Spark Box returns in a moment. welcome back to Squawk Box. We've been following Maduro's travel to New York City. We're getting a better idea of everything that has happened at this point in the truck. Actually, the armored vehicle actually backed into the courthouse for now in Manhattan after a helicopter ride from a soccer field in Brooklyn. And we would imagine now that Mr. and Mrs. Maduro are probably exiting the armored vehicle and headed into the court for what we assume is an arraignment. Meanwhile, we're getting a better picture of the woman now running Venezuela from the former president of Chevron, Latin American, Ali Mashuri, now runs Amos Global Energy. He joins us live. He can also explain what has to happen for Venezuela to ramp up oil production. It's hard, and it's welcome, Ali. Thanks for joining us this morning to tell us what you know. She seemed, I mentioned, it's cut from the same cloth. I mean, she is a socialist, and I mean, her brother was a top strategist for Maduro, so it doesn't seem like much of a difference, but you think she's got the best chance of being able to stay in power at this point in Venezuela?
Well, good morning and Happy New Year to everyone. You know, you got to consider that what do we need in Venezuela right now? You need someone that understands the current system, be able to communicate with the big institution, which number one is military, the other one is PDVSA. Looking at that, you got to find that individual, and you got to look for that individual within the system. Because Venezuela, from the political aspect of it, has been divided. The one side was Maduro's system, the other one was opposition. Any radical changes to come to the system, it would definitely create insecurity and huge gap in the political and social system. I think we experienced that one in Iraq and Afghanistan. I think current administration, President Trump administration, clearly understand the results of that and trying to create an environment that the country can be administered quickly and securely.
Ali, it's been pointed out, it's well documented, how really poorly the very rich abundance of oil, how that's been handled in recent years in Venezuela, and you can blame it on socialism, blame it on whatever you want. She ran the state-owned oil and gas company, PDVDA. Why would we think a better outcome was likely from where we are? Because it's obviously it's a tragedy for Venezuela and for the world what has happened with production down there.
You're absolutely right. I mean, Venezuela is rich in oil and gas. Got the largest reserve from the oil side, and I think got the largest reserve on the gas side, got mineral and so forth. The mismanagement of the natural resources has been a big issue in Venezuela. It goes back a couple of decades before, how it was managed, the role that international company played, and so forth. Again, it goes back in, at this point, what do you need to have a continuity in this system to be able to understand, to increase the production, get the production level to this, to help the economy of the country? You know, it's a very complex system, and she understands it. I'm not saying she's going to be the best person to run PDVSA, but she understands it. She can bring a kind of calmness into the system. Of course, she needs 110% support from the United States and also influence from the United States. Therefore, our expectation is that we're going to see technology, services, investment flow into the Venezuela and be able to establish what you're asking for. But it's going to take a while. You're going to see an effective, efficient PDVSA in the future.
Ali, that was my question. President Trump says that the major U.S. oil companies are prepared to step in and, I guess, potentially spend billions of dollars. Is that what you anticipate is happening? We're watching Chevron shares today. They're up by 6%, ConocoPhillips up by 5.5%, and ExxonMobil up by about 3%. Do you think the big majors are willing to put their own money, billions of dollars, because I've heard it could take $10 billion a year to try and start building back Venezuela's infrastructure, oil infrastructure, or do you anticipate that that money will come from other investors?
Excellent question. I personally believe the companies that currently are in Venezuela are the one gonna very much bring the investment in. Eni, Repsol, Chevron, those are the major companies that they are there. They'll be able to kind of increase their investment because they got infrastructure, they got people, they know the system, they can move it. To bring a new company in, especially you're dealing in the oil price environment, that is relatively soft. I mean, we are not talking about $80 oil price that companies are focusing on spending more money. Major company is spending more money. They are looking at capital efficiency, they are looking at cost cutting and so forth. And again, it's come back into the competitiveness of the investment. They are looking at Permian versus Venezuela. They are looking at other places versus Venezuela. Therefore, my personal view is any newcomer is going to take a while to come in, establish the infrastructure, the people and so forth, and start investing money. You got to rely on the existing company in Venezuela. But I believe the first flow of investment should come from the public and private investors. And my current company, we are trying to raise $2 billion investment, which we think we should, and we can immediately deploy that in Venezuela and be able to participate in fixing the infrastructure, increasing the production. To answer your question, my personal belief is the first tranche of investment should come from the private capital.
I mean, we don't want to run it. Obviously, we're already hearing, you know, the notion that the United States is going to operate it. That can't happen. Rubio's walking that back already. Is she the best person at this point? You point out she could deal with investors and she knows how to balance that with advocating for the poor. I'm not sure the poor benefited with the Maduro regime, Ali, obviously, but she could. You know, I don't know if it's spots or stripes or whatever. She could be pragmatic and actually work with President Trump.
I know her for many years, yes. You know, when you're talking about the socialism and Chavista and so forth, there is a degree of that. There is a radical side all the way to the kind of believing in the capitalism in some extent.
Well, we have it here now, Ali. We're dealing with the same... Surprisingly, we got the same issues that are back in vogue in this country.
Well, you know, you got to look at it. What other choices do we have? I'm not really campaigning for her or anything. I think that's a decision people of Venezuela and U.S. government got to make. Who is the best?
Ali, you think the opposition leader doesn't have the support of the military and would be more likely to have some type of military takeover or coup? You think she has the backing of the military?
Relatively, she has more backing of military than opposition. Remember, as you pointed out, the political side is divided, and opposition has not created a strong relationship with the military. Otherwise, the situation would have been different. She understands the military system. Maybe she doesn't have the 100% support. But again, I'll go back to the point of whoever is going to administrate the transition need to understand the complexity of the system in Venezuelan government. Even with the military, there are different divisions. You got to know who you got to talk to and so forth.
Yeah.
Therefore, my point in here is we've gone through that path. If you bring in a grassroots, bottoms-up type of changes, insecurity in Latin America, especially in Venezuela, social and personal, become immediately a critical part of the situation in the country. That means kidnapping, robbery, and so forth, and that can happen very quickly.
Ali, if they got to peak production, and I don't know how long that would take or how it would happen, what would that do to the supply for the globe, and where would oil prices be?
Well, We don't call it the work on this. We've been working on Venezuela. We call it the jumpstart the economy of Venezuela, post-sanction. At $65 oil price, if the production increased to 1.5 million, the GDP of Venezuela is going to be around $200 billion. Venezuela doesn't need a long-term bailout. It got enough natural resources that they'd be able to even pay the debt and be able to create a great economy. To do that, get to that level of production, you need somewhere around $5 to $7 billion. You need to refurbish the infrastructure. You need to add more production to drilling of existing fields and so forth. Therefore, I'm very optimistic. It doesn't take very long to get the economy of Venezuela back on track. The only problem is, the only silver bullet to get that economy back on is the oil production. The other industry are so gone down that you cannot really help the economy.
Okay, we're going to end it there. Ali, we appreciate you coming on this morning, and Ali, it's what you know. Thanks.
My pleasure. Have a great day.
When we come back, we'll talk about what's next for interest rates, inflation, and the economy. Minneapolis Fed President Neel Kashkari will be our special guest. Squawk Box will be right back.
I'm going to get back to check on the markets right now. Mike Santoli joins us from the New York Stock Exchange this morning. Mike.
Yes, Andrew, after a little bit of a soft finish to 2025, market is perking up a little bit this morning. The S&P 500 riding the bounce in some chip shares in particular, as well as those energy stocks, to perhaps, after the open, make a run again at what's been a ceiling for this market around the 6,900 6,900 level. This is a 6-month chart. It shows you the last 2+ months, you've been kind of in this trading range, churning around these levels. Goes back to late October when we were basically in the middle of a very good earnings reporting season. What's been happening under the surface has been pretty instructive, though. Take a look here at the split among some sectors. Since that point, in late October, when the S&P was at the current level, just about around 6,900, and what you see is financials and transports, strong outperformance there. So there's been this migration toward the more economically sensitive parts of this market. It's been happening since that period. Tech has suffered. Now, the question is whether this is really a leadership shift or it was just this kind of interim period where the market was able to rebalance itself for a while. And today's action would suggest that tech's going to have another run at it. And so we'll see if that, in fact, has been the case where it was just resting and not stalling out. Want to also take a look at a couple of big tech bellwethers. 2 out of the 7 of the Mag 7, Microsoft and Apple, have now been underperforming the S&P 500 on a 1-year basis. And Microsoft in particular has had this, this kind of point of weakness kind of rolled over from these levels now. All these companies, they're obviously right in the mix, especially Microsoft with OpenAI and all the AI excitement, except they're going to be costing them free cash flow. These stocks got kind of expensive, up around 30 times earnings. So maybe watch to see if, again, this has just been a sort of a kind of a rebalancing period, or in fact, if we are seeing some of those other names take the fore. A lot of it is right now just in the memory chips as opposed to the platforms, the cloud platforms, guys.
Okay. Mike, thank you for that. We've got a lot to grapple with this morning.
All right, it is almost 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, we are watching the stock futures, and they've been higher through the morning. It comes after the capture of Venezuela's President Nicolas Maduro. He will be making his first court appearance later today in New York City. Earlier this morning, Maduro and his wife were transported to the New York Southern District Court through a helicopter from Brooklyn. CNBC parent company Versant will begin trading on the NASDAQ today under the ticker symbol VSNT. It was spun off from Comcast as an independent, publicly traded company, and we will be speaking to Versant CEO Mark Lazarus. That's coming just a little later this hour. And Novo Nordisk will start selling the pill version of its Wegovy weight loss drug to self-paying patients in the United States for $149 a month starting today. Larger doses will sell for $299 a month. The FDA approved that pill last month. Now to our first newsmaker of the hour, Minneapolis Fed President Neil Kashkari. Our own Steve Leisman is joining us on set for this conversation as well. But Neil, first of all, thank you for coming into set today. It's great to see you.
Great to see you. Congratulations on your spinoff.
Thank you very much. Everybody's waiting to see what the Fed does this year, what happens, and I know you've been pretty clear that it's going to be a data-dependent situation. You don't think the Fed should be automatically making moves any direction or another. So let's get right to what you think about, first, the jobs market, and second, inflation. Where do you see things right now?
I mean, the job market is clearly cooling. There's no question about that. We see this in the national statistics. The unemployment rate is up now to around 4.6%. I think that's a real, there's a lot of questions on some of the data. I think the unemployment rate is pretty clean at 4.6%. When I talk to businesses in my region, they also say they're not hiring very much. So I think that that's a clear signal that the labor market is cooling. At the same time, inflation is still too high. I think the most recent inflation data, I don't take that seriously because there's some issues with the data collection with the shutdown. I think inflation is still too high. And the big question in my mind is how tight is monetary policy? Over the last couple of years, we kept thinking the economy is going to slow down, and the economy has proven to be far more resilient than I had expected. That tells me, well, monetary policy must not be putting that much downward pressure on the economy. And so my guess is we're pretty close to neutral right now, and we just need to get more data to see which is the bigger force. Is it inflation or is it the labor market? And then we can move from a neutral stance, whatever direction is necessary.
But your gut tells you right now that the labor market is maybe the bigger issue to wrestle with at this
Probably.
point?
I don't think we're going to be surprised that inflation ends up being much higher than we are seeing right now. I think the inflation risk is one of persistence, that these tariff effects take multiple years to work their way all the way through the system. Whereas I do think there's a risk that the unemployment rate could pop from here.
Well, that's really weird then. Neil, because we've been above 2%, 50% above 2% for 2 years then. The Fed has totally missed that target, and we've just cut 4 or 5 times. So that makes no sense. That then you move the goalpost to 3%.
No, I don't think we have moved the goalposts at all. I think the debate that we've been having at the committee is, we know that tariffs affect goods import prices. Do you count that as a one-time effect, or do you think that leads to something more persistent? That's the debate that we've been having.
Right, but the persistent inflation hasn't really had anything to do. It was already persistent long before the tariffs.
Because of the COVID effects. I agree with you, Joe. I mean, that's why it's not, some people say it's so obvious we should be ignoring tariff inflation, inflation's on its way back down, and just be cutting dramatically to support the labor market. I'm not there either.
But if 2 was really your target, you wouldn't have cut at all.
Well, we have 2 sides of our mandate, right? Inflation is slowly trending down. The unemployment rate has gone from 3.6 to 4.6. So we're moving in the wrong direction on the labor market. We're slowly moving in the right direction.
I'm just devil's advocate. I wish rates were 0. I wish you could pay me to take oil, and I wish the bank would pay me the mortgage for my house. But
doesn't work that way in a capitalist system.
It depends, as you now know. Capitalism, yeah, it all depends. No, I'm just kidding though, but because it almost looks like a critic of the, and we're talking about critics this morning, we're not really being ourselves, but a critic would say that the Fed has moved the goalpost.
No, I hear you. I mean, it's been 5 years now.
But I don't say.
No, but it's been 4 or 5 years with substantially elevated inflation that we should all be alarmed about.
But you blamed it on the pandemic, not on all the stimulus.
Well, I think it's a combination of a bunch of factors. I mean, when I say pandemic, it's pandemic, it's stimulus, it's Russia invading Ukraine, all of these pushed in one direction, which is prices up.
Neil, can you walk us through your outlook for next year? Does inflation come down slowly? What happens to the unemployment rate, and what do you do with growth?
Yeah, well, growth is the one that we talked about a moment ago, which just keeps surprising me how resilient growth is. And my expectation is the economy will probably continue doing what it's been doing, which is pretty resilient, pretty decent growth. Now, in terms of the inflation components, now we have to go under the hood. I've got a lot of confidence that housing services inflation is coming down. We've modeled out the mechanism from new rent growth all the way through CPI, through PCE for inflation. So housing services inflation, I've got confidence, should continue to come down. The non-housing services, it should be tied to wages, and wage growth is slowly trending down. So it's going to be slow, is my bottom line there. The tariff-induced goods inflation, are we going to see a repricing in January of this year? A lot of businesses have said there could be a repricing this year as they reset prices. That's something that we're going to need to watch. On the labor market, my expectation is continued low hiring, but low firing. A lot of businesses that I talk to say that they are using AI, big companies are using AI. It is affecting their hiring plans as they're trying to deploy AI. So my guess is unemployment rate moving more or less sideways, inflation slowly trending down.
So that's the policy side. What about the makeup of the committee? We were talking on Friday about whether or not Fed Chair Jay Powell stays on. What's your expectation?
Oh, I have no idea what he stays on. I think he's done a wonderful job as chair. None of us are perfect. I think he's not perfect. I'm not perfect. As a committee, we're not perfect. But overall, I think he's done an excellent job. And I would love to see him remain as a colleague for as long as he likes.
You would. One of the concerns about the makeup of the Fed with appointees from the president is that they would have the power to fire presidents. Are you concerned? You're the president of the presidents, right? You're the head of the president's committee. Is that what you call it?
Yeah, the conference of chairs.
The conference of chairs, okay. Are you concerned that presidents could be fired individually for lack of cause?
I'm not concerned about that. I think that the Federal Reserve Act is built on a foundation of 12 independent Federal Reserve banks. We each serve, all the presidents serve at the pleasure of our local boards of directors. The local boards of directors have the power to oversee me, to remove me. That's where the power lies, as opposed to in Washington.
You're on the board of the Economic Club of Minnesota. I hear Secretary Vestman's going to be speaking. Is this a real economic club or just a facade? Where
Why would it be a facade?
You just get big grants for the club and nothing actually. It's in Minnesota, right? So you see where this is going.
I see where this is going.
I see where this is going. Do you do anything there? If someone goes there and tries to see if anyone's inside, are they going to say?
It's a very lean operation. We have 2 employees.
Are you excited that you have 2 employees? Is it a Leering Center? Are you excited about
I learned about it last week. The Secretary Besson wanted to come address the club, and we're going to be hosting him on Thursday.
That's very good.
But one of the things Secretary Besson has complained about is this notion of Fed bank presidents being from outside of their regions. Is that a real reason for concern?
You know, the Federal Reserve Act created the 12 reserve banks, specifies that the reserve banks each have boards of directors of local leaders, and those local leaders are charged with selecting the president. So I came from, 10 of the 12 of us have come from outside our immediate district.
So he's right.
Well, he's right that we've come from outside of our districts. I don't agree that we don't represent our districts well. You know, I've been in Minnesota now for 10 years. I'm very well known across the region by business leaders and by civic and elected leaders. And I think that those judgments are best left to the local districts to decide who should lead their banks.
Yeah, let's go back to what you're hearing from your local businesses. You said big companies are slowing down their hiring because they're trying to figure out how to implement AI. What do you hear from smaller companies?
Not AI. AI is really a big company story, at least what I'm hearing. Small companies are feeling a lot of pressure, even from the big companies. The big companies that I talk to that have retail exposure have told me that they see their lower income and their middle class consumers acting as though it's the recession. Like they're trading down, where they're shopping, they're penny pinching, and that gives them real concern about, hey, these folks are feeling real pressure. And small businesses, a lot of them do serve families and consumers in retail. So I think that they're feeling that pressure as well. You know, we've talked all year about the K-shaped economy. That seems to still be ringing true in our region.
The Fed has a tool, a very blunt tool to try and combat that, that's lower rates. What it also happens to do, along with helping people who are trying to get credit card payments or house mortgages or anything along those lines, is inflate assets, stock market assets, equities. And those assets, while they're pretty broadly held by a majority of Americans, do tend to help the wealthiest the most. Are you okay with using that tool to blunt what's happening to the lower demographics and not worry about what happens on the upper end with those assets?
You know, it's a very fair point you're raising. It's something that I do think about. It's even more complicated than I think what you just said, which is if you think about the lower income middle class family, why are they feeling so much economic anxiety? It's because of inflation. Most of them still have their jobs. So if we say, well, we want to cut rates to help lower income families, and that might help their job prospects, but if it pushes up inflation or keeps inflation high for longer, is that actually helping them or not? So it's an intellectual question. Can monetary policy help boost real wages? It's a tricky dynamic.
There's a possibility that the tariff story gets re-scrambled in the next couple weeks when we hear from the Supreme Court. I don't think we know what we're going to hear, but there's a possibility that they either overturn them or say prospectively they can't be done this way. Then you're going to see, I imagine, the administration try to pursue them in a different fashion. I know you can't make judgments about what's going to happen in the future, but part of your job is to make judgments about what happens in the future. So how do you think about that?
I think what you said I agree with, which is it seems like the administration has said they will use other mechanisms to try to get to the same place. I feel like right now we're in a good trajectory where we're approaching some type of equilibrium on the tariff and trade front, which is what businesses are asking for. I think the re-scrambling will be unfortunate because it will cause a lot of uncertainty about which tariffs are sticking and which ones aren't. So I would be surprised if it leads to a new trade war, but I do think it could lead to a burst of uncertainty, which is going to be a damper on the economy.
You know, that last nominal GDP number was like unheard of. What about 2026? Let's think about some of the tailwinds, whether it's regulatory or things in the big beautiful bill that are coming through for businesses or tax relief.
Can I interpret, Joe? Your nominal is your real plus the inflation, and it was like 8%, right?
8%. That's unsustainable.
It's a big number.
It's a big number.
Is it not? What do you think real GDP can be for 2026? What would blow you away and what would not? Could it be 2%? Could it be 5%?
2%, sure. It could easily be 2%. I'd be very surprised.
You negative nabob of negativity. So could it be 4%? Could it be 3?
We could be surprised at 3. You know, the part of the things you just said that are very hard to analyze and to quantify.
AI.
Well, AI, but deregulation.
Deregulation.
A lot of talk about deregulation. A lot of businesses are excited about it. How do you quantify it? How much deregulation?
And could it be good, and could inflation do maybe not? Could it stay where it is? I mean, it could be in a pretty good spot.
A lot of people make comparisons to the mid-90s in terms of the productivity environment.
Remember? Yeah.
And we hope we're in a high productivity environment going forward. The mid-90s, a lot of productivity probably means a lot of investment, probably means high rates. So in the mid-90s, we had a 5% federal funds rate, and that was not considered to be a very high federal funds rate. And so, you know, we could be in a strong growth environment, but rates may not be going down from here.
Neil, you cut your chops where I got to know you in government, in the Treasury in 2006, which was a great time to come in because it led directly to 2008.
It was good for a while.
It was good for a while. There was a run there, just a short while. Right now, when you look around the financial landscape, are there things that concern you, either like '06 or maybe more importantly, different from the '08 situation that are high on your radar in terms of concern about risk?
Well, I mean, a better place that we are is I do think American households are in much better fiscal position than they were 20 years ago. Much less levered than they were. More housing wealth, for example. Even though home prices are ticking lower. So I think that they're in a better, stronger financial position. And then there's been a ton of attention about private credit. You know, we'll have to see. They're generally much less levered than banks. So even if there are issues in the private credit sector, I don't see that leading to a '08 type crisis.
I got 2 more questions, guys. The AI investment.
Yes.
Is that something that if it doesn't work out is a risk you have to be careful of?
I mean, there's no question that there's some misinvestment or malinvestment that's going on, but there are too many anecdotes of businesses using this and actually seeing real productivity gains. Businesses that I talked to that 2 years ago were skeptical are saying, no, we're actually using it now.
Now, finally, I know you don't have an international brief, but what happened with Venezuela over the weekend? How does something like that come onto your radar in terms of your outlook for the economy and policy?
Mostly through oil prices. You know, when Russia invaded Ukraine, it sent a commodity shock wave all around the world.
Right.
It didn't happen with Hamas attacking Israel. It has not happened now with the U.S. in Venezuela. But that's the mechanism that it would directly affect the U.S. economy.
Do you see it? You don't see it?
I don't see it so far.
You embarrassed to be from Minnesota at this point?
Not at all. Proud to be from Minnesota.
All right, you'll get your act together.
You're all invited to come visit.
Yeah?
Come visit us.
Thank you.
Neil Kashkari.
In February.
Thank you very much for joining us today. We appreciate it. Steve Leisman, thank you.
Okay, coming up a lot more this morning on the latest of the capture of Venezuela's leader and his wife. This was just a short time ago, both boarding a helicopter in Brooklyn on their way to the U.S. Southern District Courthouse in Manhattan. Ahead of that, we already spoke with the head of the Southern District, Jake Clayton, who was at our table this morning. We're going to see his team and this hearing a little bit later today. Meantime, the futures at this hour, before we head to a break, Dow off now about 26 points. NASDAQ looking open about 176 points higher. The S&P 500 up about 19 points higher. Squawk Box returning after this.
couple of morning calls. Goldman Sachs upgrading Coinbase to buy from neutral, citing a shift towards growth in its derivatives business and its crypto infrastructure and new growth products like tokenization and prediction markets. Goldman's price target, $303. Wells Fargo adding Disney, Roku, and Coca-Cola to its first quarter tactical ideas list. For Disney, the analysts are expecting strong theme park performance and easing concerns about a slowdown in experiences. And for Roku, Wells is expecting strong same-store sales growth for the first half of 2026, and it's the same for Coca-Cola, the firm looking for strong sales growth and improved market share. Oh, up next, the arraignment of Venezuela's Nicolas Maduro is expected. That's around noon. Details when we return. And then CNBC parent, Person Media, set to begin trading on the NASDAQ today. Person CEO Mark Lazarus is going to join us. Squawk Box will be right back.
Welcome back to Squawk Box. Take a look at the futures right now. About 49 points off on the Dow. NASDAQ, though, about 140 points higher. The S&P 500 up about 13.5 points. Just 2 days after the U.S. captured Venezuela's Nicolas Maduro, along with his wife, both expected to make their first court appearance in New York City later today. Contessa Brewer joins us now from outside of the courthouse. Good morning.
Good morning, Andrew. We're in Lower Manhattan, and the countdown is on to Nicolas Maduro's initial public appearance right behind me here in federal court. We're expecting him to be arraigned at noon, criminally charged, prosecutors say, for an immense drug trafficking and corruption scheme that made Maduro's power grab possible. The Venezuelan president is facing conspiracy charges related to narco-terrorism and importing cocaine, as well as charges related to possessing machine guns and destructive devices. Maduro's wife, Celia, and his son are also facing charges, as is the Venezuelan Minister of Interior Justice and Peace. The former minister of the same department and the alleged leader of TDA, which is a transnational criminal organization, is also facing charges in this indictment. Prosecutors say TDA has a presence in New York and is involved in drug trafficking and human smuggling. And prosecutors say the Maduros and the others worked with FARC, one of the largest cocaine producers in the world. The ELN, a Colombian terrorism group, the Sinaloa cartel based in Mexico, headed by the notorious El Chapo, and the Zetas, another transnational drug group based in Mexico. Now, Saturday morning, we saw that U.S. soldiers had captured Maduro, but here you're seeing him in custody in New York, being brought inside the Brooklyn courthouse to face, inside the Brooklyn Detention Center to face charges. And this morning, he's already inside federal court. We saw that video, a massive military presence where they were bringing him. He had arrived Saturday evening at Stewart Air National Guard Base. That's about an hour north of New York City, where then they were booked in Brooklyn. And today, the Maduros arraignment will happen before Judge Alvin Hellerstein. Why the Southern District of New York? This is the office that started building global cases against international cartels in the early 2000s. And this is where Maduro and his co-conspirators were first indicted. There have been 3 indictments. That investigation dates back to 2011. There you're seeing the military vehicle containing Nicolas Maduro backing into the federal courthouse, this back entrance. And by the way, blocks and blocks around this federal courthouse are blocked off now because of safety concerns. Massive police presence down here in Lower Manhattan, guys.
So one of the big questions, of course, is what is the precedence, and what are we going to hear both from the prosecutors and from his defense attorneys?
Yeah, well, for one thing, you heard Jay Clayton tell you this morning on Squawk Box, they don't know who is defending right now Nicolas Maduro, but Honduran President Juan Orlando Hernandez was arrested in his country in 2022, extradited to the U.S., tried right here in the Southern District of New York, and sentenced to 45 years for drugs and money laundering. A lot of experts have pointed out similar charges to what Maduro is facing. President Trump pardoned Hernandez in November. And then, of course, you had Panama's president, Manuel Noriega, extradited to Miami in 1990 to face drug trafficking charges as well. And Judge Alvin Hellerstein, who's overseeing the hearing this morning, has also overseen consolidated tort cases by 9/11 first responders and property owners there. And, of course, he oversaw music mogul Harvey Weinstein's civil case, so some pretty notable cases here. The line behind me that you're seeing right now, by the way, of people waiting to get into the courthouse, it's been an unusual shift where they have been told, even people who waited overnight in these lines, that they are only allowing credentialed media into the courtroom today, not just onlookers and the members of the general public.
Okay. Contessa Brewer, I'm sure we'll be talking to you a lot later today. Thank you for that. For more on what Maduro's capture could mean, I want to bring in Giselle Crusoe Cabrera, CEO of MCC Global Enterprises, a CNBC contributor. Good morning to you. We're all trying to figure out what comes next, what the sort of larger global implications are, and what the implications are for business.
Yeah, well, Andrew, I mean, when the Armada build-up occurred in the Caribbean, a lot of the questions were, okay, if you take out Maduro, what comes the day after? And now we know. The administration made a decision that they were not going to help usher in the members of the opposition who are living in exile, who in theory have a legitimate right to leave because they won an election, and instead they chose a path which the administration clearly thinks is far more stable, choosing to work with Delcy Rodriguez, the former vice president, now currently the leader of Venezuela, in an effort to have a smooth transition that they think will lead to more oil production, which would help the country get back on its feet. I can tell you that was an extreme disappointment to members of the opposition who were hopeful that when this moment came, it would also be their moment. And Maria Corina Machado, who won the Nobel Prize for her efforts to restore democracy to Venezuela, not getting the nod is certainly very painful for a lot of them. But in the end, the administration was concerned about stability on the ground the day after.
Michelle, there's sort of two, though, big overarching views of this. The upside view, I think, is that this could give us great access to oil and other minerals. Therefore, it provides leverage in terms of how we think about Iran, how we think about China, how we think about Russia. And that's assuming everything works out on the Venezuela side. There's the critical view, which is that this shifts our standing in the world, that it opens up an opportunity for China to take Taiwan, or Russia to take Ukraine. I mean, how do you think about sort of these bigger geopolitical questions?
Yeah, I've heard that a lot about China and Russia, and does this give them carte blanche to do what they want in their spheres of influence in their regions of the world? Conceptually, I suppose it does, but war is hard. Russia learned that. The invasion of Ukraine, Putin thought that was going to be easy. It has not turned out to be easy. It's actually turned out to be very, very difficult. And then even look at this operation. We used 150 aircraft for 2 individuals to be extradited in under 3 hours. It was an incredibly difficult operation. I think that's got to give a lot of would-be invaders pause about just what does it take to do things, as you mentioned. To take Taiwan is extremely difficult.
Do you think is it fair to even conflate what we're doing with Maduro to taking by force Taiwan or attacking Ukraine and trying to make it part of it? Is it in the same, not even the same ballpark? Is it even in the same sport? I don't need an answer. I don't need an answer.
It doesn't matter, Joe, because they'll use it.
I know. You're going to hear
That's what they'll
it. You're going to hear it anyway. Let me just ask you this. The opposition leader curried favor with Trump, saying you should have won the Nobel Prize. I mean, I don't know whether that was in anticipation of this inevitability or what it was, but does she not have the military's backing, or that was the perception? And why would the military, or if it was a junta or something like that, why would they back someone whose brother used to be part of the problem and a key advisor to Maduro? I don't understand why that is.
You're talking about the woman
in that country. Why is Delcy preferable for the administration?
So, Secretary of State Marco Rubio was pressed by Kristen Welker yesterday on Meet the Press, and he said, I admire Machado greatly. I've known her for a very long time, but the fact of the matter is she and almost all the members of the opposition are not in the country at the moment, and it makes it very difficult for them to lead. And what kind of relationship would she have with the military, which is extremely important. Now, why would the military stick with Delcy Rodriguez? They're stuck between a rock and a hard place. The quarantine is still on with the boats. That means they can't sell oil, so they can't have money. And you've already read, Reuters is reporting that the Venezuelan oil company, PDVSA, has told producers in the country, slow it down because we're running out of storage space. So they don't have much of a choice. And if they don't cooperate, they've seen what the administration can do. I think that is why Delcy Rodriguez, I watched her live on Venezuelan state television when she made the first announcement that was very, very indignant and defiant. And then late yesterday, she put out a statement, didn't do it on camera, that was actually much more conciliatory about working with the government. I don't know what choice they have.
Michelle, I wanted to go to the upside scenario. We were talking about the downside scenario, or at least some of the critical comments. But arguably, and this is where maybe Joe, you think it's conflating the issue, but if in fact we were to get control or have much better access to Venezuela, how it shifts the leverage and balance with our relationship with either China, or if whether we want to attack Iran, or how we want to deal with Russia in the future, especially if you can, look, if you can undermine or lower the price of oil, that changes a huge dynamic. You talk about, by the way, annexing Canada. I say that laughingly, but not really.
No, we were going to trade Minnesota for Western Canada.
Michelle?
Right, Michelle? That makes sense.
Look, I think getting Venezuelan oil production increased would be a key way to help the Venezuelan economy and help 8 million people who have left the country eventually return to the country, reduce migration. That's one of the goals of the administration. And the administration's been very, very clear. They once again believe the Monroe Doctrine is back in force, and they don't want Venezuela harboring Russia, China, and Iran. They've made that very clear.
But does any, even on the Democrats, do any Democrats really think we're trying to take over Venezuela?
I mean, the president did bring up the oil. That's our oil. We need our oil. I mean, he said it over and over again, right?
Run it to get, because it's been so mismanaged. And this is the Western Hemisphere. We are a positive influence for the Western Hemisphere.
How long do we stay? What does it mean?
I understand. He said, I think we're well intentioned. We're not communists trying to take over Taiwan or Ukraine.
Did I hear somebody ask, how long do we stay? See, that's what's very interesting is we're not there, right? They're using complete coercion to try to co-opt them so we don't have this post-Saddam Iraq situation. Let's see if it works.
Machado only left weeks ago. I understand that it'd be hard to say she could manage from where she is, but it'd be pretty easy to put her back.
You may need boots on the ground to do that.
Michelle, did you see this report
that's the concern.
on Machado in the Washington Post? The Washington Post says that he effectively the president soured on her because of her decision to accept the Nobel Peace Prize last year. And at one point, there was going to be an effort to turn it over to him.
Yeah, my understanding is that, that may have upset the president, but the bigger picture is, were they in a position to lead the country in a stable way?
Right, the military. It said it straight up.
Right.
That they.
Martin Rubio said over and over again yesterday, this is not Iraq, this is not the Middle East. However, post-Saddam Iraq looms large in the minds of the American people, and they have to consider that.
Michelle, I want to thank you. Good to see you.
Pleasure. See you later.
Up next, CNBC parent company Versant Media is set to start trading today on the NASDAQ. Versant CEO Mark Lazarus will join us next. First, though, as we head to a break, take a look at Bitcoin this morning. It's up by about 1.5%, $92,669. Squawk Box will be right back.
NBC parent company Versant will start trading as an independent company on the NASDAQ today. And joining us now, Versant CEO Mark Lazarus. We're going through with this.
We are going through with this.
It's going to happen.
Here we go. It's been a year in the making.
9:30.
Welcome. Thanks for being here, and Happy New Year. Everything else. I quoted you earlier. I'm going to quote you again. This is a big, profitable portfolio, which has been historically managed with different priorities. Investing to build the brands of Versant was simply not a priority. That won't be the case anymore. Is that I put that in a nutshell as the corporate mission of what
That is exactly right. And you know, as part of Comcast and NBCU, we had other priorities as a company, and I was part of the decision making. We made different decisions because we had a different company and a different strategy, and now bringing these into their own company, we're going to be able to invest into them. We'll invest organically, and we're doing that, and I think you guys are seeing some of what we're doing. And the strategy of these verticals, and I saw that you had Rich on earlier, and you know, I think he's listening to what we're saying. Hopefully the market is listening to what we're saying, that vertical scale is going to be a way for us to differentiate and to diversify our business, to be not so beholden to pay TV. While that's still a big profitable part for us, it's not going to be the end game.
So as part of a large company, there were times where there were parts of NBC that could have used investment, and for lack of a better term, we provided some cash flow for other ventures that we could have used for ourselves that we didn't. You can say that actually did happen?
Well, it was part of this strategic imperative to do other things. Peacock, very important for NBCU. Investing in the theme parks, very important for NBCU. But, listen, these are big profitable businesses. You guys generate a very nice profitable business. It's an important, the audience that we speak to and that hopefully we're speaking to now is amazing.
If we have investment.
Well, how we're going to act is you're going to be able to look at where are the best ideas in this portfolio, not in a much larger portfolio, but as importantly, everything we do is going to matter, and every little piece is, there's going to be a much more of a magnifying glass on what we do.
Speak to this. There is sort of like a conventional wisdom on the street that, and I think Rich Greenfield sort of articulated it, that ultimately we're going to be either merged into some other business or we're going to try to buy a similar linear business. You've tried to dispel people of that. What are the kinds of things that you would want to buy, acquire, or do?
Well, let's start with the organic investments. We're going to expand what we're doing digitally in places where we maybe have just tiptoed in, and that's really CNBC. There's a much broader play with the retail investor that we can utilize the brand, the reputation of our brand, the credibility of CNBC and the talent that is here on how we're going to achieve how we can help retail investors understand their portfolio with charts and graphs, using maybe AI stock recommendations. There's going to be a lot of opportunity in the organic investment. For MS Now, there's never been a digital footprint really other than a text-based digital footprint, no video strategy. That was a decision that NBC News Group made. We're going to make a different decision and invest in a D2C product for MS Now for a very large audience that has a real passion around what MS says to them. And that'll go down the line. We've made 2 small acquisitions. We're in the process of finalizing those already. Free TV networks to diversify our ad base away from pay TV into free over-the-air television, and a company called Indie Cinema, which is a software business that will help power what we do globally with Fandango in the movie ticketing business. So investing in the verticals as opposed to just horizontally investing in more linear scale. The thing, and you guys are a big part of this, our portfolio is 62% live news and sports. Rich, earlier you guys talked about the bundle and different types of bundles and cord shaving. Live news and sports is a big part of that. And we have a really strong position with CNBC, MS Now, USA Network with its large sports portfolio, and Golf Channel to play in that live news and sports area. And that's an important part. To go horizontally and dilute that significantly, may be a more difficult road for us, so we think vertical is the way to go.
So was Rich Greenfield wrong when he suggested that you might be interested in some piece of Warner Brothers Discovery if they were to spin off any of those pieces?
If there were pieces of any portfolio that we could say fit into our desire to build around a linear service and grow them vertically and invest in a genre, he mentioned food. That's an interesting one. But because it's a business that's much broader and it's a marketplace that's just broader than a media play. And that might be interesting, but that's not our priority right now. Our priority is the 4 vertical markets that we are already in and that we have found some success. And specifically, I use golf as our model home because Golf Channel is a big important brand, and we used that to then launch other businesses like Golf Now, our tee time business, like Golf Pass, our video subscription business where we're partners with Rory McIlroy, and an underlying software business that connects us with more golf courses than we even create tee times for.
Is it fair to look at, I'm trying to decide on a comp, we do comps all the time for real estate wherever we are. If we look at what Netflix is saying that, the Warner Brothers is saying that stub is worth, and you look at debt, and you look at cash flow, and you look at multiples, and then you look at where Versant is. Is it fair to compare those two and say that if they're worth $4 or $5 a share, Versant is undervalued given the relative?
Well, I hope so. I mean, the marketplace is going to dictate. We really like our portfolio compared to some of the other portfolios out there. We like our balance sheet. We're being launched with a fortified balance sheet that's going to really allow us to be aggressive and to be on our front foot as opposed to on our back foot and being worried about paying down debt with $1. So we are very, we like our position, and we think that we have a real opportunity. And listen, if we think we compare favorably to sort of the standalones that are out there, to the pure plays, and we think that our growth strategy will be a winner.
I mean, you could, as a money manager, you could arbitrage it based on this metrics. Where if the other stub was traded, Versant will be trading today. When that comes out, you could buy Versant, sell the Warner Brothers.
We'll have to see what happens. It's an exciting day.
Good suggestion.
Probably a good way to end it. We'll have to see what happens. Godspeed.
Thank you. Glad to be in this with you.
See you at the Val.
Yeah, see you there. Thank you all.
Great to see you. All right, up next, what investors should take away from the capture of Venezuela's Nicolas Maduro. In the meantime, check out precious metals this morning. They are higher across the complex. You can see gold prices up by about 2%. Silver's up by 5 3/4%. Copper and platinum up 2%. Investors moving into some safe haven areas in what is the first geopolitical test of 2026. Squawk Box. We'll be right back.
Welcome back to Squawk Box. Take a look at the futures right now. Dow up about 22 points, the S&P 500 up about 21 points, the NASDAQ now up about 181 points. And the Dow's turned around this morning. Joining us right now is Jason Trenner, Chairman and CEO of Strategic Research Partners at Baird Company. And it's always good to see you and to see you back at this table.
Yep, I'm thrilled. I'm thrilled to be here. You know, how do you like the new haircut? It's all right.
Looking good.
Okay,
it's looking good. We're
don't catch carry.
You're healthy and you're doing well.
Yeah,
so
I'm doing well.
We're very happy to hear that. Take us through all your thoughts on where the markets are, maybe a little bit of what you think happened this weekend, if you think that's going to have an impact. I'm actually surprised that we haven't actually seen a bigger impact one way or the other.
Yeah, I mean, I do think what happened this weekend actually fits in pretty well with, you know, by luck, by kind of one of our big themes this year is that we believe commodities are going to occupy a much greater place in asset allocation. A lot of the foundations, pensions, and endowments we work with really have very little exposure to commodities, and one of the things we think Venezuela represents is that there's a resource nationalism that's going on, whether it's China, Russia, United States, and that's not often said, but I think that's a big part of it. Another big theme is just the gamification of the markets and this blending of gambling and investing, which
you mean prediction markets and the like?
Prediction markets, and if you look at CME did a deal with FanDuel 2 weeks ago. Robinhood has clearly has relationships with other prediction markets. And I think, as a Wall Street guy, I can't say I'm thrilled about it. By the same token, it's happening. And so it's
are you seeing professionals use it now in terms of either hedging certain positions, taking certain gambles on things? By the way, we did see, I don't know if you saw the news over the weekend, there were people who had bet on Maduro's arrest and to some degree this whole invasion, oddly enough.
So I personally haven't seen it, but it would not shock me in any way that our hedge fund clients are starting to use the prediction markets to hedge some of their macro trades.
As a Wall Street guy, you don't like it because?
I don't like it because I love the financial markets, and I don't want to see them tarnished by something that's not really, you're making it a game as opposed to investing. And also just through the years, I mean, I just know Wall Street takes a good idea and then blows it up to the point that it throws up all over polite society, right? So, you know, whether it's CDOs, whether it's portfolio insurance, whatever it is, they take decent ideas and then really add leverage to it, and then it eventually becomes a problem.
So what do you do with that as an investment theme?
Yeah, as an investment theme, frankly, we're playing it. So, you know, we own Robinhood, we own CME, we own ICE, because all of those exchanges are getting into those markets. And Flutter, Robinhood, all of those things. In our opinion, I don't like it, but it's happening, and I wouldn't stand in front of it.
More broadly, if we get together a year from now, I'm sure we'll hope to see you a lot more between now and then.
Yes.
Where do you think we really land? Where are we?
Listen, you know, as a strategist, we were talking about this in our morning meeting this morning. It's very hard in a rip-roaring bull market to be correct about where the market will end up, because you have some discipline in terms of valuation, in terms of PEs, and so, you know, I would use roughly like 7,500 for the S&P 500, but if I'm going to be wrong, I have a feeling it'll be higher, and that's largely because profit growth estimates are about 15%, up 15%.
We spoke to Tom Lee in the 6 o'clock hour, and he also has a higher expectation for the end of the year, but along the way believes that we could see a 10, 15% correction.
Yeah. Well, you have the midterm elections. You have a new Fed chair, right? There's a lot of moving parts this year. Now you have what we were discussing in terms of what's going on with this resource nationalism. I think you're right. I think Tom's right.
What about the AI piece of it? Because a lot of folks are either concerned about it or excited about it.
Yeah, no, this is one of these things, and I kind of almost purposely left it out because I don't know. I've never seen a technology that is as exciting as this. I've also never seen capital spending as robust as this, and it seems to me there are going to be some downward surprises along the way. I still don't think that would be enough to stop the trend. Because the utilization, end utilization is not particularly high. It's still relatively low.
Jason, I want to thank you for coming in.
Thank you very much.
Great to see you.
Great to see you.
Come on back
Happy New
more
Year.
often.
Yeah, I can't wait.
All right, up next, the stories that are making headlines right here on Squawk Box this morning, including U.S. Attorney Jay Clayton's comments about the capture of Nicolas Maduro. Squawk Box coming right back.
Happening on Squawk Box this morning, the president of the Federal Reserve Bank of Minneapolis telling us that today the labor market is cooling. There's a risk the unemployment rate is about to jump and inflation is still too high, but he still expects a resilient American economy. Barclays upgrading autonomous vehicle tech company Mobileye to overweight. That stock is up 8% in the pre-market, but down 50% over the last year. And former Venezuelan leader Maduro was sent by helicopter from Brooklyn to Manhattan this morning, where he faces an arraignment after being captured by U.S. forces over the weekend. Top federal prosecutor for New York's Southern District, Jay Clayton, was with us earlier.
The biggest threats to the United States are state-sponsored crimes against Americans and narco-trafficking into the United States, killing hundreds of thousands of people every year.
And if all of that wasn't enough, it's also the ringing of the bell for Versant, our new company, parent company. It's going to be spun off today, and we will be here for that. So a big day all the way around with us. That does it for us today. If you're watching the futures, you'll see that right now the Dow is up by about 47 points. NASDAQ is up by close to 200 points. The S&P up by 23.
If 3 hours wasn't enough, I think you could watch CNBC and see us at 9:30.
At the bell's open at 9:30.
I have a jacket.
It's all part of Squawk on the Street, and that is coming up next.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. We kick off the first full week of trading of the year. Futures, as you can see, pretty steady. Market gets its first chance to react to the U.S. strike on Venezuela. Congress returns to work. CES kicks off. Oil is up about 1%. Our roadmap begins with a fallout from the president's military intervention in Venezuela. Gold, Bitcoin, oil companies rallying in early trade.
The price of crude is also edging higher as Nicolas Maduro's removal casts uncertainty over Venezuela's massive oil reserves. We're going to discuss where prices may go from here. And CNBC's parent company, Versant Media, set to begin trading as a new independent media company today. This, of course, after being spun off from our longtime parent, Comcast. Bye-bye, Comcast.
Let's begin, though, with these U.S. strikes on Venezuela over the weekend, which resulted in the capture of that country's president, Nicolas Maduro, and puts the oil markets in center stage. Today, Maduro was brought to Manhattan in handcuffs by DEA agents ahead of a federal court hearing later today. He is facing narco-terrorism, conspiracy, cocaine importation, conspiracy, and weapons charges. So much already written over the weekend, Jim, about what this means for risk, for foreign policy, for commodities.
Right, well, I think that the commodities are taking action immediately, but it's not oil. Oil's kind of trying to figure out what to do. I do think that we have to look at the fact that we do not want to immediately jump to the conclusion that we're going to untap all those reserves. And the reserves happen to be, as they call VEN. They're VEN heavy crude, which can be refined in the U.S. and refined in China.
Largely heavy crude.
Right,
Yeah.
and you can
Not
say,
all,
no,
I'm told,
but you
most.
could say, look, Chevron has a toehold in there. They get 100,000 barrels per day. But I think that Chevron was up 12 at one point. I think that you can get excited about these things. The only guys who are really going to make some money, I think, would be Halliburton, because you got to rebuild everything.
Everything.
People don't recognize that you have to rebuild.
And what's really, I was able to have a conversation with somebody who was in the country around 2 years ago. There was a brief period, if you guys recall, where sanctions came off as a result of hopes that they would hold a fair election, which of course they didn't. This was under the Biden administration. And the report is that the reserves are massive. We all know that.
Right.
As you just indicated as well. Jaw-dropping is geology, is sort of what the terms that are used, what might be available there, largest potential reserves in the world. But in the near term, they can only increase production a little bit. Everything would need to be replaced, I'm told. I mean, from every single pipeline on down. You know, they cannibalize the pumps, they cannibalize the pipelines, there are no spare parts, everything's full of rust. And this is somebody who actually looked at the infrastructure not that long ago. The amount of maintenance needed, it would just go on forever in terms of what they would need to do. And they basically stolen all the infrastructure, the current regime and those associated with them. So you need to go
The blockade has even hurt them more because they've had to shut wells. You can't really open a well like that.
Person saying you would have to go foot by foot for all the infrastructure. The point being, to your point, Jim, that the amount of money that would be necessary and the guarantee that you would have to have as an ExxonMobil, as a Chevron, to go in and spend this money would have to be long dated and definite, and that doesn't seem to be the case right now.
Well, look, I think people want to immediately jump to the conclusion that perhaps that you can unnationalize what's been nationalized. You can just dust off the infrastructure. I remember when I used to work with Larry Kudlow, and there was a sense that when you opened Iraq, which was doing 2 million, then it would go to 5. Well, 8 years later, it went to 4. So those who are trading on this right now, there are people who have been wrong about a lot of things, and they're going to be wrong about this. Now, maybe they're wrong today, but I do think that, and people who buy nuclear on this too. Like, I think we have to, the year of magical investing ended, now we're in the year of stupid investing. And I think we have to call out trades that are stupid. If you're going to buy oil on this, I want to know why, because the price of oil is going to go lower, not higher. I wouldn't want to be long China overnight because China gets 800,000 barrels per day, and that's a heavy crude. And you could say, well, wait a second, that the president could divert it to Valero.
Well, the Chinese have lent Venezuela enormous sums of money, and they've been getting paid in return in cheap oil, discounted oil.
Well, it sounds kind of like materials, right?
Yeah.
It's the rare materials. But
apparently, there are a lot of Chinese flags flying all over Venezuela
all over everywhere.
Not here.
No, not. David is right now at one point more than Already, 2026, and you're
Other than
just
the
drilling
Chinese
on.
consulate on the west side, I think, has a Chinese flag.
It's got a caveat.
Yeah.
But look, I do think that, I mean, look, I know when I got up, I said, well, I got to come in here and I got to come up with an analysis. And like David did a lot of work, and I come back and I say, if you want to and say that Chevron could get more, that's fine. But all these other, that maybe the heavy refineries could do well in 2 or 3 years. But the knee-jerk buy of oil companies is the kind of thing we're trying to get away from. I think in 2026 we have to discourage knee-jerk buying of things like small-scale nuclear reactors because of.
Right.
Let's just discourage.
To your point, I mean, this industry in Venezuela, apparently, and again, here I'm at broad strokes, it was nationalized in some way in the 80s.
Yeah.
Then, and Exxon left back then,
Yeah, they
I
weren't
believe.
dumb.
And then it was kind of renationalized again under Chavez.
Right.
But Chevron hung in there.
They did.
Exxon sued them. I think they have huge potential liability award from London. Exxon due them, for all the money that was basically spent and they were never able to get a return on. But Chevron chose to stay and see what would happen. I did ask Mike Wirth about their relationship in Venezuela a few months back. This is sort of what he had to say. Speaking of Venezuela, the Wall Street Journal today devotes a lot of column inches to a story called How Chevron Got Caught in the Clash Between the U.S. and Venezuela. There's a quote I'd love you to respond to. It's from Elliot Abrams. He was the U.S. top envoy to Venezuela during the first Trump administration. He said the following: what you have is a conflict between the interests of one oil company, Chevron, and the United States. How do you view that statement and respond to it?
Yeah, I don't see it the same way as Envoy Abrams sees it. We see our presence in Venezuela as something that's good for the people of Venezuela. It's good for the United States. The oil that's produced in Venezuela is highly sought after by Gulf Coast refineries. We've been in the country for most of the last 100 years through the ups and downs of political and economic cycles, and we believe that regional trade and foreign investment is a vehicle for countries to work together. And so I think our presence there has been constructive for the people of Venezuela and for the United States.
Look, the Keystone Pipeline was supposed to go to these refineries in the Gulf, and that was heavy. And so we spent a lot of money, our refiners spent a lot of money on the kind of crude that is like Venezuela. Now, Mike's got knee surgery today, not here.
Okay.
Tried to get him.
Yeah, I'm glad you did. I hope everything goes well for him, and look forward to hearing from him, obviously.
The second one. Well, you're discussing that because my wife's having it.
No, we're
That's
all.
kind of what
That's where we are, man. That's where we are in our age.
Mike is not that. Mike wants to worry
Those
about it.
darn knees. They're in the same shape as Venezuela's
No, he's
infrastructure.
worried about his people there, which is absolutely
As he should be. As he should be.
But I would say that again, it's something that we can talk about. But if you want to know what's front and center is Jensen Huang speaking this evening, NVIDIA, and laying out a vision of the next industrial revolution, combination of accelerated computing and what I regard as being the stack. You know a lot more about the stack, and the stack means we are not a chip. We are software.
Have we moved on? We've moved on from Venezuelan oil to the AI trade.
Let's have some.
That's good to do because it is.
Let's have some people talk about it.
We are seeing rally today. Micron, risk on maybe. Bitcoin's
No,
up.
it's because NVIDIA
Jensen.
went and bought a huge amount of high bandwidth memory. They cornered a lot of it, and that's why Micron goes up constantly because we're not building it fast enough. I'll go back to Venezuela. If you want to talk about Halliburton, I like Halliburton here.
No. I want you to stay on this because this is the market today, and it's the second trading day of the year, and we do seem to be having an AI related rally.
We
right
have the
now.
CES keynote this night, late afternoon, that John Ford, our own John Ford, is going to be covering, and I think it's going to be a very big layout, and that's why I think NVIDIA is up already. AMD speaks tonight, and I think that that's something that's front and center, data center. In reality, is that I think the last few months have been tough on NVIDIA, and maybe we could be in a period where the doubters are done, given the fact that the demand from China for the H200 is off the charts, possible 50 billion ByteDance buying a huge percentage. All the lies that were told about how China's not interested, well, those people are going to get away with. Remember with my new thing here where I'm trying to hold people to free passes? Those who said that China wasn't interested, well, maybe the PRC wasn't taking them down, but ByteDance would take everything.
Yep, got some upgrades of the big names out of Amelia's today.
Yep.
Goldman takes their Taiwan semi target up 35%.
Right, we have Foxconn reporting an unbelievably big number, which again reflects the NVIDIA complex. And like I said, the key thing was if the high bandwidth memory that Micron, you see that stock doubled. That was going to be the key thing that everybody needed. And NVIDIA saw it come. Now, David, where are you on the OpenAI IPO?
I'm not anywhere necessarily in the IPO. Whether or not something should come as soon as this year, I don't know, or next year. As much as I'm trying to focus on the $100 billion current raise that OpenAI is engaged in right now, at a potential valuation of $750 billion.
This is where I
keep trying to get more on that, Jim, and
you
right now,
Should we speak to Sheriff Farr?
yes, we should. You know, Sam was in St. Bart's. Sam Altman had a few people who talked to him, along with everybody else, and he seemed to be in a very good mood. There may have been some sense that they've made great progress on the fundraise, but I don't have any specifics for you. And I wonder, the $100 billion is such an enormous amount of money. Would it include new money from NVIDIA? Back to remember the $100 billion memorandum of understanding that was agreed to in 2025. Yep, we reported that, I guess it was a week ago, that SoftBank completed its full
Do you know that this fundraise is probably the most important thing that's going to happen in the first quarter? Because it means that you can buy Oracle, it means you can buy Vertiv, it means you can buy NVIDIA.
Yes.
But I will tell you that there is a guy, Sam Altman, who he's not a typical CEO.
What do you mean by that?
Well, I mean, because he attacked short sellers before they even had
really?
a common
I've
stock.
never heard that happen before.
Well,
CEOs attacked.
well, I mean, when
What was interesting is, he made the point that I would like people to short it because I could prove them wrong. Of course, it's not a public company. It very well may not be one a year from now. We'll see. Though this year does seem to hold the possibility of significant IPOs for other companies.
But
Yeah.
$100 billion at a $750 billion, I say congratulations in advance, Sarah.
If that happens and if it's confirmed to have been completed at some point, to your point, I think it will be very positive for. And we've already seen a bit of a move in Oracle of late, even with the SoftBank completion of the $30 billion plus the $10 billion they syndicated
Now
there
we're
in
going to see
fundraising for OpenAI.
that phony insurance come down?
CDS?
Yeah.
Maybe.
Because what's more important is the bonds are doing.
Maybe. I mean, your buddy Zembelis wrote a great piece last week,
was that a
and it had a full page and a half about just indebtedness and Meta and the SPV structure specific to Hyperion and how that debt is being treated. And rating agencies. It's so interesting.
Right. No, Zembelis' piece was fabulous.
No, but all of it is so interesting, and of course I've made the point again. This is changing it a bit, the subject, but that. The $27 billion, that Meta is committed to in the sense of at least funding the interest on, certainly for a very long period of time, is not treated as CapEx.
Right.
And it's barely treated as debt at all.
I went back and forth with him. I think that the gating factor is power, and it's going to mean that they're not going to spend as much. The piece it's called Smothering Heights. It's brilliant work by Michael Zembelis.
Yeah.
Brilliant piece. Whatever.
Nice way to start the year with some good reading.
It was good.
So is the lesson that market's going to look past Venezuela and geopolitics and it's going to be about AI in the Q1?
Yeah, I mean, well, it's easier to try to make money from viewers than speculate. We can speculate. Go by Hal. Because if you're going to have to really redo everything, it's going to go to Hal. Maybe SLP.
HAL.
Yeah. Well, let's hope I'd love there to be more to it, but I'd rather talk about what Ben Rice is saying than I would about what we're hearing about.
Yeah, we'll get to some of the calls out of Emilius on NVIDIA, Intel, Uber as well. Interesting move down to sell. I got some bullish calls on Costco, Citibank. We'll talk about air travel and our parent Versant when we return. Big day in the history of CNBC. Our parent Versant Media debuting on the NASDAQ today as an independent publicly traded company after being spun off from Comcast. You can see Mark Lazarus, some others of the team getting together for the opening bell. We'll bring you that opening bell ceremony and the first trade in a moment as we look at some of the properties of ticker VSNT. We'll get Kramer's Mad Dash and we come right back.
All right, let's get a mad dash. First one we've done of the year, of course. I haven't even wished you a happy new year.
Happy New Year to you, Dave.
Gonna stop saying that after a couple more days, right?
Larry David says it's the 5th or the 6th.
Okay, so today's our final
we're
day.
really done.
All right, what are you gonna do for number one mad dash of the year?
Okay, David, we talk a lot about tech here, and that's right. But we don't talk enough about the banks. Those stocks have been nothing short of amazing. Barclays kind of codifies that. They talk about how Citigroup's going to have a big year. That's like their focus name. But there really isn't any that they're not excited about it. Goldman Sachs, Morgan Stanley, Wells Fargo, Bank of America. Now look at this. This is not a semiconductor company. This is a company that's getting a price-to-earnings multiple in part because of the new regime in Washington, but also because the earnings power turned to be far greater than people thought. So I am going to stick with the idea that the banks are still inexpensive. We're talking about 14, 15 times earnings. I don't like to buy them ahead of the earnings because there's always going to be one. Like JP Morgan last quarter, where they really threw cold water on everything and really kind of sent you back on huge, and it turned out to be an amazing buy opportunity. You know, all you had to do was just come in there and buy it after they talked about it.
But
probably do that.
To your point, the banks, certainly the largest market cap banks, had a great year last year in the stock market, and my sense is you believe that will just continue.
Year one, because this group has true momentum. And by the way, when you look at what the government's willing to bless, I think that it's really positive for all these banks.
Right.
And I don't see we talk a lot about whether the Fed's going to cut or not. I think we don't talk nearly enough about how they've really deregulated and make it so that it's very easy for banks to make a lot more money. And next thing you know, you're going to see headcount cut. It's going to be some AI, but it's also going to be some compliance that may not be necessary. These places have huge numbers of people in compliance. I think they are going to be scrambling, the compliance people.
Yeah.
I don't know where they end up. I don't know. What do you think?
I'm not sure. I'm not sure. It's homegoing. It's a good
homegoing shortage.
Maybe.
Where's the shortage? Data center. You have to reskill.
Got to reskill.
Yeah. Reskill. We're going to use a lot of that in 2026.
Yes. Well, we may need to at some point as well.
What?
Although we have skills that I'm aware of. All right. We got 6.5 minutes before we get to an opening bell. Of course, our parent Versant Media is going to ring it. That is the NASDAQ over at the NASDAQ. Celebrate, of course, the debut as a public company.
What are you looking at?
Just making sure that's not Lazarus. No. Yeah. Keep it here.
Hopefully the market is listening to what we're saying, that vertical scale is going to be a way for us to differentiate and to diversify our business, to be not so beholden to pay TV. While that's still a big profitable part for us, it's not going to be the end game.
That's Mark Lazarus, CEO of our parent Versant Media Group. Last hour on Squawk. As we usher in a new era for CNBC today, Versant is making its debut as an independent, publicly traded company after being spun off from Comcast. In a couple of moments, Versant will ring the opening bell at the NASDAQ, where it's listing under ticker VSNT. A lot of discussion on Squawk, Jim, about shifting investment priorities outside of Comcast now.
Right. I do think that for people at home who are interested in what they're going to do, remember, that if you own Comcast, there's a ratio 1/25 that you get.
Yeah, Comcast shares are going to reflect the spinoff.
You also know that almost $1 billion of the shares is owned by index funds, and index funds is a $7 billion company. It's highly unlikely that index funds will keep it, so there might be some initial pressure.
Correct. Yeah, Mario Gabelli was on a few weeks back talking about wanting to be a buyer with that pressure because index funds, to your point, that own Comcast will then sell Versant. That said, coming back to the numbers themselves, the stock has been trading on a one-issue basis for a couple of weeks now. It's been trading a bit below 5 times EBITDA. That has sort of been the hopeful range. Maybe you could get 5 to 6 times. It's trading at around 4.6, 4.7. We'll see how it opens today.
Growth rate.
We're talking revenue of $6.6 billion, adjusted EBITDA for last year of $2.2 billion with 33% adjusted EBITDA margins, and about $1.4 billion of free cash flow. Those are the basic numbers on Versant from last year as we head into the new year for the company. By the way, those EBITDA numbers are not going up, and that's the challenge.
Right.
How do you actually reverse that, get it to flatten, if not start to increase by finding new areas of business for CNBC and other names that are well known in terms of this branded portfolio?
See how it goes?
Yeah.
I do know I care about index fund pressure because anything you say that's really positive, people say, well, wait a second, why didn't you tell me about the fact that a lot of the stock is owned by index funds? And the answer is just because Comcast is a member of the S&P, very big member, and you're not going to get BlackRock to suddenly say, you know what, we're going to take a hard look at Versant. They just sell.
Under-levered versus many of its potential peers. Yeah, at about 1 times exactly, which is great. Allows potentially for acquisitions. Mr. Lazarus has indicated not really going to be focused on other cable properties, certainly not as a main area of focus for acquisitions.
Let's get that opening bell and the CNBC real-time exchange. And the big board, it's the New York National Guard, and at the NASDAQ, of course, it is our new pair. Versant Media, Mark Lazarus, Dean Lyles, along with Stacey Sullivan, of course, our president, David Stella, editor-in-chief. There's Joe and Becky. I think the morning Joe gang is there as well.
Well, there you go. And we're off. Everybody's Swifty.
Well, I was GE for a long time, and Jack Welch, Brian Roberts, and Comcast for a long time, and now I'm here for Versant. Yeah. It's been a ride, that's for sure. But congrats to all of them. Getting
You
this
play
done.
with the team, go through a series of iterations.
Never had a stock, though, in which we actually may have a true impact on it. So keep that in mind. As you point out, $8 billion market cap. We are a significant portion of the overall revenue in EBITDA at CNBC, so that'll be different.
Yeah, but that's
it's not like we could really impact GE back in the day or even Comcast.
Yeah, that was good.
Yeah.
But we were high profile.
Yes, Jack Wolf loved us.
Yep.
Do remember those days.
And, you know, not to toot our own horn, but the pitch would be, you can't really tape delay us. You got to have us live. Our younger demo appears to love all things risk, whether that's stocks, Jim, a new generation of speculation.
Unfortunately, from someone who would like more investing, I think there's going to be more trading. Particularly, you know, for instance, if there was a lot of money made by Maduro.
Well, now you're talking about Polymarket, which is an interesting sort of side story.
We don't really have a lot of SEC action in Polymarkets, like none.
In terms of the prediction markets and how significant they become. As you take a look at our parent company trading down again, as Jim said, there will be, it's going to be a while till it settles. We'll see. But and the multiple's not unimportant, by the way, for another scenario, another saga I've been following, of course, which is Warner Brothers Discovery, which if they stick with, as is the case certainly now, the Netflix bid, you're going to see another publicly traded cable network entity in the global networks business of Warner Brothers. So you can take the Versant Media multiple and say, well, what's that going to be worth? Well, we'll basically put the same multiple on that. It wouldn't amount to much, particularly given the global networks business as is currently envisioned would have as much as $15 billion in debt and therefore be levered at very similar.
We had a breakout.
To EBITDA. That's for Warner Brothers.
Growth resistance.
Very much underlevered.
Although it was clear from what our news last said, it's not really a question of kind of pyramid different assets yet. I will say that some things don't change. And get a little away from Versant as that goes down because of the index trading. These software companies, they just don't stop going down. ServiceNow, really a darling of so many years, just getting clubbed again.
Well, I mean, when the action's all in hardware and memory, right?
Yeah, well, this is the software getting eaten by hardware, which is a little bit of a change. And I come back to say that Salesforce is going to fight. I think we're going to be buyers of Salesforce because they have an agentics business. But at the same time, I'd rather own Broadcom, which is top 10 potential winner.
Well, not potential winner. It's been an incredible winner as a result of obviously its chip business, which allows others to design their own custom-made chips, and how involved it's been. It's working with OpenAI right now to try to develop its own chip, for example. Sam Altman talked a bit about it when we had him on a few weeks back with Bob Iger in terms of what they're trying to do, because, of course, cost per token, per dollar, per watt is a key metric.
That's what we're going to be using, not
Alphabet's, given they make their own TPUs or design their own TPUs, is cheaper than OpenAI's. And so his answer when I asked that question was, well, we're working on our own chip with Broadcom.
Right, it's interesting that NVIDIA and Alphabet, Google are rivals.
Yes.
Two rivals, because Google spent a lot of money and there's also a lot of high bandwidth.
Oh, we're open.
But I would say that NVIDIA is the one to watch because
NVIDIA.
it's been underperforming in the last month and it's going to come fast out of the gate. And I think this revolutionary speech that I expect Jensen to give tonight is going to quantify why accelerated computing is often left out of the equation.
Yeah, JPM's TMT desk today has some predictions on NVIDIA for the year. Transitions easily to Vera Rubin. China demand for H200 tops expectations. Demand for CPX tops 10 billion, margins hold 70. All that would be good.
You got to own that. It doesn't reflect that. I think it's going to have a great first quarter. The price earnings multiple is going to shrink when you actually see the numbers at 41 now. Look, I think it's worth it to talk about groups that are underperforming and outperforming. I still don't know whether healthcare is the place to go. Be out there, JP.
Yeah, that's coming up.
Are you going out there?
Yeah,
Before we move on to healthcare, just to come back to software for a second and the weakness. Do you believe this narrative that basically says, yeah, you can talk all you want about agentics at Salesforce or ServiceNow, but there are going to be companies you've never heard of that are going to be coming up with iterations of things that are going to enable so much more efficiency in the enterprise and compete with you? I don't know. What is the story that has, what is, they say we're agentics, but meanwhile there clearly is a belief that, well, you're going to be disintermediated.
Well, that's the other part of the business. They have this agentics, and they almost wish that Salesforce was called Agentforce.
You said this before.
Well, yeah, they just kind of chatter.
Yeah.
Chatter. Well, because that's the growth business. The other businesses, remember, these places are sell on what's known as a seat basis, and anybody who's in the software business has to be worried,
right?
Because we all can do software now with how easy it is with AI. That's a big part of the problem. Like if you're Wells Fargo and you have these people who spend a lot of money with software or do a lot of software, in say information technology, well, you don't need as many people. And I think that's good. Those are non-revenue producers. Now, Goldman, we had a very precise term for these people that I thought of and defined things because I was much less of a statesman then. We called them dead woods.
Oh, man. Yeah, well, that'll be another, of course, we're going to be talking endlessly about potential job losses or certainly lack of hiring related to the proliferation of AI in 2026 in the enterprise.
We don't know who we need.
We don't, and we really don't know the impact at all. It's such an early point now, but as this year moves along, we may start to see more evidence of what the return will look like and what the employment picture will look like, Carl, as a result of AI.
Well, you take David Joyner, who's really a revolutionary at CBS, and they've really implemented Salesforce, and they're saving a lot of money. This is the agentics, because anybody who has a business where you just call and you're left on hold, that's over.
Right.
That's important.
Fortune's got a bit on the wire this morning that Moynihan of B of A confirms that if you're part of this Gen Z cohort, your sort of hiring nightmare is taking shape. They've only hired a couple thousand out of tens of thousands of applications of recent grads.
Yeah, I know many in that cohort, and many just, I don't need to be anecdotal, but you may have to go back to school, show something. Because the old days where you just said, listen, I know how to use AI, I know how to use TikTok. No, got that covered.
Yeah.
Yeah.
It's an open question for those of us, especially who have children entering the workforce.
It's time to give me a call.
Every day, man. I'm like, all right. And they hear lots of things. It's hard, you know, as well. It depends on who they're talking to, telling them, oh yeah, don't worry, you're going to be fine. You're going to come up with, there'll be new ways to do things,
Right.
or you're doomed. I mean, it's both. It's either
Nobody's
side.
duped. There'll be new companies started because it's much cheaper to start a company, and because as Harley was starting to tell you, look, we can. It's not a problem. You can start a new company, and the fulfillment's very cheap. And I'm very bullish on the idea of entrepreneurship here. Really,
Yeah.
I like the SOB and the Halberd at the same time. Phillips, no, that's a mistake.
Meanwhile, to what you were discussing with the mad dash there, I mean, financials, especially the big cap ones, are already having a good year. I mean, Goldman Sachs is already up 6.5% year to date. So that's basically a trading session and 8 minutes.
Right. Well, look at Capital One. And that move in Capital One is extraordinary. Yet it still sells 12 times earnings. And they're going to have their own credit card with loan back office if they want to discover. Look, I'm telling you, this group, this is the group to own if you want to have, if you're worried about high-priced earnings multiples. These are very inexpensive stuff.
JP Morgan is a $900 billion market cap.
Were you a problem with that?
No, I'm just pointing it out.
having a great year.
It's an all-time high market cap for that company. And obviously, doesn't have that far to go to get to $1 trillion.
All-time high today. Jamie is crushing it. 16 times earnings. What an insult to Jamie. It's an insult.
We'll get, speaking of earnings, we'll get earnings a week from tomorrow.
Yeah, and be careful because Jamie likes to talk about how things are fraught. Fraught.
Well, it's worked for him. Every time he says negative things, the stock just goes up.
You need a
Goes down first.
Yeah.
Goes down first. And the rest of them went down 10. I called them. I said, I think you guys are too negative. Said, no, we're realistic. The stock then went up 10, and it was a great buying opportunity. And the same thing could happen again. The ones that don't do that, Bank of America doesn't have that. Goldman is reacting very, very well to their earnings. Morgan Stanley reacting well, and Citi reacting best. Wells reacting okay. Citi is just incredible.
Yeah, Wells takes Citi to a top pick today. Actually reiterates a top pick. The other one was Citizens today. I think it was Barclays going to overweight Citizens.
Listen, you know, a little oddity there. The stock is up gigantically already. This group is 15 times earnings. I mean, you want to buy 30 times earnings? Can you buy 15 times earnings? No.
Well, it depends. Doesn't it?
It depends on what?
Depends on the growth rate of the company itself.
Yeah, that's true. Versant's down 5.
Apple trades at about 30 times earnings. Do I want to own that?
Apple, I think, is the winner with Gemini. I don't know if you guys have been using Gemini. An hour after Maduro, they had the best analysis I've seen still on Maduro. I went to ChatGPT, and Maduro is still charged. What?
It's hard to update in real time.
Okay, you're right.
It requires a lot. You got to be searching the web every millisecond.
But how could Gemini have
entire web? That's not easy.
Best analysis? What did they train on that they were able to?
Well, I think it's also their access to information in real time and the fact that they're going through the. I mean, Alphabet's one of the handful of companies that is indexing the web all the time,
right?
Every minute.
Remember, the Alphabet has that special relationship with Apple. I do believe that Gemini is going to be along for the ride. Pay them more, and Gemini is going to be the de facto name. It's going to be Anthropic for business.
I'm here.
Of which, by the way, if you look through Semblus' great piece, you'll see some good things about that. And then for regular search, you're going to go to Gemini because it's just superior to everyone. And now ChatGPT has a new iteration coming. Maybe that one will be better.
It's still doing okay. You act as though it's got no audience.
Well, no, it's
800 plus million people using it.
I know, I'm talking about substance. I chose to, rather than horse race. Rather than horse race, I went substance. I'm sorry. Let me be, fatuous. I'll go for
You always
fatuous.
come back to these usage cases that
I don't know.
Empirical.
Putting in like a query in a context box. Yeah,
Not all gun hole. I'll wait. Be patient.
Well, we're trying to get answers on oil, and we're going to try to get some more regarding the commodity and Venezuela with Brian Sullivan this morning at HQ with a look at what some of the oil majors are saying, or maybe more importantly, Brian, not saying about their future.
Yeah, what they're not saying, Carl, is that they're going to be going into Venezuela anytime soon. Spent the weekend talking to pretty much every oil company out there, industry sources, government officials, even members of OPEC. here's the reality. A lot of the oil complex, which you guys have shown so well, is indeed on the move. You look at a Valero, that's higher, Schlumberger, Halliburton, Baker Hughes, Chevron, Phillips 66, all those stocks are indeed moving higher, but I want to be very, very clear in my reporting over the weekend. This is a country that is still, I don't want to say leaderless, but it's unclear effectively. Delcy Rodriguez currently in charge. What will happen? This is a country whose oil infrastructure is largely rusted and has come way, way down. This is not a situation where suddenly tomorrow you're going to have an Exxon or a ConocoPhillips or somebody else say, guys, we've decided now with the president's urging that we are going to be going into Venezuela. That is simply not going to happen. Obviously, Chevron is there as a joint venture with PDVSA right now. Venezuela putting out about 800 to 900,000 barrels a day. Folks, that's about 0.8% of global oil output. And the other thing I would add is that OPEC is, Venezuela is a founding member of OPEC. OPEC has quotas on certain nations. Venezuela not in that group of 8, so to speak, that is kind of doing things on their own. They had a meeting yesterday, Sunday, they're meeting about oil output and quotas. But Venezuela, as a founding member of OPEC, is subject to what they call their Declaration of Cooperation, where they kind of set their output goals. I'm not trying to throw cold water on the Venezuela story. What I am trying to report, what I am reporting, I should say, is that this concept going around that suddenly Exxon is going to show up or ConocoPhillips is going to show up in Venezuela tomorrow is simply not true. David Faber, you know very well, Guyana, Exxon is very much involved in that offshore platform, billions of dollars of investment. We're talking about a country that would require, if not a decade, close to it, tens of billions of dollars of investment. And if it does begin, it will begin with the Schlumbergers, the Halliburton, and the Baker Hughes of the world, because to build out any extra oil output, you first need to modernize and invest in the guts, the infrastructure of oil.
New high on SPY.
Services names. That is why they are up very quickly. Why Valero's up, because the Venezuelan oil is very thick. It is very sludgy. If indeed there is some kind of increase in output, that oil would likely be shipped to America and refined by likely a Valero, which has the capability to refine the heavier crude that would ultimately be turned into diesel.
Right. It used to go apparently to Aruba. There was the largest refinery in the world on Aruba.
And St. Croix.
It doesn't operate anymore for that Venezuelan oil, as you point out, back when obviously the Chevrons and the others were operating in the country at a fuller level. I mean, to your point, Brian, and you're reporting here, obviously speaking to a lot of people. I mentioned a conversation I had with somebody who was in the country not long ago. The state of disrepair is appalling. The pipelines, the pumping stations, the power, all of it needing to be rebuilt. And the question they ask, and the one I know you're raising as well, is how are you going to do that without some sort of massive security guarantee from the U.S.? And what does that really look like, especially if you get a change in administration in 2028 that has a different approach?
That's exactly right. And people I talked to also over the weekend, David, said if this was going to happen, if this was purely an oil play, why would this capture, if you will, of Maduro not occurred in 2019 in the first Trump term when the oil infrastructure was less bad, when output was higher? Remember, former President Joe Biden put a $25 million bounty on Maduro's head earlier in 2025 before he left office. So we've been talking about removing Maduro or having Maduro leave or whatever terminology you want to use for a number of years. Why now? This is not some immediate oil play. The oil company stocks are popping on this idea maybe that, to your point, you will get this investment at the early stages to try to modernize it. Two big questions: who pays for it, and that security guarantee, David, that you talked about. If you're going to bring down a couple hundred or a couple thousand American or Western nation workers to go down and improve this, you better darn well make sure that they are safe, they have housing, and Venezuela right now and probably for months or years to come is not a nation that anybody is going to describe as stable.
Yeah, a lot of parallels to Iraq, where you had a lot of party loyalists. You got to pay them or fight them somehow to make sure that your investments can take place. Brian, we'll talk soon. Brian Sullivan, thanks. Watch the markets here. Dow's up 555 to start this Monday, back above 6,900. as we got Chevron, Goldman, and Caterpillar leading the Dow. As for bonds, the yield curve is actually a little bit lower, down 10-year 417 or just below 418. Long bond also below 49. Stay with us.
We got 3 black crows on the SPY. Doo-doo. Get it on. Coming down first.
Pretty constructive tape this morning. Dow's up almost 500, but these names are trying to outperform. Emerson, Dover, URI, all upgraded at UBS today as they look, Jim, for a rebound in non-residential construction in the first half.
My chapter builder is the lowest multiple.
Now we're at the 63.
Terribly traded last year. Could be different this year.
This could be it here.
Trade continues to gain ground in a broader
For the
sense.
scalp.
S&P still hovering just below 60.
Ladies.
Stop trading with Jim is next.
And it'll be the 5th, which is today, 687s at $1. Beautiful time. Look! Oh, looky! Uh-oh. Uh-oh. Will you break out? You were at 127 just a second ago. You were there for about 5 or 6 seconds. So why didn't you sell? I got in at $1. Excuse you. Very unprofessional. Very unprofessional to call during the middle of a hit record. As I make my special coffee, notice that we hit the 9 again, and the 9's starting to pull down a little bit. So a little bit of sign of weakness. I've had a couple opportunities to go ahead and sell this, but I want to see if we can break the 9. Right now, I could almost say, Jim, you're at a head and shoulders. Do you want to go ahead and just get out of the trade and wait and see if it pulls back, or are you going to see if it's going to squeeze between the 63 EMA and the 50 SMA on the 1 minute time frame? As of right now, you're bearish as long as you're under the 9 EMA, which you are currently under. Shut up! You're interrupted. Jim, you were supposed to call first. How dare you? Okay, my apologies. As I was giving a lesson, Jim Cramer decided to get on air and open up his... So now back to the lesson. Ignore that idiot. So what we're waiting for is for this here candle to break above the 9 and show some kind of respect over the 9 on the 1 minute time frame. If that could happen, then I think we could probably get 130 out of this maybe, and that would be a $300 trade, which would cause me to go ahead and go to the beach. Or I'd sell them now and go buy breakfast at the beach for 120, 130. Oh, there's 117 right there, just like that, see? It's kind of flopping around back and forth. So you get out at 112. If you wanted to, but not me. For I'm Washboardjim. Now that we do have a body above the 9, it is showing some kind of respect, maybe. Well, it did. It hadn't quite finished yet. It has to finish. It's very important. White House officials say Worker Kerner represents the U.S. Air Trucks Paris today. No, I'm at 98. I'm not scared yet. As long as we're squeezing between the 63 and the 50, or the 9. I'd probably put a sell ticket in for 112 and get out if I wanted to. Maybe. so far not doing too well. We could break that orb for triple top today. CNBC is currently in commercial break. Well, let's see what kind of cleavage we have on. There's 115, 117. Okay. Whoa, 127. Now I'm up $200. And you do have some respect. Now I do have a little bit of respect above the 9. This one candle right here. So that shows a little bit of respect out of all these candles. That's my favorite one. Okay, we are now at 128. I could go ahead and push the sell button right here and talk about NVIDIA. Ladies and gentlemen, we're going to have a special interview about NVIDIA today. We're now at 130. I could go ahead and push the sell button. At the market. And then it'd sell at any time you want. At the limit, it would sell when I want it to sell. So if I would have pushed the market, I could have got out at 112 there instead of the 131. Sammy, will you talk about NVIDIA for me today, please?
Activity picking up today in earnest, day 2 of 2026.
She said earnest.
Venezuela, and it looks like markets are looking past the geopolitical uncertainty in the market right now, very much risk on and perhaps on some of the investment opportunities, particularly when you look at some of the oil majors, some of the energy companies today. With the S&P 500 starting 0.6% higher, we're at levels of 6,900 right now on the benchmark. It's also a good day for tech. We're seeing 0.9% on the Nasdaq right now. The Dow Jones is outperforming up over 1%, as I mentioned, on some of those companies.
No inflation, huh?
Reacting to the geopolitical tension and developments of the weekend, the Russell 2000 up 0.7% as we stand. So we have got risk on in this market as we get up and running for trade today. Let's check out foreign markets. Obviously, the first to react to what we got over the weekend with regards to what happened over in Venezuela.
We don't care what happened here. 135. Ladies and gentlemen, I want to bring it to your attention that Washboardjim just made an immaculate trade. He went from $1. He had plenty of chances even to buy it at 98, 97. It many times came back and hit that $1 level and then broke out quite profusely a few times until 117, pulled back again around to that 106, 107, $1 area, and then all of a sudden does anybody know what this is? You're right. It's an inverse head and shoulders off the 63 EMA. And I sat here and I called it out. I said, this is exactly how I said it. You dirty rat. I told you that the Educator, the 9, and the 63 EMAs were at combat. And that we had a hammer, a spinning top, comes out and hit that 63 EMA on the 1 minute time frame. You dirty rat should have got in there. I said, we have a possibility of maybe breaking the orb, doing a triple top. You dirty rat. So I called this trade out at $1, and like any other stock, it'll pull back a little bit, it'll break out some, and it pulled back, and it broke out, and it pulled back, and it broke out, gave you plenty of opportunities to take the trade off the 63 EMA. Now, I teach a class on how you can count to 4. You might make a little bit more. So you got a 1, 2 bits, freebie, 4 bits, boom. A 1, 2 bits, and whatever you do not call me during a special instruction seminar. Always clean. May I help you? This better be important. For do you know who I am? That's what I thought. Now this damn option's at 154 right now. These are the 687 strikes. And I do think that we could break the triple top here. The double top off the orb. Or you go ahead and take your profit. Goodbye. Okay, I was rudely interrupted. Anybody tell me where I was? Oh yes. So before you add the butter, make sure that you add the 1/4 tablespoon of cinnamon and stir it in with your creamer as you're frothing it, and then you add the butter, and then you have your what we call a bath. Now some call it a wort. And you stick it in the bottom of your cup, and then when your coffee's done, you go ahead and you press your coffee. Very good. Double top on the orb.
The making, not days or hours like the media and everyone wants it to be in the markets. So I think when you think of commodity futures, uncertainty makes them go up, right? They make stock futures go down, commodity futures go up. So there is some uncertainty there. You can make a case that the long-term prospects for more supply may mean to lower crude oil, but that's not here yet, Sam. We're a long way from more supply coming out of Venezuela, but speculation on the service providers is showing a sign that that may be where the future lies. And Chevron is the company that has the biggest footprint there right now, Sam.
Yeah, look, as our colleague KG pointed out over the weekend, I mean, proven reserves does not mean that it's readily available. And as you point out, it is an interesting take in the market as far as the reaction, because these guys aren't going to go and show up tomorrow. They're not going to go and set up shop this week. I mean, this is going to take years of billions of dollars worth of investment potentially, and then, as you say, perhaps a decade as far as, rebuilding all this stuff too. But then what about the geopolitics right now? I mean, as far as what the markets are pricing in this morning, a lot of attention on what this means for these spheres of influence, what it could mean for China's move on Taiwan, what it could mean for...
I knew years was a good one. She did a good one on years. You could take years.
But what do you make of what the market's pricing in, or at least trying to look past this morning in trade?
Yeah, so some of the risky parts of this are that Rosneft out of Russia and CNPC Sinopec out of China participate through partnerships in Venezuela. So there are some, you're going to be stepping on some toes at some point.
You already have. You already have.
It is something that has to be navigated, but like we mentioned a few minutes ago, companies like ConocoPhillips and ExxonMobil, they have arbitration rulings in their favor, but that they're waiting to,
you already have.
Participate with. So can they re-enter those markets? But Sam, as you know, watching these markets, we live in a microwave world, and this is one that's going to have to bake for years and years. So
microwave
it's not,
world.
Yeah, the frustrations will grow quickly, but this is a much longer term. I think that's why some traders, seeing that and seeing the beginning of that road, are betting on some of the service providers.
Yeah, absolutely. And, back to the geopolitics as well. I mean, the optics of the pictures of the Chinese delegation there in Venezuela just hours before this all happened. I mean, perhaps speaks to the PetroChinas, the CNOOCs.
Yeah, that's not good.
Trade overnight. I mean, China's been making these big investments there as well. So we're going to be talking about that throughout the course of the program too. Hey, Kevin Hinks, thank you so much for breaking that all down for us, as well as the ISM manufacturing data. I'll speak to you later.
I wonder if they stuck around some.
Believes that defense stocks have one of the most favorable setups in the equity market in 2026. Find out why that is when Morning Trade Land comes back.
Yeah, I wondered about that. Good morning, Metty. Do. There's a spy. Getting ready to squeeze. I don't know sure if it wants to die, but we have a megaphone just in case. Yeah, we could come back down here. I mean, we have the real big possibility of it for it to come back down here. So let's keep that in mind. Jim, would you jump in now?
I'm Nicole Cavalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Yeah, I can fly.
A modern approach to wealth management. No politics, no spin. Just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
We're back on Morning Trade Live. Comcast is under pressure in early trade after completing its spin-off of Versant Media Group. The media giant giving up control of CNBC, USA Network and the Golf Channel to Versant Media Group as part of an effort to focus on higher growth areas of its business. Versant began regular trading under ticker symbol VSNT on the NASDAQ up the road earlier today. It is trading down right now. That is Comcast. Let's take a look at some of the leaders on the session. And we do have Coinbase among those, of course, off the back of some favourable, more bullish commentary coming out as far as the sell-side analyst community is concerned. We'll be digging into that throughout the course of the program. Halliburton, no surprises there off the back of what we've just mentioned with the developments.
Still bullish as long as we stay up in this area.
And we are trading about 6.7% higher. Valero is up 8.7% and SLB at 7.3% higher on the session. So those are your winners on the session. Let's take a look at the losers. Perhaps no surprises there that some of the alternative energy names are lower, particularly given what we're seeing with some of the oil companies today. Devon Energy down 5.8% right now. So is Diamondback Energy trailing by 5.5% too. Comcast, as we just brought you that story, is under pressure in this morning's trade, down 5% as we stand off the back of that spin-off of Versant as it listed on the NASDAQ today. All right, joining us now is Jed Ellerbrook, Portfolio Manager, Argent Capital Management. A very good morning to you, Jed. So just wondering, how you're feeling about the market now, given the events over the weekend. I mean, it does look like investors are largely looking past what we saw there as far as some of the geopolitical uncertainty that's been injected into this market. But as you sit there today, how are you thinking about things this morning?
Yeah, I think oil prices and oil stocks probably are a smaller weight and influence on markets today than they've been, over the long past for a very long time. So, yeah, I'm not surprised to see markets kind of shrug off the Venezuela news today. You see the specific stocks moving up or down, based on, direct impact. But overall, I think that this is a stock market that remains highly focused, and rightly so, on the AI infrastructure build-out and what impact AI is going to have on all the various sectors across the U.S. stock market.
Okay, so largely looking past the geopolitical uncertainty, no doubt focusing on AI and continuing to run with the baton that we ran with in 2025. I'm just wondering, another big sort of event for us this week is going to be CES. We're going to be hearing from Jensen Huang later today. We're going to be hearing from Lisa Su from AMD as well. I'm just wondering if you're paying attention to that event and what you're looking to hear from some of these very influential names in the sector.
Yeah, absolutely. The CES news this week will be big. I expect NVIDIA and others to focus on robotics, automation, self-driving vehicles, health tech. I think those will be big areas of focus and new product announcements. Also, NVIDIA will talk a lot about their software and how that can be applied to those specific use cases. I don't expect we're going to hear a ton from NVIDIA about data center, but they have a lot going on in those other areas I mentioned as well.
Yeah, okay, so robotics and health tech, interesting because it looks like the narrative is going to start to shift to some of the use cases, and that's what everybody's wanting to hear about. I mean, certainly the ROI, show me proof of all this spend, that's been very much the narrative. You do say, though, the favourable equity market setup for 2026 looks good. Is that a continuation of what we saw in 2025, or is there sort of new elements on the horizon?
Yeah, I think it is in many ways a continuation of what we saw in 2025, but I expect it to be amplified, particularly as it relates to merger and acquisition activity and also IPO activity. I think we're setting up for a potential really strong multi-year run in both mergers and acquisition activity and IPOs, including some very large ones.
Okay, and the CapEx, I mean, you've been pointing out that hyperscaler CapEx grew 75% in 2025. Do you believe that we can continue to throw out numbers of that kind of magnitude, or do you think things are a little bit limited, a little bit more sort of demanding moving into the new year?
Still wanting to break out resistance.
As you say, the use cases, but also the sort of winners and losers.
Yeah, that growth rate of 75% in 2025 will not be matched in 2026.
I think we'll grow something here shortly.
will go up significantly. I think it will probably go up somewhere between 30 and 50% year over year off of a very large number now. So that's a material increase. I think that estimates or expectations for that CapEx spending are going to continue to be revised higher. That's been happening almost every quarter for the last 3 years now. I think that's going to continue. So when Microsoft and Google and Amazon and Meta and CoreWeave and Oracle report their earnings here over the next month and a half, I think you're going to see those CapEx estimates get revised up, and I also think you're going to see revenue and EPS estimates revised up for most of those companies as well, as businesses and consumers, implement into production these AI use cases that they've been trialing and trying to figure out how to work in their specific enterprise in much of 2025.
Okay, and then outside of technology, obviously we've seen some strong demand for defense, aerospace. I was just talking about the performance in Europe and Asia overnight off the back of what we've now seen in Venezuela. Obviously with respect to what's been happening over in Ukraine, Russia, we've had military drills around Taiwan. That's nothing new, but how are you looking at this sector? Who's set to win and benefit this year?
Yeah, it's an extremely strong demand environment across both aerospace and defense, as you outlined. The U.S. defense budget, of course, is increasing by a double-digit rate here in 2026. It'll keep increasing into the future. And then aerospace demand, kind of core airline aircraft activity, and then also Boeing aircraft production growing. So I think, really strong, outlook, demand outlook really across all of aerospace and defense. Our particular favorite is TransDigm, a company that both engages in aerospace as well as serving the defense industry. They're also trying to complete mergers and acquisitions to grow their business. They have plenty of capital to do so. They just announced a pretty sizable acquisition a week and a half ago. So we like that company quite a bit. We like the demand environment. And just this weekend's news, only adds to that.
Yeah, I mean, we are seeing it trading up right now 1.2% off the back of what we've seen alongside a lot of its peers. Hey, Jeff, we're going to leave it there, but thanks so much for the update and getting us across your thoughts on the market as we get up and running and feet under the desk firmly for 2026. Jed Elbrook, who's Portfolio Manager, Argent Capital Management, joining us there. Appreciate your time. Coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so
sometimes
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange.
Let's go.
Only on Schwab Network.
We need a breakout, please. SPX doing it also.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
That's a lie.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
No, you do.
Live coverage of the close every single day.
This is
Don't trust her.
Close live weekdays 3 p.m. Eastern, only on Schwab Network.
This morning after Guggenheim upgraded the stock to neutral from sell. The analyst cites
PAWN.
recent underperformance and benefits from being the largest pure-play vendor in the security space for the upgrade. CTech also reported that Palo Alto is in talks to buy cybersecurity startup Koi for $400 million. All right, welcome back to Morning Trade Line. It's time now for the big picture. Let's welcome in Colin Martin, Head of Fixed Income Research and Strategy, Schwab Center for Financial Research. So, not a lot of movement in the bond market this morning. I think surprisingly, given some of the commentary out of the weekend, that perhaps we would see more of a flight to safety. We are certainly seeing that across the commodity space. But just talk us through, perhaps we're seeing this kind of reaction.
152.
Yeah, you could argue that the bond market's being driven more by just, the economy and fundamentals as opposed to the news out of Venezuela. When we first got the headlines, the initial thought was that maybe long-term treasury yields fall for two reasons. The first would be the flight to quality trade. If there's a lot of uncertainty out there, investors tend to get out of riskier investments and go to the perceived safety that U.S. treasuries offer. But we also thought maybe they'd fall on lower inflation expectations. If we were to get, a boost in oil production from Venezuela, that could bring oil prices down even more and pull down inflation. Now, to start the day, 10-year treasury yields were down a little bit, but it didn't look like it was for flight to quality purposes because stocks were up. So maybe they were down a little bit based on just maybe inflation expectations. Then they rose a little bit, but then most importantly, they fell following that somewhat disappointing ISM release. So that's kind of our main takeaway right now. And this is our approach to all markets, not just the bond market, is to take everything that we're seeing right now with a grain of salt, and our guidance to our clients at Schwab is to not make an impulsive investment decision based on these headlines. It's very fluid. It's going to take time for these things to play out, and kind of stick with your plan. And that's what we're seeing with the bond market right now. It looks like just the path of the U.S. economy is the driver right now, as opposed to maybe geopolitical risks from Venezuela.
Okay, so steady as she goes this morning. Obviously, we've got some economic updates this week. A big week in data. In fact, we've got ISM manufacturing earlier today, still below that line that separates expansion from contraction, but not moving the needle too much because, of course, everybody looks at the services PMI as far as a more sort of heavy weighting there. What were your takeaways?
Yeah, disappointing report this morning, still below that 50 level, and that's, above 50s contraction, below 50s, above 50s expansion, below 50s contraction. It's been below 50 for a while now. When it comes in below expectations, that's always a little bit disappointing. But as you mentioned, Sam, we focus more on ISM services. We are a services economy, and that should hold more weight in terms of the momentum and trajectory of the economy. That's been bouncing around a little bit, but expectations are for it to remain above 50 when that comes out on Wednesday. We're also going to be looking at the jobs data. We get jolts, so we'll see, are there more openings coming out there? And we also look at the quits rate. Quits, I think, is a good indicator of the labor market, because if quits are rising, shows that employees are pretty favorable at their prospects that they'll leave jobs. If the quits rate's falling, it kind of shows the opposite, and it's been falling lately. So that's something that we're going to be focusing on, the JOLTS report, and then the culmination will be Friday, where we get non-farm payrolls and the unemployment rate. The good news is consensus expectations as of this morning suggest a modest decline in the unemployment rate from 4.6 to 4.5%. That would be good news. The move we've seen recently is arguably bad. You could say mainly it's coming from an increase in the labor force. That means it's rising, maybe not for bad reasons, but if it is rising, that's not a thing we want to see. So if we saw that reverse a little bit, I think the markets would be pretty happy with that.
Okay, we'll be getting the jobs, we'll be getting the ADP, and then we're back to regular programming with a Jobs Friday. So we'll be watching. Hey, Colin, thank you. We've got to wrap it up there. Appreciate your time as always. Colin Martin, Head of Fixed Income's Research and Strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade, and we'll take a closer look at Coinbase after an upgrade over at Goldman Sachs. Morning Trade Live. We'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online podcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE,
Ladies and gentlemen, what I've just done today is good enough for a hit country song. I got in this trade today. All I had was a buck to my name. I looked at the room and said, it's either this time or I'll be dead. Well, I got in the kitchen and made me a cup of coffee. Came back in a breakout, as you see. Well, I'm up $90 a contract, should I sell? I'm up $90 a contract, should I sell? I'm up $90 a contract. I wonder if I should sell. I think I will get out of a few. Boom, baby. Well, I was sitting here in Washboardjim's room, and he was in these spy calls, and he called out these SPXs. He said they're running about the same. Might as well take them both. And we were looking at each other here back at the table, and Mikey come up to the desk and said, took a little sniff of it, and they handed it over to Mikey, and he said, give it to Mikey, he'll take it, he'll take anything. So he jumped in the trade. Nope, we're at resistance. 69.56.84. Oh my God. The crowd doesn't know what to do. The crowd doesn't know what to do. Oh.
For Bitcoin. So what stands out about this note?
Yes, and good morning to you, Sam, and Happy New Year to you. Glad to be back after a little vacation off here. But like you said, coming with some good news this morning for Coinbase. Goldman Sachs did that upgrade that you mentioned. Also, we are seeing that rally in Bitcoin, and as you highlighted before we started speaking, they are correlated, so we are seeing a good move to the upside, more than 7% right now for Coinbase. For Goldman, their note, they upgraded to a buy from a neutral rating. The price target
I don't know what she did for her vacation.
That's up from $294. So we're implying almost a 30% upside from where we currently are. The analyst says that the stock's year of underperformance for 2025, it was down close to 10%, has created an attractive entry point for investors. It also noted that their recent product launches across brokerage, banking, wealth, and tokenization enhance the competitiveness of its core business, adding that its, quote, growing exposure to crypto infrastructure businesses through its subscription and services offerings should dampen earnings volatility over time. Now, that chart you also showed against the Bitcoin prices do show how volatile coin has been by comparison to those Bitcoin prices. Their subscription and services segment is mentioned several times. That includes custody, stablecoin, staking, and prime brokerage.
I mean, that's close.
From just under 5% of revenue in 2020 to being nearly 40% of revenue in 2025. And that's a big driver of this move to the upside that Goldman is predicting here. The firm says it continues to see robust growth of about 13% annually up till 2027 as the crypto ecosystem evolves beyond trading. We start to see more regulation in this space and it coming more into the forefront. Goldman also says that it views Coinbase as a best-in-class play here on the growth of crypto infrastructure. Their scale and brand recognition continue to drive above-average revenue growth and market share gains. They're forecasting about a 12% compound annual growth rate in revenue through 2027. That's compared to about 8% for its peers. So they do see a lot of potential upside here for Coin. But like you said, a big move to the upside today, more than 7% so far this morning, Sam.
Yep, nice day for coin. Thank you so much for highlighting that note for us, Molly. I'll check in with you a little bit later on. Let's trade it now with Charles Moon, Stock Strategist, Prosper Trading Academy. Good morning to you, Charles, and Happy New Year. I'm just looking at the price action, certainly over the last year or so. I mean, it's still down about 6% or so over 12 months, and some of that started to come off as we saw that pullback in those crypto prices, highly correlated, even though it has decoupled somewhat. But just talk us through your example trade, how you're approaching this name.
Yeah, it certainly hasn't decoupled much. It's certainly dependent on how Bitcoin is going to be moving. Bitcoin had this pretty severe wall of resistance at 92.5. We've gone through that level, and that's really where this bullish kind of thesis has come into play with coin, and you can see how responsive it is today. I was actually looking to have a bit of a pullback, but I'm not sure we're going to get it.
No.
If we can, I'd like that pullback to be right around 250, targeting to get into the 260 calls on the Jan 16th contract at $5 or lower. We may have to up that price to around $5.50. The stop is going to be at $2, so we want to define our risk. But I believe the upside is going to be at the very minimum 125% in gains or more if coin can actually sustain this 251 price, because the upside target for me in the near term is 275. And as we can see, if this momentum sustains, it only takes a couple of days for coin to get up there. So I'm looking more at a shorter dated time frame, taking a really aggressive approach, and really just trying to see if Wall Street's trying to buy into this name for the start of 2026 for a very positive Q1 for coin here.
All right, that's a quick look at coin, an example trade for us this morning, trading up 7.5%. So very much a good day across cryptocurrencies as we're starting to see that rebound in prices too. Hey, talk to us about your thoughts on the overall market performance today, Charles. We are seeing a nice all-time high for the Dow today. We're holding above 6,900 on the S&P 500, particularly off the back of what we got on the weekend.
Yeah, and it was a little shaky at the open, and again, I expect a lot of volatility. We tend to see volatility. We tend to see kind of contrarian price movement or unexpected price movement because Wall Street starts to really position themselves not just for Q1 but for all of 2026. So we could see a lot of volatility in names regardless of market performance. But right now, so far the start of the year, the rebound back above the 50 SMA and the Qs, these are all positive signs. There's been really strong buying in the financials, so that kind of points to the fact that Wall Street might be expecting a little bit more than 1 or 2 rate cuts this year as well. But it looks like right now Wall Street is really diving into a lot of the semiconductor names, a lot of the nuclear energy names. So they're really starting to position themselves and build out some strategic opportunities in the AI space, at least for what I see, along with the financials.
Yeah, financials are very much outperforming this morning, up by 2.5%. We've got industrials high, energy, as suppose no surprises, and consumer discretionary really taking the cake. Hey, thanks, Charles, as always. Really appreciate your insights this morning. That's Charles Moon, Stock Strategist, Prosper Trading Academy. Coming up, we'll dive into the departure of Venezuelan President Nicolas Maduro and what investors should be watching on the geopolitical front. Jay Pawlowski is going to join us next when Morning Trade Live comes back.
Got a couple of supports going down like this, straight cross. This one here is stronger because it's a triple top breakout and it pulls back and respects that triple top. So that would be like your pivot point. I'd go with that one. If I was to watch this support level, I'd definitely no lower than 687. 78. Anybody want to bet against me?
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus.
Anybody want to bet against me?
Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on.
That's what I thought. If I saw that earlier, I would have definitely jumped that too, but I didn't. I didn't see that.
Download the Schwab Network app and stream anytime wherever you are.
I might have saw it, but I don't think I filtered it out.
Live from
Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Butters, coming to you live from the New York Stock Exchange. Joining me now is Jay Pawlowski, the founder and chief strategist at TPW Advisory, for a look at the geopolitical impact of what we got on the weekend. Very good morning to you, Jay, and Happy New Year. So it's been a dramatic start to 2026, to say the least.
Tesla looking good.
Just looking at the reaction in the markets today, we've been talking about that. Obviously, it looks like investors are largely looking past what we're seeing here as far as some of the geopolitical uncertainty. But there is a view out there that maybe markets aren't quite pricing in the sort of longer-term impacts here of military intervention.
Oh.
Great to be with you, Sam. Happy New Year. And I think the market's got it right. I don't think this is really indicative of much more than kind of the reinforcement of America's decision under President Trump to really downsize itself from a global player, global hegemon, to a regional focus. And this was outlined in the Trump National Security Strategy document that was released in December, something we wrote about last month in our monthly, which we titled Trump Embraces the Tripolar World, really focusing U.S. back on the Americas, allowing China to focus on Asia, and then Europe to kind of be determined whether Russia or the European Union is going to be the major player there. Our bet is on the European Union, not Russia. But I think this reaffirms, from our point of view, the tripolar world framework, reaffirms the desire and need for countries to focus more on making sure they have what they need to compete going forward. We don't see the U.S. decision here, whether it's an oil play or not. Venezuela's got some of the most expensive oil in the world. It's not oil that's really economic at the current market price. And so we're skeptical that it really makes sense, whether from a short-term basis or even a medium or long-term basis. And so, markets being up slightly makes sense to us. Latin American equities.
That's my question.
Commodities are up.
Is it good?
So no real surprise. Both commodities, particularly oil and emerging market assets, came into today either oversold or very short in the case of oil. So a little bounce here does not.
Seems like every time I have to go buy something, I have to make it clear to the salesman. It says, I want the best quality of product that you have for the best price. I want the best quality of product that you have for the best price. And when I have to come back in here 3 months later and have to buy another one, and then buy another one, and buy another one, and buy another one, I want it to last at least a year.
Well, I think that's a great question and an important question, Sam. And I think it just reinforces to the Chinese mind and the Chinese strategists the importance of being independent. And that's something that China has been working on, whether independent in terms of tech stack, that's clearly what's been taking place in China over the last couple of years, or independent in terms of commodity demand. And yes, China is a big oil importer. China used to build an inventory that protects them when situations like this evolve. Remember that the U.S. has already had a blockade on Venezuelan oil. That blockade remains in place, so the weekend changed nothing on the front of access to Venezuelan oil. I think it does.
I ran out of coffee this weekend, so I went up to the convenience store about 4 in the morning to get me a cup of coffee. I mean, I just woke up. I just put whatever I had on and jumped in the car with the hat on. And so I can't remember the last time I came in and ever bought a cup of coffee from a vendor. And so I took that coffee, and it was like a couple bucks, $1.50, $2.50. I took the medium size and I took it home and I started drinking it. I said, "Oh my God!" I said, I couldn't believe how good it tasted. It was some kind of mocha something. I would just push the first thing I could find, and then I looked at the price. I said, $2.50. I said, I'd go back there and buy one of these every morning. And I figured, I'd end up paying $3.50, $4 for this thing. I said, no, this can't be true. So I go down street down here at Starbucks and get something a little bit worse than this for $8. I said, $2.50? So I went up there the next morning, and I didn't know if I was dreaming or not, and I had to go there and do it again. So I came in here yesterday and told the feller that I haven't had a convenient coffee in years because I make my own at home. I just like it fresher, and so my second batch didn't go as well. It got stuck, and the lady came over there and started fixing it up for me, and there's my story for the weekend. We're now down at 146. We're getting close to our support level at the SPY. Pay attention. First support. And the second one, 687.78. To the penny. 687.78 to the penny. Not a penny more or a penny less. Oh my gosh. Something else went down in price that shocked me. I can't remember what it was. Back up. I wasn't ready to buy that. I wanted it to go down a little farther, but that double bottom was your first support. Snake breakout, pullback, double bottom, boom. It was $30 contract on SPY. Now, as you get closer to noon, I like to move out the next day, start trading them on the SPY. The SPX I'll stick with the same day lotto, but not with the SPY. No, won't do it. So I'll be cutting myself off here pretty soon. Means the way this been trading. There's 10 cents right there, 174 to 184 on that night, a little pullback. Netflix up 36 cents. Regetta up a couple bucks. Amazon. They were talking about Nike again yesterday. Yeah. Looks like it wants to. I'll be right back.
Plateauing of demand, certainly in the U.S. and even somewhat globally. And this was all before the election last fall and the change in many of these policies. And now, of course, those have only added to it. The loss of the EV credit, which pulled a lot of sales into Q3 and made a lot of these companies look good, but it was because a lot of sales were pulled forward because they knew that the incentive was going away. And once it went away, Q4, as we've now seen, fell pretty hard. And I just don't see any reason to think that in 2026 any of these numbers are going to move back up. Certainly in the U.S. and for companies that are U.S. based and are selling mostly in the U.S., which would be the Rivians and the Lucids and even Tesla. It's going to be a tough year for them.
Okay, so it's going to be a tougher year as far as the roadmap is concerned for 2026. But let's just park some of the others there and focus on Tesla, because I do want to sort of get your thoughts on the fact that, obviously we saw the Q4 delivery numbers coming in down 16% year on year, and then BYD taking the, new title, etc. But it doesn't matter. Because when you look at the Wedbush notes out, when you look at the Mizuhos of the world, while they do believe it's going to be a very challenging year for automakers, I mean, everyone's looking at Tesla as a robotics and driverless car and basically an AI company. Is that how you see things?
Well, that's how Elon wants everyone to see things, because he knows he's hit peak autos. So he's doing a good job of presenting the AI and the robotics and the self-driving argument. And I'll admit that I'm impressed with how far the capabilities of this driving program has come, and his ability to have these vehicles both in private hands as well as the robo-taxis navigate fairly complex circumstances. But he still has to get to where he's not got safety drivers in the cars, where Waymo's way past that, and he's still got to get to where he proves that to regulators at a level that they'll let him start getting, certified for use in widespread areas in multiple markets. And all this has to happen, fairly quickly. Waymo is continuing to really aggressively advance in this area. And if he can get his robo taxis going in the next year with a lot of these challenges solved. And he doesn't have LiDAR, which also still makes me think he's got somewhat of a disadvantage versus some of the other companies out there doing this. But he's got a lot of work to do to get caught up and certainly to surpass where some of these other leading companies like Waymo are at already.
Okay, so there's consensus out there that it's going to be a pretty challenging old year, pretty tough again for car makers, particularly in this space with a lot of the headwinds that you obviously highlighted there. So what's the secret sauce here? I mean, what's the winning formula to get ahead in this market when you've got some of the challenges around launches, obviously some of the high-profile car makers pulling back on some of their electrification plans, as well as the demand picture is concerned? Who wins this game?
I think the traditional automakers with the ability to pivot between gasoline and electric vehicles, depending on what's going on with the market and the regulations at any moment, are well positioned. And generally speaking, their stocks did quite well last year, and I think they're positioned to do well this year, and certainly the U.S. automakers. I think whether you're a traditional automaker or an electric vehicle maker, if you can, again, spread your capabilities beyond just the car producing, if you've got someone like Rivian just starting to work with Volkswagen and do their software work, if you've got a Tesla that's working on robotics and AI, these are things that help spread your risk. And I do think long-term, whether it's solid-state batteries or an improved infrastructure, I do think electric vehicles do long-term have potential. But again, we're not talking 6 or 12 months, we're talking more like 6 or 12 quarters. It's going to be a while before you see the ability to have internal combustion engines largely replaced by electric vehicles, at least in the U.S. We've got all sorts of interesting situations going on globally with various governments pushing, so.
Yeah, absolutely. I mean, very different dynamics in places like Europe, with the so-called tug of war between, obviously the supply and demand situation, and then China's just its own sort of thing, obviously with that whole top-down approach there with the government. But hey, Carl, we're going to cut there. Thank you so much for joining us today. Always appreciate your insights. Carl Brown there, executive analyst at ICCards.com. Thank you. Let's trade it now with Alex Coffey, co-host of Next Gen Investing. All right, Alex, you've got an example trade. How are you approaching this one on Tesla?
Yeah, Carl didn't seem overly positive, Sam, and you mentioned some of the other concerns around some of these pure play EV makers, alongside some of those AI ambitions maybe taking some time to be implemented and show progress. So I looked at a neutral to bearish strategy, not looking for an outright downside in the stock, but rather that maybe the stock would run into resistance to the upside around 500 a share if it did make another attempt at new all-time highs. So selling a call vertical, neutral to bearish, 500, 505, February 20th expiration, looking to collect a $1.25 credit. That would be a max gain of $125, max loss of $375, and the break even would be $501.25. So with this one, Sam, best case scenario for this would be the stock goes sideways or lower, but you do have a cushion up to $501.25.
Okay, awesome stuff. So there's an example trade for us on Tesla this morning. We are trading higher by 4% in the market today, as we very much look like a risk on in this market this morning as we get up and running. Thank you so much, Alex, for that approach to Tesla off the back of the expectations for what is going to be a bumpy ride for some of these automakers this year. Let's check in on where the markets stand right now, because we have got the S&P 500 climbing higher this morning, looking past some of the geopolitical impact and the uncertainty of what we got as far as developments in Venezuela over the weekend. We are seeing a nice rally for some of these oil majors, some of these energy companies, some of the thoughts around the opportunities for investing in the country moving forward. We've got the Dow Jones hitting an all-time high this morning. We are up 1.3% right now. We're putting on around 638 points as we stand. Okay, that's a quick snapshot. Thanks so much for joining us here at Morning Trade Live. Really appreciate it. I'm Dan Vardas, the Schwab Network app, available in the Apple App Store, and tune in 24/7 on SchwabNetwork.com. Trading 360 up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome to Trading 360. I'm Marley Kate, coming to you live from our Chicago headquarters. Here's what we have coming up for you in today's show. In our 360 Spotlight, we'll highlight AI in 2026 with the Chief AI Officer at NICE and highlight some of his predictions for AI in the workforce this year. In our Disruptor segment, we'll take a look at Palo Alto Networks moving higher today, about 3% right now following an upgrade. We'll bring you the news and also an example trade. And then finally, in our 360 round, we'll take a look at the airline industry, examining how the landscape is changing for air travel in 2026. Before we get to that and more, though, let's see how the markets are shaping up on this Monday morning. Our first full week of trading in the new year, and we've got green across the board. The S&P 500 trading up about 0.75% right now at 69.0961. The Nasdaq more than 1% higher, 25,475. On the Dow, we're at 49,034. That's adding 651 points this morning, up 1.33% already. And the Russell 2000 also up close to 1.33% this morning, about 1.25% at 25.39. The 10-year slightly lower at 4.18. The dollar holding strong at 98.18, mostly unchanged. Gold is 3% higher, 44.59.40. Crude oil up almost 2% at 58.39 a barrel. And Bitcoin continuing its rally along with any of the crypto-tied stocks, trading up 4.75% right now at 94,435, trying to get back to that $100,000 level. Now, we do want to open our show with our first guest today. Joining us now, Joanne Bianco, the investment strategist and client portfolio manager at BondBlocks. Joanne, thank you so much for taking the time to be with us. Before we get to 26, let's take a look back at 25. What were some of your key takeaways from the year?
Well, first of all, thank you very much for having me, and Happy New Year to you as well.
Yes, well, we saw that in fixed income, we saw very strong income-driven returns in 2025. So this asset class provided not only stability, but attractive yields and diversification benefits for investors. And so, instead of the type of volatility that investors experience on the equity side, we had, strong returns in fixed income, and many of the asset classes were at historical high returns in terms of their performance.
And we saw that, the fixed income sort of delivered this quiet, strong performance as opposed to the volatility in the AI headlines that we saw in equities. Why do you think it was that bonds ended up being what I guess you could argue was a stabilizer in portfolios through 25? And do you think it will continue through 26?
Yes, we do think that it will continue, because I think it's been, the reason why fixed income has been so strong is because the economic resilience that we've seen in the U.S. economy, that's been a multi-year.
Yeah. Well, if we go socialism, it won't be. Now we're back at the 63 here. I think this is the bearish we've been all morning. I'm ready to go to the bank. Let's watch it. This is getting close.
These strong conditions.
Just now hit it.
Fixed income markets in 2026 once again.
And in the ETF space, we saw inflows north of $400 billion, far outpacing anything that we saw in the years prior. What do you think is driving that surge? And also, how are investors using fixed income ETFs differently now than in previous years?
There's a host of reasons why investors are using fixed income ETFs more now than they used to be. First of all, they have more choices available to them in terms of targeted exposures. That's definitely something that we help provide at Bond Blocks. They also like the liquidity, the transparency, the tax efficiency that fixed income ETFs provide. The yield picture, the income that they fixed income provides is something that's very important to investors in terms of the stability and fixed income. The primary source of total return for fixed income investors is the coupon income, and so at elevated coupon levels, fixed income is still very attractive.
And you mentioned you're keeping an eye on inflation. We are projecting positive U.S. growth, inflation staying above Fed target. But with the new Fed head potential coming in and potential caution from the Fed that they're sort of signaling now for this coming year, you see the yield curve steepening as well. I see in your notes. Where do you view that as creating opportunity, and also where does this create risk, this setup?
Well, we think that there are a lot of opportunities. Especially in corporate credit markets, both public and private bonds, both investment grade and high yield. And investment grade, we're really focused on the triple B sector, and high yield and double Bs there. And in terms of where investors should be on the yield curve, the ultra long end is always going to be the area that has the most risk. But we think if investors are focused on short to intermediate term duration in their U.S. Treasuries or just in their maturities, that's something where they can benefit from the potential for price appreciation in the current market environment.
And let's talk about credit spreads too. Credit spreads are tight by historical standards right now, but I'm seeing in your notes that you say that the fundamentals still justify them. What gives you confidence that credit can hold up in 26?
Just because we're just not seeing the excess that we've seen that was predated, previous down cycles. We're not seeing, companies spend a lot of money in terms of M&A that's debt financed. In fact, the majority of the financing that they're doing in the capital markets is for refinancing. So it's things that enable them to, have the wherewithal to continue to pay their debts.
And going back to the ETF space, we have a lot of conversations about ETFs. We have people from the NASDAQ in all the time talking about ETF inflows and highlighting trends for us there. And one thing I've noticed is these more focused exposures are really coming into the forefront of the conversation, that people are really targeting when they're choosing ETFs. Is that a trend that you're also observing? And where are you seeing the most movement?
Yeah, that's definitely a trend. So that we have 27 ETFs, and they're all to provide investors more choice than they used to have in fixed income. Investors on the equity side have always had that kind of choice for like 20 years, and so it's a newer thing on the fixed income side where you can have more targeted exposures that enable you to do better than just investing in the U.S. aggregate, for example, which is to us, and to the investors that have focused on our ETFs, they've just definitely seen that, there's a lot of ways where you can outperform the U.S. aggregate in terms of exposure. We've definitely benefited. Our assets have more than doubled in 2025 as investors really like to capture this attractive income, more precisely express their views. And this also helps them better manage the risks in their portfolio. They can take the risks they want to take.
And as far as bond blocks ETFs, you mentioned having 27. Where are you seeing the best performance in which of your fixed income ETFs?
So our best performance has been in 2025. It was in our XEMD, which is our emerging markets ETF. It's a 1 to 10 year maturity, so it's shorter duration, but it was up 13.5% last year. We're also seeing our intermediate triple B fund, triple BI is the ticker, and that was up 9.5%, and our double B fund was up 8.7%. So, and that ticker is XBB. And then, a variety of our treasury funds and the intermediate side are X7 duration, or X5, or X10, all done well. So, there's just been a lot of areas. We have many funds that have done very well in the past year.
And Joanne, if an investor learned one lesson in 2025 and then wanted to apply it in 2026, when they're thinking about how fixed income fits into their portfolio, what do you think that lesson should have been?
I think that it is that they have the potential for more choice and for more opportunities in fixed income than they might even be aware of, with the amount of ETFs out there that enable them to capture, corporate bond exposures specifically that can enable them to generate attractive returns for their portfolios.
Joanne, we appreciate you taking the time to highlight fixed income in the ETF space for us. That's Joanne Bianco, Investment Strategist, Client Portfolio Manager at Bond Blocks. And we've got plenty more for you today on Trading 360. Next, we've got the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals as always, and Charles Moon will be joining us to take us through the trades for Oklo, Costco, and Affirm. That's next on Trading 360 on Schwab Network.
Get more out of it. Boop, boop. Blah, blah. Blah, 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 blah. Blah, blah.
most iconic trading floor in the world, this is Opening Bell with Nicole Pedalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out there.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts as always. Here to take us through the trades is Charles Moon from Prosper Trading Academy. Great to have you both with us today. Charles, would love to start with a big picture thought on the market action we're seeing on this Monday morning.
Good question.
Pretty strong, pretty wild overall. You know, we're going to face a little bit of volatility at the beginning of the year.
Yeah.
Even with the markets up, some stocks may not be as responsive. Really just depends on how Wall Street and institutions are really positioning themselves for not just Q1, but for all of 2026. We've seen some real standout names. We've seen some suppression in some of the Mag 7 as well. And NVIDIA is one of the leaders to the downside today. So it's a bit interesting to see how the market is digesting everything, and then, you know, what could look weak today could look really strong tomorrow. You know, I wouldn't put too much emphasis on what happens in the first 4 weeks of the year. It's really after that 4-week period when we progress that's really going to give us a guiding light on how Wall Street's positioning themselves.
All right, so let's move right into the big three then. Your first one had a stellar 2025. We're talking about Oklo here. They were up more than 225% last year. You know, walk us through this pick.
Yeah, and this is, you know, huge gains, but, you know, specifically really
3 Black Crows.
At 193.84. They've come back to this 200-day moving average. They've been recovering above. Since the start of 2026, there's been some really strong and aggressive buying. So one of the key levels I was watching here was this $88 price. Now, being above this level and staying above this level is critical, because if they do, I think that they're going to make a really quick run for right around this $95 to $100 price range. You know, the data center plays are coming to life. We're seeing a lot of names. We're seeing Oracle itself actually find some buyer demand. So, you know, the power of the data centers, we need these nuclear plays. And this is one of the standout names for me. Holding above 88 opens that door for a really fast breakout towards that 99 price here.
All right, Rick, so as we look at the technicals here for Oklo with that 88 level highlighted.
So as long as we're holding the 63, we're still in you know. And then when we get below the 63, then we got to worry about the VWAP. For a scalp off of VWAP. I'm debating on going in. It's either going to break this resistance, the /ES. I'm looking at the ES here, just in case you're curious. Oklo back in the thing.
I guarantee that's going to happen, but a pretty good example of the setup that you might be looking for if you are someone who is interested in that type of trading here. Now we can see as well another supportive area here, 60 to 69 or so, old highs from all the way back here and from here as well, and then it became a supportive zone a few more times. So we have bounced off of this supportive zone. We have broken out of our downward sloping trend line off of those highs that Charles mentioned near 194. So it's seeming like we could be on the verge of a potential breakout here. Now we can see that our moving averages that we follow here, the supportive area came in near that 251 EMA, our yearly EMA. So a long-term, key, critical, supportive benchmark there did hold on. Now now we are rapidly crossing back above some of our other shorter moving averages. RSI, red trend line, downward sloping, broken. We are also breaking above the 50 midline. So another bullish signal developing here with this first full week of 2025 or 2026. Excuse me, starting off. Volume nodes here and here are the heavy trading areas to the downside around 55 and 75, and then up here we can see that the activity picks up again near 115. That could be a further consolidative point to be on the lookout for.
All right, so with Oakland, we are seeing that, highlighting those points that you both brought up here. And our next one, kind of a similar chart with it being really well off of its 52-week highs here when we're talking about Costco. But they are seeing a decent move to the upside today. Mizuho named them their top picks list and upgraded them to outperform and up their price target. Walk us through your outlook on Costco.
Yeah, Costco's been in this, slow and steady downtrend, which is a bit surprising for, a name like Costco, which is beloved by retail traders. What I've noticed here over the last month is that they're starting to bottom out right around this 840, 850 price range.
Still too high.
They hit some higher lows here. They're triggering this W reversal. This W reversal pattern is usually a sign that the long-term trend is starting to reverse, so a downtrend starting to reverse into an uptrend. Now, this critical price range that I'm looking at, quite honestly, is right around this 873 to 875 price range. I'd like to see Costco remain above this price. I think the breakout zone is going to be above 880, and I think that this is where we can see Costco really shoot towards a 50 SMA, which is right around 896. So it's a lot of dependence on holding these critical levels, but we're starting to see the positive signs in Costco. I will look for that 875, 880 breakout, targeting up to 896. I think that would happen in probably about a 2-week time period. So short-dated opportunities that are being presented in a name beloved by retail traders.
All right, we're just below that level right now, trading just a bit above 871 right now. So, Rick, when you look at the technicals here, are we signaling a potential breakout to above these levels we're trading at now?
Well, possibly this is certainly the point that could be the tipping area here. The reason why 871.71, that very nitpicky specific price level, that was our low that we saw back here. That was also about where we hit lows during one of our more recent declines as well. That's about where we've hit resistance so far. So that level 873, that's a very close area. That's a similar area that I have my eye on as well as an important supportive area here, or rather resistance area to push above, and then key to hold on to that area if we do continue our uptrend here. In the shorter term, symmetrical triangle type shape has formed after we had our earnings event here at this white dashed line here. So now, by one measure, we're re-entering this falling wedge type shape here between our two white dashed lines, but by another measure, our short-term pattern, our triangle, is still holding on here. So we have our triangle level matching up pretty closely with our resistance near that 872, 873 area. So again, even more emphasis on that as a potential level of trend shift. So when we look at our moving averages, our weekly and monthly EMAs are about where we're seeing our potential breakout area near that 870 level here. To the upside then, our monthly or our quarterly EMA, our 63-day EMA, that lines up with the upper level of our trend line from our wedge type shape there as well.
Well, it's going to do something.
Like our last chart, not quite breaking through the trend line.
Long squeeze.
Yet that critical bullish support, supportive signal that we would see there, but we are making new relative highs there, so look for that other shoe to drop if we do see this breakout start to materialize. Finally, our volume profile shows here about 850, and then things start to pick up again, notably here near about 915, 920 or so. Those are the areas that are closest to where we are now that stand out the most from this perspective.
All right, and highlighting those levels, just hopefully if Charles' thesis holds up within the next 2 weeks, we could get up to those levels. Now, this last one, I think, having a monster day today. We're talking about a firm. They're up more than 8% just today. Walk us through this final pick here, Charles.
Yeah, since the first trading day of the year on Friday, we're seeing some demand really funneling into the financials, and we've seen how JP Morgan reacted today. SoFi is another one that's just really screaming to the upside, but maybe this is an anticipation that there's
SoFi.
more rate cuts than
I was looking at that this week.
Which would generally be good for the financial sector. Affirm has been in this kind of weird consolidation back and forth zone between 65 and 80. Now they're poking above 80.
We're gonna spy.
I think the breakout price is realistically right around 81.50. Once it breaks to that level, there's really nothing to slow down from,
yes.
Reapproaching that.
It wasn't SoFi, it was some
zone.
other one.
That's where my target would be.
This is a good one though.
Breakout. The 52-week high is $100 even. That could easily be tested as well, but it's really interesting to see how the stock is performing. And anytime we see stocks in this consolidation,
SPY about to get a new high,
start breaking free, it could lead to really fast gainers. So that's really what I'm looking at 81.5 breakout. I think that's going to jump it towards 90, 95. We'll see what Affirm does there. But at the very least, it should be at least trying to go towards that 52-week high. There's great upside. Another name beloved by retail traders. And again, if they start garnering some real momentum, they'll get to the 95 zone much, much quicker than people would anticipate.
All right, so another potential short-term move to the upside here. When we look at the technicals for Affirm, Rick, you can see highlighted that move to the upside we're seeing. But what are they showing us?
Right, so upside breakout from a falling wedge type shape in our blue lines here, typically regarded as more of a bullish type of setup. In this case, it did play out to the upside after we held on here near about 63. Very close to that 65 level. I certainly wouldn't really quibble with that. The reason why, it's kind of this general area where we saw price stopping and starting. It was also this gap area back here too as well. So that was the supportive area. We rallied. Then our short-term price activity, you could draw this white trend line going across our lows. Our big bounce today is taking out our old relative highs here. So then you could duplicate the trend line, use it to project potential resistance. But from another perspective here, just one of our horizontal resistance levels, 81, that was around where we had these old highs. That's about our high close. That was about where we found support here. Now we have stalled out temporarily, perhaps here. It's the day is still quite young, but that would be a key point to watch for a potential breakout in this name. Our moving averages, we have pushed above all of them. The faster ones are starting to diverge apart from the slower ones, suggesting the trend is still strengthening at this point. RSI on pace to make new relative highs along with price here, so that would be, again, more of a confirmatory signal for this name. Finally, our volume profile study, the point of control, in this case, our thick red line, that heavy trading area, right about where we are breaking above right now. That comes in specifically near 76. So
thank you for your business.
An auspicious sign for the bullish crowd.
Let's have a great year.
This heavy trading area here. Things pick up again in this area to kind of cap out near 90, then trail off very precipitously.
All right, yeah, right now trading at about 80.52 on its own mini breakout today, already up more than 8%, closing on a 9% for Affirm today. Charles, we want to appreciate you being with us for Big Three. Thanks so much for joining us from Prosper Trading Academy. And of course, Rick,
that's the wrong one.
Thank you for always being here. Coming up next, we're going to spotlight the outlook for AI in 2026 and what to expect as AI investment continues to grow. That's next.
That was for November, you dumbass.
Sometimes, you could have done better. Same goes for where you invest.
Shit.
Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers
That was November's.
Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/December
December
and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize what kind of picked up from my dad. He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Kane, live in our Chicago headquarters. It's time to spotlight AI in 2026 and where the industry is headed. Joining us now is Philip Heltwig, the Chief AI Officer at NICE. Philip, thank you for being with us and Happy New Year to you. Before we kick off your expectations for AI in 2026, would you mind telling our viewers a bit about NICE and what it is you do there?
Yeah, sure. Great to be here and Happy New Year as well. So at NICE, we're a leader in customer experience. So we're powering some of the world's largest contact centers. And we recently acquired a company called Cognigy, which was founded by me and two of my colleagues. And we're now NICE Cognigy, so we're the AI arm of NICE, powering the automation of the customer experience at scale with what's called AI agents. And that's what we're talking about here today.
So with NICE having been in the center and certainly in the mix of this AI-powered customer experience for years, but now it's really entering mainstream discussion, how has AI already changed how enterprises operate? And also, how do you think the market is still underestimating AI in its role in enterprise and customer experience?
Another good question. Yes, I mean, we've been doing this for a number of years now. We saw that enterprises that early on invested in AI infrastructure, especially in customer service, have really created amazing experiences for many of their customers, right? I mean, think about large airlines. If a severe weather event strikes or something like that, then you just can't reach anyone on the phone anymore. And that's where AI comes in, because AI doesn't sleep. AI scales with technology, so you can have one person calling, you can have 100 people calling, you can have 100,000 people calling, and AI will be able to help those customers. This goes across a number of industries: aviation, insurance, retail, and many others. And we're really seeing these companies that have invested in this early on to really reap the benefits now, because they've made their experiences with AI, and they are creating amazing return on investment from these investments that they've made very early on.
And Philip, one of your predictions that stuck out the most to me, you said, is that one human could support 5 live customer interactions at once with AI agents doing the heavy lifting. How realistic is that and what has to go right for that to work?
Yeah. I mean, think about the traditional scenario. You have one human customer talking to one human agent. So that's a one-on-one relationship, right? And this human agent will not be able to support more than one customer because they can only have one conversation at a time. Now, when you put AI in the lead, so it's AI agents actually speaking with the end customers, they only need to reach out to human agents if there's something they don't know that they can't solve. Right? So the interactions that hit the human agents are far less than in the original scenario. So we are saying that with one human agent, you can now support 5 or more calls at a time. In chat, this is even more significant, right? Where these AI agents, they can communicate on chat, so on text, or they can communicate on voice channels. Now, the channel back to the human agents does not have to be the same channel. So you can be on the phone with an AI agent, and the phone reaches out via chat to a human agent, which allows the human agent to support even more conversations concurrently.
And so as AI takes ownership of more and more of the workflow, where does human judgment come into play? Where does that human interaction matter most?
I mean, it really depends on the processes that are relevant for each enterprise. Maybe it's a threshold of discounts, approval thresholds, etc. There are ethical considerations as well, right? Do we want AI to make all the decisions, or do we want to pull in humans to make sure that all the decisions are made on sound ethical foundations? And so it really depends on the configuration. You can pull in humans as much as you like through all these processes. You can automate 100%, or you can automate 20%. It really depends on the use case that you're trying to automate, and on the processes and on the regulations that exist for the organization that is automating.
And you bring up a really good point there, Philip, in this conversation we have about the AI-human interaction, about trust and accountability here, and it being ethical. As AI becomes a first point of contact for customers, how specifically are you building systems that are not just fast, but they're also accountable and ethical and transparent?
Yeah. So the way that we're doing that is we're treating AI agents almost like human agents, right? On human agents that have been systems for a long time that measure the performance, that make sure that human agents are saying the right things, that they're sticking to the script. And because we have all that wealth of technology already inside of eyes, we can apply the same principles to AI agents. So we can make sure that our AI agents stay on course, they can be trusted, they're giving out the right information. And so we're analyzing conversations as they're happening and also after they've happened, to then make sure what do we need to tweak in order to make them even more efficient. But the trustworthiness aspect is of course paramount, and that's where our systems excel.
And if 2026 is really the year where we see AI become essentially a coworker joining the workforce, how should CEOs and companies be preparing their organizations right now for this shift?
I mean, let's look at AI what it is. It feels like a magical technology, but in the end, it is a new type of user interface that we're using, right? We're all used to now using ChatGPT, Gemini, all these technologies on a daily basis, and we're going to be using those at work as well. But the only way that these AIs can really work and deliver benefits is through having access to the right data and the right systems, right? Taking customer experience again, you cannot ask for the status of an insurance claim if the AI agent doesn't have access to the systems that actually know the status of the insurance claim. If you want to rebook a ticket, a flight booking, you can only do that if the AI agent actually has access to the systems where they can rebook the flight. So what organizations have to get it right first, before they can embark on fully utilizing and fully automating with AI, they have to put the right data in place, or the right knowledge for the AI agents, and the right systems access. Because otherwise, the AI agents might sound smart, but they can't really do anything. And these organizations that have invested in this data and access layer very early on are now reaping the benefits a lot faster.
And when we have these conversations about AI and its place in the workforce, there's a lot of misconceptions that come up. So I'd love your perspective on what you think the biggest misconception about enterprise AI is that you think will be proven wrong in the next, say, 1 to 2 years.
Yeah, I think it's a good question. And so I think on the one hand, AI is vastly being underestimated. I think AI will help us create efficiencies at a much greater scale than many are maybe even thinking possible right now. So it's underestimated, but on the other hand, it's also overestimated, right? AI projects are still IT projects. As I said, you still need to get the data right, you still need to get the system connectivity right. AI is not a magic bullet, it's a silver bullet that just lets you handle everything automatically. You put AI in it and it just works, right? These are still complex and involved projects if you want to get them right. So in a way, there is too much confidence in AI, and then on the other hand, there's too little confidence as in the actual capabilities that AI has and will have. I mean, think about it. The AI we have right now is the worst AI we will ever have in the future, right? So it's just going to get better and better and better. And think about it. I mean, ChatGPT was only released around 3 years ago, and the progress that we as an industry have made in those 3 years is just staggering. Now I'll go 3 years into the future, or maybe even 10 years into the future, so that the possibilities almost become endless.
Philip, we appreciate you taking the time to highlight AI and its movement in the enterprise AI space through 2026 and your predictions there as well. That's Philip Heltwig, the Chief AI Officer at NICE. Thanks again for being with us. Coming up next, we have the disruptors. We'll be taking a look at Palo Alto Networks after it was upgraded. We'll have the news and an example trade next.
Markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Kane here at our Chicago headquarters. It's time now for the disruptors. Joining us today, Alex Coffey, our senior equities contributor, to talk about Palo Alto Networks got upgraded at Guggenheim. Alex, walk us through this note and if there's any other analyst action here.
Yeah, well, first off, I guess we should address this acquisition talk from CTEC. The details are limited, but CTEC's reporting that Palo Alto Networks is in talks to buy upstart Koi for $400 million. That's basically the extent of the details at this point. Most recent things I've seen that neither company had commented just yet, so maybe that information will roll in, but I haven't seen anything just yet. You mentioned Guggenheim late Friday, so this is going back before the weekend. They upgraded Palo Alto Networks to neutral from sell, not providing a price target. Now, the headline will say upgrade. I would say this is an analyst getting less bearish, because if you read the commentary within the research note, they talk about how the stock has significantly underperformed the major averages. And as a result, that makes it a little bit more difficult to make money in their mind at this time being short the stock. So they basically say they think Palo Alto Networks should benefit from the narrative as the largest pure play vendor in the security space, and that sector as a whole is somewhat insulated, if not even outright boosted by the threat of AI. Now, you mentioned there was another analyst commentary I saw from Piper Sandler. This isn't a change in rating, but rather a change in price target, and they adjusted their price target from 230 to 265. They have an overweight rating on the shares. They acknowledge that 2025 wasn't the best year for cybersecurity stocks, but they feel optimistic, cautiously optimistic, I should say, that a better year is in store for 2026. So looking at these as just more interesting valuation levels given that underperformance. reports.
Yeah, and interesting, this coin announcement, we are seeing a move almost to 3% to the upside with these notes and this potential announcement of another investment. But they've been on a major spending spree. They had their CyberArk announcement in July. That was, I think, $25 billion. We saw the Chronosphere announcement come out with their earnings. I think you were covering those live with us on Market on Close, and that was a smaller amount, $3.35 billion. But we saw them really tank on that announcement as well, despite their earnings and guidance beat here. As we look to trade them, knowing, in the last year, they're only up less than 1% in the last 12 months. How would you structure an example trade here, especially with the analyst notes and you pointing out, yes, it was an upgrade, but it's really just a slightly less bearish stance if you're really reading into them.
Yeah, if we got to take both the analyst perspectives and merge them together, maybe there's not a ton of opportunity for more downside, even if you're not a believer, but if you're cautiously optimistic like the Piper Sandler analyst, maybe something like a neutral to bullish short put credit spread below the market would present opportunity where you don't need the stock to be an outperformer, but rather the worst of it to be in the rearview mirror. And so with this, February 20th was the expiration, going out basically a month and a half from now, 175, 170 put vertical. Using the strikes is less about like a technical level, but more about trying to structure a trade where you're collecting about a third the width of the strikes to create roughly a 2-to-1 risk reward, and that's what we've accomplished here. So say you collect around $1.70, whether it's a little bit less, a little bit more, it just depends on real time. But that'll create a risk reward of about 2-to-1. You risk $330, Marley, with a chance to make $170 for every one of these spreads. And your breaking would be 173.30. So you have some cushion, again, if the stock does kind of get stuck in a rut, much like it did in 2025.
Yeah, we're seeing right now they're up close to 3%, again, trading at 184.63. Alex, we appreciate you being with us for the Disruptors today and for highlighting Palo Alto Networks and their moves today with those analyst notes as well. Coming up next, we've got our 360 round. We'll be taking a look at the state of air travel. Stay with us for that.
Trading at Schwab is powered by Ameritrade, unlocking the power of think or swim. The award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com. Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time.
with speed, accuracy, and precision.
I think one of the most important things is you're making a plate and a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. We bring in our panel to discuss the airline industry as we're into 2026. Joining us now, David Clement, the North American Affairs Manager at the Consumer Toy Center, and David Nelson, Chief Strategist at Bell Point. David, you both have the same first name, so I'll just refer to you by full names if that's okay. So David Clement, of course, starting with you. What's your outlook for 2026, particularly as it impacts travelers? What are your expectations for prices for ticketing and travel demand?
Well, I think airfare will likely remain fairly flat, but we're going to see the continued kind of class war between the airlines where they're really focusing on the perks for consumers, especially everything above the basic economy ticket, whether that be American or Delta or what have you. The focus now has really been on the extras. And so I think that the overall outlook on the sector and whether or not total airfare will go up, whether or not profits will go up, will be largely dependent on how successful these airlines are in terms of those extra perks that consumers are willing to pay just a little bit more for, and whether or not those add up to a healthier airline sector overall for 2026.
And David Nelson, coming over to you now. Sorry, you both have the same first name, so I'm just going to call you full names if that's okay. As far as the developments that we're seeing coming out of Venezuela, I saw the note that you put out this morning, and that you said you basically turned your previous predictions on their head. What's your outlook now?
I don't know if you hear me right now, but I lost your audio at this point, so I apologize.
Oh, it's okay. Can you hear me all right? All right, it looks like we have some technical issues there with David Nelson. So, David, I'll come back to you. As we take a look at you were mentioning the appeal for the premium consumer, and we saw that in all the earnings, that the premium traveler is really what's driving a lot of the revenue for these major airlines, and they're adding these perks for those who are willing to spend. Is there some concern that the more price-sensitive traveler could potentially pull the whole industry down if they feel left behind in this quest for perks and appeal to the premium traveler?
Yeah, I think there is some risk there, especially if there is any economic downturn. There's obviously a lot of discussion about trade disputes and the Trump administration and tariffs and whether or not those are going to have a negative impact, and if they do, when will that really be felt by American consumers? It is possible, one, that those kind of price-conscious consumers might feel left behind, but if the economy starts to sour, you're going to see travel for those types of consumers be really the first thing to go, because in many instances, for the most part, that travel is vacations you otherwise aren't taking and things like that, or even as businesses themselves maybe change their direction in terms of what they're spending on travel and airfare. And so there is a bit of the threat of those consumers being left behind, and then there's the overall kind of macroeconomic look at this in terms of, does the economy sour, and if it does, how heavily will the airline sector be hit?
And another thing we have to talk about, I know we're in a new year now, but the government shutdown doesn't feel that far behind us, and one of the biggest conversations we were having was about the air traffic controller shortage. So yes, we got the government reopened and the airports back open, but we don't have more air traffic controllers, and it doesn't appear that that's changing anytime soon. Is that another potential major issue for 26 in terms of airline travel?
Yeah, that's a big risk. I mean, the FAA has declared that they're making progress. I think over the span of the next 3 years, they're looking to hire around 8,000 new controllers. But as it stands right now, the vast majority of airports are understaffed, and understaffed below whatever the federal threshold is. And so, yes, they're going to be hiring 8,000 new controllers, but at the same time, they're going to lose about 6,000 due to things like retirements and attrition and kind of the natural ebbs and flows of employment. And so the gains on traffic controllers will be there, but it will be gradual. And we know the impact that that has on airline, on how the airlines are able to stay on time, because that is obviously something that consumers really are passionate about. I think about 77% of flights in the United States are classified as on time. But the airlines almost always, whether it's right or wrong, who take the blame from consumers when flights are delayed. And so we will see some positive movement on the air traffic controller front, but that is not going to be as rapid as needed given the current shortages the industry has.
And so now I want to move into this conversation I was going to have with the other David here about the developments in Venezuela. Markets are already starting to price in the potential for lower fuel costs, which obviously is a huge component. It's about, I think, a quarter of airline operating costs, and obviously can translate into lower prices for consumers. If that does play out as some are expecting it to, what airlines do you see benefiting the most from these lower fuel prices? Is it these legacy airlines like our Delta and our United, or is it some of the lower cost players like Southwest and JetBlue and even Spirit?
Yeah, that's a really good question. I think it's far too soon to be talking about the potential impact on oil and gas and how that spills down into the airline sector. Not because it's not a worthwhile conversation, but there are just so many details that are waiting to be answered about what happens next in Venezuela. But generally speaking, if the transition here in Venezuela does need cheaper oil, that will have a huge impact in the long run for U.S. airlines, because, as you mentioned, the overhead in terms of the costs associated with fuel are just so enormous. And so there could be a potential there not only for the economic benefits for consumers of lower oil prices, but that translated into opportunities for airlines to be a little bit more competitive on price. In terms of how each airline may factor in here, that one is, I think, tough at this point to really forecast who's better positioned, just because there are so many unknowns in terms of what happens next. But lower fuel costs for airlines would be a major win for American consumers, because at the end of the day, that's going to give the airlines more ability to compete and harder that competition beyond the perks and whatnot, is being able to be more competitive on ticket prices. And that's definitely a win for Americans.
All right, David, so since neither one of us got a crystal ball for the holidays, we're going to ask again next year. But assuming nothing changes, we don't have any of this uncertainty, what is your prediction for prices? Because I know that that's the thing everybody cares the most about. How much is the cost of my ticket going to change in 26? Is it the same? Is it lower? Is it higher?
I think it's probably going to be relatively flat. A lot of the analysts are saying that airfare is going to remain generally flat or stable. So in terms of whether or not it's going to be cheaper or more expensive, it really just depends on disposable income. So long as disposable income isn't negatively impacted, then that will be a great scenario for flyers in 2026, because if disposable income continues to rise, well, then the cost of the ticket, while maybe being nominally the same, will be a little more affordable. So my outlook here is relatively flat in terms of ticket prices overall, but again, with the kind of macroeconomic boogeyman of tariffs and trade wars, it feels like at any given moment that type of that forecast could change. But all things being equal, I'd say relatively stable going into 2026.
Well, David, we appreciate the perspective and you being with us to talk through the 2026 outlook for air travel. That's David Clement, North American Affairs Manager at the Consumer Choice Center. We're seeing all the airline stocks move higher today. Southwest up 2%, American 2%, Delta up 4%, and United 2% higher as well. That's going to do it for us on Trading 360 today, though. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store, and you can tune in 24/7 on SchwabNetwork.com. I'll be back in market on close at 3 p.m. Central, 2 Eastern, the fast market.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey Bob.
Hey Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize what can I pick up from my dad. He's been with Schwab for a long time.
Jim, my financial consultant at ProMed 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Investors move risk on to start the first full trading week of the year. Let's get into it with the check-your scorecard as we hit the lunch hour on Wall Street. You are looking at the S&P 500 higher by 0.8%. They're leading the gains. You've got energy, it's about net with financials, followed by consumer discretionary. Most sectors of the S&P 500 in the green. Albeit with a little bit of red. Utilities are the weakest of the bunch, but again, the gainers outpacing. The Dow's got a gain of 1.5%. We'll be talking again a lot about energy with Chevron gaining ground today. NASDAQ 100 better by more than 1%. Russell 2000 small caps catching quite a bit as well, matching the move on a percent basis that we're seeing in the Dow, up 1.5%. Here's the roadmap for today's show. We'll look at example option strategies for NVIDIA. CEO Jensen Huang gears up to speak at CES later today. Plus, the team from Lightfolio will be along with new sentiment data on AMD. CEO Lisa Su giving the keynote at CES. Broadcom is also on our radar. Now that we've got roadmap for today's trading action, it is time to bring in my co-host today. We've got Kevin Eames joining us live from the CBO, plus Alex Coffey, who is doing triple duty in our Chicago studios today. All right, guys, we've been watching these games on Wall Street. Global markets shaking off the news with the capture of Venezuelan President Nicolas Maduro and his wife. We saw a lot of the images happening here, downtown Manhattan, as you know, the moves around that happen. Alex made the point earlier that when we look at stories like this, it's about the financial impact. Kevin, what's your take?
Well, hello, Diane, and hello, Alex. You know, as a trader, I always funnel it down to how it affects the financial markets. And in terms of affecting the financial markets, it's not that big of an overall impact yet. Remember, Venezuela is less than 1% of the total crude oil output. And these moves, this turn in Venezuela is not going to be overnight. Remember, we live in a microwave world, so everyone wants things quick. That's why the main rally in today's markets are some of the service providers like Schlumberger and Halliburton and Baker Hughes, because that's what would have to go in first and rebuild the infrastructure of Venezuela. So the overall impact is just not that significant. It's more headlines and geopolitics and those things. How it affects the financial markets? The bigger effect on the financial markets today is the first real trading week of the year. There's always the talk about the January effect and bonuses and new money coming into the market. How it ends the week, I think, is what's really important for this market now, as we'll start getting some economic data with the payrolls number at the end of the week. So I think this is a great start to the week. I worry a lot more, Diane and Alex, where this market finishes the week.
Great point. I certainly noticed more people on the train this morning. I didn't have an option for a seat when I first got on. Was typical at the end of last week where people were back from vacation. Alex, what's your take, especially since you had the chance to hear from different voices about the impact of this headline event as it relates to markets?
Yeah, well, first off, guys, I always think these discussions are difficult, especially when you're trying to discuss it from a financial lens, just because it can seem emotionless in a very emotional kind of headline-driven world. But I think Kevin did a good job of sort of centering the conversation around the commodity impact. But if we even look at it from sort of a world power center and kind of global chessboard impact, Venezuela might be a piece on the board, an area of the map that's important for different reasons, but it's not one of the power centers. This isn't the U.S. and Russia going head-to-head, or the U.S. and China going head-to-head, or some other combination of those, or something happening like a European nation and Russia going head-to-head. If we were able to shrug off largely over the last several years a Ukrainian and Russian conflict that has far larger implications in terms of the polarity of the world's power centers, this just quite frankly shouldn't have a huge impact. That doesn't mean that there's not a humanitarian impact and all the headlines and the political and policy and legal impacts. That's a different conversation. But I look at VIX one day, it's below 7, guys. This is not only saying it's not an impact, it's saying, we're basically the quietest, market from a volatility standpoint as we've been in a long, long time.
All right, so let's get into it in terms of some of the isolated movements we're seeing. Kevin, earlier you mentioned Halliburton, but of course we're looking across Chevron. That's higher today, more than 5%. ExxonMobil's on the move up more than 2%. Citigroup on Chevron, they're maintaining a buy. They've lowered their price target to 179. What do you think when you look across these players?
Well, I think people are positioning themselves. Remember, Chevron is really the only country that still has a footprint in Venezuela. ExxonMobil, ConocoPhillips, they had relationships there, but they nationalized them. So they basically won an arbitration case, and they're waiting for some opportunity coming up in the future. Maybe that's why, at least for these companies, a new form of energy could be opening up to some of them. But, again, not going to be in the short term that this is going to happen. So when I look at the whole geopolitics of all this, it's this discussion on the U.S. and Venezuela is 90% geopolitics and 10% financial markets. Now, that said, the markets are picking out stocks that are moving based on this, but because sentiment is real. But there's no short-term bump to any of the profitability.
It's real.
Of these companies.
We ain't
It's
moved.
more,
God.
there could be good news coming in the future for
God.
some of these companies, or good trends going forward. Their situation certainly didn't get worse. They did get slightly better, and infrastructure will probably, do extremely well, because what I read, Venezuela's energy infrastructure is very poor, so that should help it out. But like I said, the number one thing I want to portray to our listeners is this is not an overnight issue. This is a year's issue in Venezuela.
Yep.
Absolutely, it will be years long in terms of, especially to point out earlier about infrastructure rebuilding, and so you can see that in the movement. You mentioned Halliburton earlier, SLB also rallying 10%. Chevron is clearly seen as the biggest winner when you think about the oil majors. What's your thought?
You know, Diane, earlier on opening bell, I had a really, really important conversation with Tim Quast from Market Structure Edge, I believe it was, around concentration and flows and the real dynamics that drive market movement. And I think this ties into what I was trying to say previously about this not having, and not expected to have like a real financial market impact. But when I say that, I'm really talking S&P 500 impact. And the reason being is we're talking about Chevron, we're talking about Exxon, and yeah, it has a real financial impact for some of these companies. But the entire energy sector is estimated at about 3% of the S&P 500. That's not even half the impact of NVIDIA. NVIDIA is like 7-8%. And so the question we have to ask ourselves is, when something happens, whether it's a geopolitical headline or a market headline, whatever it is, we have to ask ourselves, is this going to make money come out of stocks like NVIDIA, like Microsoft, like Apple, like Tesla, like Broadcom, etc.? Because even if energy is leading, which it is today, and they're having nice days, NVIDIA on its own can more than offset the entire sector that is the energy sector. And we think of the S&P 500 as this broad basket of names, but the reality is it's become a very concentrated index that's centered around these most important tech firms. And unless something derails money going into those tech firms, that's where the discussion begins and ends. So it's not that I dismiss these headlines because they're not important, and to Kevin's point, they certainly have a geopolitical impact. But unless it changes the thesis or the flows driving into some of these tech names, and unless you're directly invested in some of these names and you're a stock picker and you're looking for those opportunities, another discussion, the vast majority of assets are passively invested in indexed following products. And then those index products are tied to these Magnificent Seven names.
Okay, great point. And I know we're going to be talking tech a lot throughout today's show. We'll get into NVIDIA, we'll get into AMD, et cetera later. Let's quickly pivot to a crypto name, Coinbase. It's got a new bull in its corner. Goldman Sachs upgrading that exchange to a buy rating from a neutral, shares rallying more than 7% right now. Kevin, what's your take on this one?
Well, I think when you look at, remember, my whole thesis on Bitcoin is it's getting more popular and more accepted at more places. And remember, if you look at Coinbase, which makes money off buying and selling of Bitcoin, they've had a pretty violent sell-off from the 440 level down to just slightly below 250. It's having a great day today. But it started the day below 240. So, this stock is almost in half from where it was. So, yeah, a little bit of a long-term play. Remember, it's probably going to move with Bitcoin. the upgrade by Goldman Sachs probably helps in some of the momentum, but this is a momentum trade to begin with. So the overall softness in Bitcoin the last few months has certainly taken its toll on Coinbase. I mean, so we saw Monster was higher this morning on a 17.4% drop in some of their income levels. So I think this is just volatile. I think the stock has sold off significantly the last 3, 4, 5 months, and now it's starting to recover a little bit from there. But get ready buckle up for more volatility from these names, because they're going to move on pure speculation. But acceptance, more and more acceptance makes them, more eyeballs on these. It's probably good for the overall movement of some of these. But yeah, looks like a nice bounce off the lows here in Coinbase.
Yeah, listen, last year was rougher than expected for, those who had all these high targets within the crypto space, and Coinbase was one of those that was impacted by the downdraft that was happening there. What's your thoughts?
Interesting, because as this space matures and more players enter the space and more widely available ways to get involved in things like Bitcoin become available to the general public as well as institutional, that may actually not be positive for Coinbase, but at the same time it may bring more and more eyeballs and interest into the asset that's so important. So for now, I'm watching that correlation, as Kevin talked about, to the asset itself. And over the last 3 months, it's 0.98. Over the last year, it's in the 0.8-ish range. Over the last 3 years, it's 0.9-ish. So there's still a really positive correlation between Bitcoin's performance and Coinbase's performance. And if we want to start making, the argument as to, where else is there potential geopolitical volatility, perhaps things like gold and digital assets could see, windfalls because of the instability on the geopolitical front. Now, could be a stretch, but if you're looking for impact, I think it's easier to make the correlation to these assets than it is for the equity market.
Okay, let's talk a little bit about tech. You were leading us there earlier. Let's get into it. AI demand is certainly not letting up. That obviously bodes well for Foxconn. Foxconn reported today that fourth quarter revenue jumped 22% from the same time a year earlier. It's good news for NVIDIA. It's good news for Apple. Kevin, what's your thought?
That's not good.
Well, you're right. The good news is, but as we came
good
up
news.
here, I don't know if you guys noticed. I'm sure our viewers have noticed. NVIDIA just sold off sharply, and this whole sector looked like they're down. I mean, Oracle's not down, AMD down, and if you look at the 1-minute charts on NVIDIA, pretty sharp sell-off from about 11:50 New York time to now. So
yeah, I'd be careful.
Watching these names, I'm trying to figure out if something got announced or something. Remember, CES starts today. We're going to talk a lot about that throughout the show. Maybe if there's headlines, I don't know, but listen, I still think Jensen Huang is going to speak this afternoon. I think it's 4 p.m. Eastern time, and he's going to probably say some glowing things. Remember his past comments, demand is insane, and things like that. You don't hear that very often from a CEO. But I just think this might be a really volatile week for some of these names because of CES. The paper money trades I put out in the show today will show that. That's the way I feel, but I expect movement. You're already seeing that on a lot of these names. So, yeah, I'm watching the price action, and I'm real close, watching for headlines as CES comes out. They could be good, or as often happens in these, when you're expecting something to be good, you're easily disappointed, Diane.
Uh-oh.
Yeah, it's a good point. And
not easily. Just commandably under someone else's control.
So it has had
Ain't that right, honey?
tendency to still sell off. So I did see that. I noticed that because earlier it was higher, now it's pulling back.
Washboardjim knows his shit.
Yeah, I think that there's still the general pressure of larger money within the market is rotating out of some of these winners. We saw it with names like SoftBank reallocating some of their investments into different areas of this AI trade, and that's going to put pressure on the NVIDIAs of the world. But as Joe Mazzola highlighted earlier on opening bell, there's still an interest from the retail trader into some of these names, and that tug of war continues to kind of have some of these names relatively range bound. To Kevin's point, perhaps we're on the verge of some sort of a breakdown or breakout for some of these names one way or the other. As far as this headline out of Foxconn, though, Diane, to me this is, one, the AI demand, but also illustrates
so now
there's probably still a fair amount of demand.
We broke below support for the first time, and that was the 63. We touched it once before and once before, and come close many times. Not many, but many. Not many. Just a many. What's he talking about? What's wrong with that man? I'm here. Well, NVIDIA did take a good sell-off. Meta did not. I see my NVIDIA is down. Washboardjim asked me to come in here and talk about my NVIDIA.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Shares of NVIDIA are pulling back after initially gaining ground today, now sitting at around $187 a share. This comes ahead of CEO Jensen Huang's speech at CES set for later today. It's being called a, quote, special presentation. Now, analysts are still bullish on the stock. UBS reiterated its buy rating even after a more than 35% jump in shares last year. The question will be, what are its ambitions this year, and how long can it maintain a stronghold on AI? All right, let's gear up for the tug of war on NVIDIA, and welcome back in our co-hosts, Kevin Hinks and Alex Coffey. It is bull versus bear time. So before we get to your example trades, we've got to talk about your take on NVIDIA. I know we kind of teased it a little bit earlier, going through, kind of thoughts on the state of tech.
It feels like obviously a lot of eyes are going to be on this presentation today. Alex, let's start with you. What are your thoughts for NVIDIA?
Yeah, I mean, it still seems like the primary stock to look at when it comes to the overall market. It's the biggest weighting in the S&P 500. It's front and center of this AI trade. It's got the dynamic leader who's taking the stage. That could be a positive or a negative catalyst. But what really stands out to me is there's been a couple moments it's felt like over the past several months, really going back to the beginning of November after this stock made a new all-time high, where, you know, the stock was kind of on the ropes for a short period of time, and every single time buyers stepped in. And so at some point, the selling will dissipate if all else, kind of continues on this trajectory, and it's basically, set for a continued rally. There's a, pretty stable demand that continues to come into these shares, and so once some of these bigger money players, stop rotating out of it, I don't see what stands in the way for this company in the medium term. And so, all that being said, I look at this and say, it's weathered every storm and it's passed every test, and we start the year, with maybe a little bit of weakness, but all things considered, it seems like another really, really strong year is maybe in store for
Really.
There's a prediction market for everything. Kalshi has a prediction on what will Jensen Huang say during NVIDIA CES. They say keynote. Now, Lisa Su is being billed as the keynote. His is being billed as a special presentation. Kevin, what's your thought when you think about NVIDIA ahead of your example trade?
Well, just look. Think of, my view on this stock going into the new year is it's going to move. And I don't know which direction it's going to move. And it's already got a $6 range today. It traded as high as $193.60, and now it's down. And so I think Jensen Huang, who's going to speak at a press conference today, where he's going to release a bunch of their, talk about their products. He's also on stage tomorrow with the CEO of Siemens. So he'll be doing 2 different appearances at CES. But here's the comment. Latest solutions driving innovation and product across industries is what he's going to talk about. He's expected to lay out the next phase of the AI strategy. As you know, Jensen Huang likes superlatives when he's talking about the demand for NVIDIA products. I don't expect him to give a downbeat presentation, that's for sure. So that's coming up in the next 2 days. But this stock has moved, and because why? When expectations get big, and as you know, right now it's got a market maker move. So front expiration implied volatilities are elevated. So the overall market is either going to really like what he says, or if their expectations are incredibly high, it could be disappointed. So what I suspect for NVIDIA and a lot
we got some solid support down here by the 200.
Okay, speaking of movement, let's get into these example trades and what your movement is that you're looking for. So, Alex,
We have some solid support by the 200 SMA down here on the 1 minute.
This stock could make another run of its all-time highs, especially into the AI kind of earnings cycle, which AMD will kick off at the early parts of February. I looked at a call butterfly spread centered around 210. I use 210 as sort of a proxy for the all-time highs. It's just above the all-time closing high. It's just below the intraday high. And so if you use that as sort of the proxy, $15 wide, $3 debit expiring January 30th, so sort of right at the end of the month. And it basically sets up a window between 198 and 222 where this can be profitable. To some extent, with the best case scenario being going right to that 210 mark by the end of this month. If that happens, a chance for this to expand to as much as $1,200 in profit. But most importantly, Diane, this is a bullish strategy looking for a test of those all-time highs and looking for that to happen by the end of the month.
Okay, Kevin, what's your thought on this one?
The call butterfly is something we talk about a lot on this show, and we like it because it focuses on a target, right? And Alex's target is where he wants that stock to go between now and January 30th expiration. So sometimes we complain about butterflies because you have to be too perfect.
What's that 200 net VWAP right here? This one being the 200.
If you're right, then these things can really pay an
SPY. So right now we're vulnerable. Did I say that word right? Yes, James, you did very good. I think you don't have to stay after class today. Dadgummit, that's right. And the VWAP. VWAPs. $200 SMA. Now it crossed over the VWAP, so I'm putting all this information into my RAM on the sneaky snake trading strategy. Okay, you're ready. Are we going to hold the support level or are we going to break it? That's the question. Now, I have two options here. I go in small once we hit the 200 SMA, or are we at a correction spot of the day? Are we definitely at a support level? These are very strong. The SPY with the /ES and the 200 SMA on the 1 minute time frame. We're making decisions. We don't want it to reverse here. I feel sorry for that girl. Went over for a date, a blind date, and his mom was there. Oh my God. Oh, I'm his mother. Come on, one more real red candle. And see if patience waits. They want it to turn now. And I say that's rookies. Unless the fat cats are back right now. They've been on vacation for a couple weeks. We've had Thanksgiving, we had Christmas, then we had New Year's. People are just now getting back to their desk. Handing out the big fat bonuses. Man, my bonus was chopped 35% last year. The hell? We're still not bullish yet, but we are showing some signs of it, which we've done this before. Here was the most, but right there was a good sign. This was barely a sign, but next candle came in. I would not have expected that the red candle. Now see, here we go again. So I'm getting ready to make a business decision. We're at the 200 on the /ES. I mean on the, yeah. You did it right, man. Shit. Okay. These are the 687s. Or it should be 78s. The 688s. At 78. Okay. Crowd's going wild here at Sports Arena. Right there. 78 cents. Prepare you in the name of the Lord. Oh, going to the next day. I about made the mistake. That would have sucked. On the 6th, the 689s. There we go. Okay, I'm watching the Spy, Lotto, Strike, 689. Not a Lotto. Oh, God, Jim, they're going to screw it up. Oh. This is January the 6th. Excuse me. How'd you do that? Oh, January 6th? How about this, James? Oh, God. That's not cool at all. Not cool. I don't know, man. It seems like it's pretty tight. I'd be careful. Because we're still bearish as long as we're under the 63. And we're kind of squeezing between the 9 and the 63. We could easily just drop down and kind of bitch slap the 200 here and then bounce back up. So if you're able to have patience and see if it was going to go and go below that 200 or hit that 200, I'd wait. Does that make sense, Yay? Confirm, Jim, that does make sense. It kind of looks bullish here, but we'll find out. It's just that time of day, 11:37. $124. $124. Didn't want to break 63. Always clean. Hello. Hello. Hello, baby. Oh, Mr. Hickey.
And again, movement. Already, AMD today, ahead of Lisa Sue's keynote address, has got a $12 range.
Oh.
So, like I said, this could be, she's probably going to give a very glowing report, but the expectations are going to be high. And what we see in this business is the reaction if they're disappointed. Everything trades on expectations versus reality. So she's probably going to update the Ryzen CPU line. They also host an AMD Connect.
I'm depressed.
So
Come on, man.
more things, but this is a really great place to showcase your company and their products. So the presentations will all be real positive, but the expectations are high, Diane. So just like, again, going with my theme right now, because you look at the one-year chart on AMD and
Spy, watch out. Be careful.
from 76. So it's got a $12 range already today. So the same makeup of a trade I did in NVIDIA, I looked at in AMD. But this time, I looked at the expected move out to January 30th, and the expected move for AMD, about $24. So about $8 or $9 more than NVIDIA. So I looked at the, again, January 30th, bought the 245, 250 call vertical, and bought the 205, 200 put vertical. So again,
they're at 114.
long iron condor, playing for movement.
Go get my coffee.
Theta on a daily basis that hoped for it to move either to the 250 level or down to the 200 level, right? Think about it. My short strikes are 250 and 200 with a $26 expected move. I think I said 22. I'm sorry, $24.50 expected move. That's basically right in the range of where my short strikes are. So the good news, this debit, only about $2.05 is where it's trading right now. So that's the risk on this trade. If it were to go to 250 or to $200, this $2 iron condor, long iron condor, would turn into $5, Diane. So again, when you're long iron condor, the risk is only what you pay for the iron condor, and then you want one of these spreads to go to full value at or around $5, and it's $3, about $2.95 of
make up your
potential
mind,
profit.
old man.
And again, the risk is the debt you paid on this spread, Diane.
All right, that's an example trade there for AMD. Well, sticking with the tech theme, coming up, we got breakdown. We are taking a look at Broadcom today. That stock has been under pressure, even amid some of the gains that we saw earlier for NVIDIA, for AMD, although those are a little softer right now as we hit the lunch hour. We'll be right back with the breakdown.
Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
head over to schwab.com/coaching and start learning today.
Makes perfect sense.
Welcome back, Fast Market here on Schwab Network. I'm Jackie Hall live on the floor with the big board. Before we get to the breakdown, I'll give you a check on where the market stands as we get closer to the bottom of the lunch hour. We still got gains on the board. The S&P 500 right up by 0.75%. Dow still rising more than 1.5%. The Nasdaq 100 9%. Russell 2000 matching the move that we're seeing essentially in the Dow.
130.
0.6%. Now, will the winners of 2025 be the winners of 2026? One of those among the chip makers was Broadcom. Will that streak continue this year? Many analysts argue that it should be a member of the Mag 7, while NVIDIA has been gaining ground today. Broadcom taking a back seat. It's down more than 2%. Most analysts are in the buy camp, and none argue that you should sell the stock. Joining me now for the breakdown here at the desk is Sam Fadas for the fundamental look at Broadcom. So Broadcom, they say it should be a member of the Mag 7. Needs to boot somebody out. It's a little weak today. What's your take on this one?
Well, maybe it could be 8. I mean, who knows? That's what they're saying, aren't they, Diane? But yeah, look, it is under pressure today. There doesn't seem to be any sort of obvious news pointing to why, other than obviously we've been watching this rotation out of some of these sort of pipeline tech stocks, what had been doing well last year, some of the rethinking, particularly around financing, some of the guidance. Obviously, there was some questions off the back of its earnings report, despite the fact that it was good last quarter. We got that.
Oh yeah, 131.
We saw that sell-off post-earnings.
NVIDIA.
We are seeing some of the steam coming out of that.
She's talking about Vodcom, AVGO, and we're talking about SPY. Now you're at 129 right now. You're up, Jim. You're up a good percentage. You're up 20%. Have you ever thought about selling? You do this 5 or 6 times a day, 20%. I mean, now see, you're yakking and talking right there. Just lost you $4 a contract. They're now at 125. I think I'll go ahead and hold these for a second. See if we hold this position. But it's at that time of the day where you got to think, oh gosh, the momentum's changing. Stay in the trade, please. Okay. Just try to get him to stay in the trade. Stop. January 6th.
I mean, you've got a couple sitting on the fence here, but you do have the majority of them, the cohort of the analysts that cover this stock, I mean, talking about a buy or even a strong buy. So, you know, we are looking at this stock being up over 40% over the last 12 months. It's had a very, very impressive run. But, yeah, we'll just see how things shake out in 2026, because, of course, we've got that latest report. It did look good. The fundamentals look okay. What seemed to be a bit of a worry, at least for investors, is that they seemingly wanted a little bit more. They seemed to be a bit cautious on the call. They did seem to have a bit of a vague tone on that call as well, particularly with respect to confirming the big customer, which was Anthropic, and that $11 billion order, but not giving investors that much more as far as the clarity of the payoff here. And that's really what the market is asking right now. What is the ROI? It didn't give a revenue forecast for 2026. It's been hard to pinpoint. This is according to Top 10. Because they basically just say that they don't have enough visibility right now. They say that things are a moving target, so they don't know what things are going to really look like. I mean, you've got to give them credit for being so honest here, but the market doesn't have any room for disappointment. And I suppose that seems to be what's really driving it as far as, you know, the overall trend we've seen in Broadcom.
I remember that. The interesting thing I saw in this Goldman note about, you know, where its conviction is that some of this was supported by recent Asia tests.
Okay, what's my SPY?
picture there looks like it's strong. And
It's
so
flirting.
It seems to be the view that the street is underestimating the further upside in Broadcom. Any other thoughts you want to add as it relates to either Goldman adding it to its top picks, or what you're seeing from other analysts?
You raise a really interesting point about Asia, because even Ben Evans came out with a note the other day, and as far as the outperformance we've seen, last week in sort of technology stocks here in the US, Diane, that had largely been driven by a lot of the sort of bull case in artificial intelligence stocks over in Asia, and so we have seen things like the South Korean coffee, rallying hard on a lot of these kinds of names. The Japanese markets as well performing very well. China is going for obviously
China.
Reliance push as well. So things are moving in that direction, and so there is a big bull case for technology over in that region. But it's also interesting, I was reading through some of the commentary, some of the reporting as well. Barron's made the point that with Broadcom it is harder to forecast than peers like NVIDIA as well, because of the fact that it designs its own custom AI chips.
You said NVIDIA, or it wouldn't be?
Relying on very much their development schedules as far as that dependence is concerned, and the most important work, obviously, as we know, is with Google, and they are working on the TPUs, and that's where, obviously CS
Say
is
NVIDIA.
really interesting this week as to what they're going to be saying about the GPUs, the TPUs, and how they look at things moving forward, particularly with the use cases as well for the stack.
Yeah, it'll be interesting to see how many robots we see line up at CES, right? And find out potentially for, who's going to be center stage now and in the future. All right, we'll leave our conversation there. That is Sam Bidas, host of Morning Trade Live and co-host of Market on Close with a breakdown on Broadcom. All right, let's get Kevin back in here for the example trade purposes. So, Kevin, you've been watching Broadcom, not just obviously today's move, but in the context of NVIDIA and AMD, what's the approach you're taking for the example trade?
Yeah, this is another thing, Diane, that, yes, all the news is good. They came out with good earnings.
Good.
The stock is still down about $75 off its recent highs, and now with a 50-day moving average around 361, it's about $21 below its 50-day moving average, and it looks like it could be on the verge of breaking down here. So how do we look at that? Well, again, if you think an iron condor is the right trade where you're playing for movement in either direction, that's kind of the theme of my show today, Diane, and that is, this is the iron condor is something where you pay daily decay to buy an out-of-the-money call vertical and out-of-the-money put vertical. So in this case, again, I went to the January 30th, I looked at the expected move. This is the biggest of the three, almost $32 expected move out till
That'd be great.
30th. So
You'll figure out how to you can trade like this every single day.
360, 370 call vertical.
You never have to worry.
I bought the 320, 310.
I do good on my strategy, but
$60 difference between those short strikes. The long strikes are only about $40 difference. So you're looking for a move. The difference between this and the other two, this is a $10 iron condor. So a little bigger, bigger chance, bigger profit, but also bigger risk. The theta you're paying here is bigger than the other ones. You're not looking for a range-bound trade, Diane. So I paid about $4.95. One of these spreads, either the upside call vertical,
689s are at 117.
You want to go near or towards $10, Diane. This is another case, which is the theme for today's show. Movement is you want it to go towards one direction. You don't care which direction. You just want it to go. You don't want it to sit in a range, Diane.
I did notice your theme today. It's not just a choose your own adventure, it's a choose your own iron condor. All right, that is on Fast Market. I'm Diane King Hall alongside
Diane,
once again, our thanks to
you dog.
Alex Talking for stepping in today. Download Schwab Network app, available in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around, we've got Next Gen Investing with Alex Talking and Jenny Horn coming up.
Jenny Horney will be in today.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize what can I pick up from my dad. He's been with Schwab for a long time.
Jim, my financial consultant at ProMed 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I care. Let me manage it.
Actionable data and market-moving analysis. Schwab Network connects the headlines to the why.
Nate Marley will.
Watch free 24/7 at SchwabNetwork.com.
You start a new business.
Welcome to Next Gen Investing, and of course, Happy New Year. I'm Jenny Horn alongside Alex Coffey, and we are seeing some strength to kick off the first full week of trading of 2026 as we are seeing some pretty nice gains today, led by the Russell, which is up now 1.6%. The Dow is also up, pretty considerably today, up 1.6% as well. The NASDAQ up just shy of 1%, and the S&P 500, our smallest gainer of the group, but still up 0.8%. So a firm green day that has not really wavered at all, despite, of course, geopolitical tensions and the headlines we got over the weekend. So, Alex, what do you make of this market to start off, of course, the unofficial 2026, because this is to be the first real week of trading of the year?
Yeah, business as usual. I think if we were to close here, we have maybe 2 sessions that have closed higher. I mean, we're essentially at all-time highs. So risks, headlines, concerns, earnings, new year, whatever you want to say. What do they say? Ball don't lie. I mean, market doesn't lie here. We're basically at the highest point we've ever been.
Is that what they say?
Ball don't lie?
I'm sorry, incorporating that in my vocabulary. But yeah, I will say that I know that the reading from the markets has been definitely a point of discussion, especially because of some of the, of course, tensions between the United States as well as Venezuela. Of course, getting reports over the weekend. But all that being said, the market is not the economy, and I think this is the freshest reminder of such. I mean, this is We saw a lot of these names with the influence of crude oil spike on the news, and they've since pared back some of that strength. And I think it's a good reminder that yes, the stock market is not the same thing as some of the geopolitical fray we see happening around the world right now.
Yeah, that's a good point too. And I made this point a couple times, whether it was on Opening Bell or discussing things with Diane King Hall on Fast Market with Kevin Haynes just about half an hour ago. You know, geopolitics, all these things, they stir a lot of emotions, especially the headlines. And you can have a discussion, whether it was a good policy decision or smart politically, or you could debate the legality of something like this. And there's an intersection between all of those, right? But when you're assessing things from a financial market impact, I think there's sort of two ways to look at this. And one is, the commodity impact given the countries involved. And so crude oil naturally comes to the forefront. I thought Kevin did a good job, and you discussed this earlier with me as well on Opening Bell, about like the limited impact short-term wise, and then maybe longer-term impact. You could make the argument that if maybe going to bring more supply online, and it could be net positive for some of these energy companies. Whatever. I mean, those are discussions to have. You can also have the discussion about, okay, what does this do with sort of the instability of sort of the power structure of the world? Well, I made the argument like, if the market was able to rally through, a pretty major European country having a conflict with objectively one of the biggest power structures in the world, being Russia, like Venezuela and the U.S. having a conflict is not net bigger of a conflict than that one. And so when I look at that, it's like, yeah, there's the impacts, and there'll be sort of the, just simply emotionlessly looking at this from like a geopolitical, realpolitik, global chessboard, power structure conversation, there's impacts, right? Things move around, there's conversations that will have behind closed doors between countries, and then you have the emotional impact. I get all of that, but I'm not surprised that there's not much of an impact here. It was relatively swift. Again, the nations involved not being two of the major power hubs. Yeah, it involves one in the U.S., but the other is not China, it's not Russia. And so there's going to be short-term limited impact. But the biggest discussion is, yeah, it's having an impact on energy. You see it in these energy stocks. But I said this, energy is like 3% of the S&P 500. NVIDIA on its own is like 7 or 8%. And unless you can explain to me how this makes a net negative or net positive impact to NVIDIA, Microsoft, Apple, you know the list, the Magnificent Seven, plus Broadcom,
we're at 124.
Anything about the financial markets.
Okay, and I think that a really good point, I think especially because of the fact
Randy, I'm in SPY right now. James Howard. It's kind of, I mean, we've had a real good run on it today, so it's kind of just, I think it's only scalpable. We'll get, I think we're going to know something here if we get a big old little bitty candle, or might sell it at the pop. I sell it now for a big whopping $10 a contract. For $122. Or I wait. There's Jenny. I would say she drove appropriately today. She needs to fatten up. There's a drop. She needs to fatten up. It's gross. So the SPX is at the 200 also. Still have a chance. It's not over yet. In fact, I might get crazy here. It's a big deal right here on the /ES and the SPX. What's this here? Do. They're now at 112. They better do something. So we can drop pretty good. Oh, there it happened right there, just like that. Just like that. I'm just getting ready to say it. But I was going to say minute. It happened right then. These are the 689s are at 110 right now, 109. They hit down to 108, I think. And we could still drop down and hit the VWAP, the 200 EMA. That's right here, the 200 EMA. Pay attention there, young man. God doesn't know what to do. They're at the sports arena. Washboardjim's going to type in 200 EMA right here. Now we have the 200 SMA. And we have the 200 EMA. And I'm going to be typing in the 200 EMA. Whoa. And that's where I'll double up. If that's what happens. Right now I'm definitely bearish. Now you get out now if you're nervous. The 689s at 112. They're now at 113. I mean, push that sell button if you're nervous. 118. I think if we break this, what's a 9, we really don't have much, we have a little hope. Triple top break. It's a 2 out of 10 chance of happening. 1 out of 10. You gotta be kidding me. 1 out of 10? Are you, what? How in the heck? Why'd you do that to me, Washboardjim? Man, come on. I don't think you should be so hard on someone. We get up there and get up to that triple top and find some resistance. Or we sell it now at break-even point if you got in at the 112 or below. But you do have a chance. This next song I'll be writing will be what not to take when you're in a trade that's about ready to break out. So, first thing off the menu will be chicken livers, mussels. We have to take them off, and fried worms. Break out. Yeah, shoot. It's taking a little bit too long. Oh, there we go. 117. What did I miss? Whoa. Okay. Yeah, I don't trust nothing in here. I can easily come back down here and touch this 200. Easily. I mean, it looks pretty, but it ain't pretty. We'll know here in a second. Oak. Smart. There he is. Well, we're riding the old 689. That old coal train, riding down the line. Oh, now it starts to dip when I start to sing. The old freight train 689 is now pulled back to 110. I said we would pull back some, but I'll never say it again. That's the Orb 680, 783. Where is the chop zone? Boy, you'd have to say that 687.78 has to hold here. That's that orb that we made this morning, the resistance. 687.78. Oh, you stupid moron. Well, we didn't hold it. We're close. A little bit below it, where we stopped. Now we're above it. Well, I'm stuck in a puddle of blood. Break me out of this harmony. Candlestick pattern. We've got a 1 minute tweezer bottom off the orb. Off the orb. Let's build a foundation. Appreciation. Sensation. Come on now. We need to add it here, I think. Add to my position. If I want to take a chance. This is triple bottom. Okay. Not there. We're definitely holding up. It'd be nice to see this thing break out. Well, the last couple Mondays haven't been very nice, have they? I don't think they have. I remember last one real bad. I was kind of God. We're at 97. Says it wants to break out, but I don't know. It's kind of had a pretty good bounce. I looked where I usually keep my guitar and I said, man, my guitar's not there. No, not this one. Oh, that ain't good either. Okay. Back at a buck. That'd have been a pretty good investment. Yeah, I think that would have worked. They got me back to even right here. Yeah, that would have worked real well. And that's it, done. I'm done. We're now at 106. We're now at 106. Oh, Dario, we're now at 106. Now this would be a different strategy. If I was to go ahead and sell them now at 106 and maybe think that we would have a pullback. And then buy them back on the dip. Or I would just hold my money and wait for the dip, not sell them. That or I'd sell them and get out of them even. Or I wait and hold it and see what happens and take the risk. I think there'd probably be 2 options I'd trade on that one, 3 of them, but definitely would hold them and wait and buy the dip if I felt bullish. Sell them and get out of them even if I had been in it too long and just not working my way. That or sell some of them. Or sell them and then buy the dip. And then try to regain my little loss that I made. But I'm up. But not on this one. So those are the options. They're now at 102. Adobe, ADBE.
As we said, though, we've underperformed the broader software and tech world in Adobe shares. So walk us through this chart here, Rick.
Yes, underperforming a pretty weak sector, the software sector.
It is, ain't it?
That's an important point because we did have that pop initially after earnings. You can see that that was right here, this area with our white dashed vertical line here. That was the earnings move. As often happens, though, after the initial fireworks died down here, we saw that we retreated back to a supportive area. This green line right here marked an old significant low near about 333. You can see that was where price hit other notable low points going forward. Now we find ourselves at that situation once more. We hit some lows near 311, 312 or so, but for now we are managing to stay at our 333 supportive level before that next leg to the downside. For now we are also below our trend line, our white trend line here, going down across these highs. Our shorter term upward sloping trend line in white has been broken, but we are still seeing that corresponding downward trend line in play. When we look at our moving averages next, we can see that our faster 5-day EMA is starting to outpace the slower counterparts here. So the fast moving average crossing below its slower peers is a sign of trend degradation of acceleration to the downside here. So further bearishness potentially, despite our upward price action today, what we're seeing right now.
Thank you very much.
Notice as well that RSI has crossed below the 50 midline here, which also provides a shift in momentum here.
We're now at 112.
Significant close below that 50 midline, so that would also be perhaps some more evidence of a bearish trend change. When we look at volume profile, the other fly in the ointment here, so to speak, is
fly in the ointment.
Control the very heavy trading activity area.
That's a good point.
Established at these lower levels after a brief dip to the downside, it was looking like the bulls might reclaim.
Is anybody in the SPY?
Push above once more to that heavier volume area near 385, but it was not to be. 353 is the point that stands out to the upside as a potential resistance.
Anybody in the SPY?
Trading activity area that price failed to retake.
Even today, underperforming, I mean, like the overall market is we're pretty much now just unchanged on the session in Adobe shares. So appreciate it to Rick Cat for that tactical breakdown. But now, as we do think through trading Adobe for example purposes, Alex, walk us through your thinking.
Yeah, it was a tough year for Adobe.
We're now at 112.
We talked about the questions that surround this name from a fundamental standpoint, given the innovation in AI.
And here we come up to the 1, 2, 3.
On that,
You shut up. I'm speaking right now. How dare you? Calm down, Jim. He's just Alex Coffee. Now you're at 115. Now I'm at $1 and 112. So what would you do? Jim, I'm nervous. I wouldn't know what to do. I'd probably slam my brakes on. You take profit, is that what you're telling me? At the ad or the bid? I want to get out fast. So you sell it at the market? Yes. I tried to tell them and nobody would listen. There's 112. $112. Jeez. 113.
track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me, with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for FOMO. We're discussing Coinbase today with, of course, Marley Kate, host for the Schwab Network. And I think coinciding with a very important move, and that's the nice bounce today in Bitcoin futures, which I know they're trading in tandem, correlation oftentimes. It's not a perfect correlation, but walk us through the analyst dealings, a lot of the headlines that are driving the upside today, because Coinbase outperforming even nicer than Bitcoin is today.
Yeah, and obviously that's a part of the boost that we're seeing is this crypto rally that we've seen since this weekend. But a lot of it coming from this note from Goldman Sachs. They've upgraded them to buy from neutral for Coinbase. They've got a price target now of $303. That's up from $294. The price about 30% upside here. They're saying that they anticipate strong growth in cryptocurrency.
That's interesting.
Primary things that they're citing within traditional finance. That's why we're seeing shares of Coinbase up, more than about 7.5% right now. That's their move right now. They're saying also that the underperformance from last year, with the stock down close to 10% through 25, created an attractive entry point for investors. So several things they're mentioning in this note. They also said that recent product launches across their
No.
taking wealth and tokenization.
Did you mention that?
Of their core business, and they also added that, quote, its growing exposure to crypto infrastructure through its subscription and services offerings should dampen earnings volatility over time, which has been one of the times where we started to see some of that decoupling from the crypto prices themselves. They think that should lessen. Now, the subscription and services segment is mentioned several times in the note. That includes things like custody, stablecoins, staking, prime brokerage. That's expanded from about 5% of its total revenue back in 2020 to about 40% of its total revenue in 2025. They also say they continue to expect growth of about 13% annually up till 2027 as the crypto ecosystem evolves beyond trading. Obviously, regulation a big part of this.
I don't see nothing.
Banks as well. Goldman says all these points will enable more stable revenues and expansion into retail markets. Those integrations will be key for user adoption and retention in 2026. So all in all,
we're at 117.
Also boosted by this
Whoa.
we're seeing in the crypto markets.
Yeah, well said. And
We're at
I wanted to
116.
illustrate that it was a lower correlation, but it's still.
So I'm at 117 right now. All I gotta do is push that sell button and they're gone. I mean, they're gone, man. It would be nice to see some people pile in right here. I don't think that might not happen. And again, the pussy chicken out. Not cool, man. They're not cool about that at all.
That integration within traditional finance is really what is going to give Coinbase the edge. While you say yes, they could create greater competition, it is being cited by Goldman as a best-in-class play. Clear Street released their top 3 fintech ideas. Coinbase is in their top 3 alongside NASDAQ and S&P.
Coin bounce this morning.
2 other huge names here.
Mr. pulled back.
She continues to acquire Coinbase shares across all of her ARK funds. I mean, there are some big
Broadcom,
players who are also supporting
Google.
and echoing the same sentiment as Goldman here. And it never hurts that it's happening at the same time as a crypto rally for the weekend.
Oh,
It sure doesn't. It doesn't
good
help.
point.
I mean, it doesn't hurt, I should say, that we're seeing, I mean, just also this like renewed optimism in Bitcoin. I feel like we start every year like this. I know there was a lot of fears with the crypto winter, but I feel like we were way too early to make that call because a lot of times that winter can come in the latter parts of these months, like, you know, your February's, your January's, but hey, at least a really nice pop today. So when we think they're now trading Coinbase, Alex, I do think that the overall macro narrative is important, the Bitcoin narrative is important, and also I think that not today is Marley laid out, also adding another, you know, leg to this bullish storm we're seeing.
Yeah, and even in its underperformance, really dating back 6 months, it has staged rallies. And so even if it's just a short-lived rally, perhaps you do get one through the end of this month. And that's what I looked at here for this example. Just a trade looking for a bounce back to where the stock failed last time around 275, selling the January 23rd call, buying the January 30th 275 call. So it's a call calendar spread. Spending a debit, in this case, the 250 debit, so your max loss would be $250. Looking for a test back to that sort of price level that gave it some struggle last time around. So even if you do have this recovery taking place, perhaps the stock runs into some resistance there, even temporarily, giving a trader who did this type of an example a chance to potentially manage that trade and potentially even for a profit in this one. So risk-defined trade, looking for a move towards 275, looking for that to happen in the next couple weeks.
Yeah, and I will say a 7% pop is nothing to write off, so it's definitely making a FOMO-esque move today. So appreciate it to Marley Caden for that breakdown on what's driving Coinbase to the upside today, as well as the broader crypto asset class. Now, coming up next, we'll dive into another very volatile space, one that we discussed a bit more a few years back on Next Gen Investing, and that is the meme stock craze. What we can expect from this year when we see any type of volatility hitting a lot of these publicly
That's funny.
more than that coming up next.
You know, I usually listen to a lot of, seems like I just got thinking about it. They usually talk about all of 2025, and I don't think I heard but very little bit of broadcast about any of that crap. I'm kind of happy that happened that way. We got 689s for tomorrow. I get out of them, like spies. I don't trust them after lunch. They deteriorate too fast. Too fast. I mean, way too much. Too bigly. No need. No need.
When it comes to investing, you'll love
Carl.
Take a left here, please.
Let's go.
Carl's way is the best way.
Bring it.
Is it? At Schwab, how I choose to invest is up to me.
I'd like to see these get to like 150. Make $1,000
And I
bucks.
have them manage some investments for me too.
Let's move on, shall we? No can do.
Just can do.
Get up there.
Where are you going?
We're going to break the triple top.
Schwab, a modern approach to wealth management.
Now I would make a
Stay
decision.
connected to what moves markets. Download the Schwab.
Okay, you're in the trade. You're in the head and shoulders. You got it in the first shoulder on the right. You see it? Do you see the inverse head and shoulders? Say yes or no. Let's see if anybody sees it. Anybody listening? Is anybody listening? Somebody's got to be listening. Okay, we're at the triple top. What do? Jim, I've been hanging down here in the coal mines in Missouri for a couple of years now, and I heard this thing, something about a computer. So I went over to my daughter's house, and she had one sitting up on the desk. She sits there and masturbates and watch you trade stocks. And I go, what? I said, oh no. I said, she goes and she cooks a lot of dinner and then she trades stocks. I said, okay. And you called this trade out here at $1. And it went a little bit below that. We're at what you called a triple top. Yeah. Then you come out and you ask a question about this inverse head and shoulders. I'm thinking about selling the position that Mama told me to get in. But I'm going to draw this here inverse head and shoulders up for the entry. And then down this time it was right around 116, 113. See, here's your left shoulder right here. That's called, now you just hit your destination. You're at 122. And that's your right shoulder. You added confirmation of the neckline right here. So that's inverse, and then you got a triple top. So, Jim, I'm out $1.21 on the triple top. Now I know this is a positive indicator, and it could break out. But man, you know, I doubled up on them suckers. You know, I don't get Lenny's around here. He sits up in these hills, doesn't get around much. So your triple top and your inverse head and shoulders, left shoulder, right shoulder, boom. I can't believe we did it. They're now at $1.22. Now, when I'm shooting out these numbers, I'm talking about the bid. Usually, I'll spit out the bid, not the ask. Oh, okay. That makes perfect sense. Because right now they're at 124, 126. See, like I sell you suckers at 126. One of them 2 bits and a freebie. Unbelievable, that's what you are. Bam. Unbelievable, though you're in fire. They're now at 127. Someone messaged me and said there was some kind of music going on, and they said it sounded real good. And I said, oh yeah, that's me. Boom. Okay. 127. Now we're above the old resistance. See if we gain respect. And if we can, I demand a breakout to the next resistance. Here it is, right here. Drum roll, please. This is gonna be good. Shall it break out? That's the question. We came back to support. I'm going to walk into the kitchen to prepare my... Well, was I going to prepare lunch? So, almost 1 o'clock. Be a late one. Come on. We're counting on you.
that spinoff and its completion. So now joining us is Sam Vadas, host of Morning Trade Live and Market on Close on the Schwab Network, of course. And so Sam, walk us through the details, because not a huge move to the downside, 4%. I mean, it's not small either, but it's not necessarily, tied to any concerns. I think more tied to some of this nature of this spinoff.
Yeah, tied to the nature of the spin-off, perhaps tied to just some of the general skepticism around, where things are at in the media landscape right now as well, what the future's going to look like, certainly for this company. But as far as the details are concerned, yes, it's the end of an era, so Comcast now really just wrapping up its separation of Versant. So it went public now on the NASDAQ up the road earlier today with the ticker code of VSNT. This was spun off basically to house the cable network portfolios and a lot of the digital assets here. Really, this was a move by Comcast in response to a very changing media landscape, as we know very well about. There's been a massive rethink around legacy media ownership, and that certainly was what was behind this move. And this separation will allow Comcast now to apparently focus on more streaming. Of course, it's got the Peacock. So as part of this spin-off, Comcast shareholders receiving a 1 share of Versant stock for every 25 shares of Comcast stock that they owned currently. So they did make this announcement back in November 2024. So it's been about a year or so.
I think AVGO took a pretty good hit.
It did announce that it would be spinning off its cable TV networks like CNBC and MSNBC as well as its digital properties like Golf Now and Sports Engine. So as far as the stock is concerned, we're seeing some pressure today, but I mean, this has been a frustrating one for shareholders over the last few years or so. It has been declining over the years. I mean, it hit a high around 2021, but it has since been pulling back. And so, many are wondering now what is going to come next, what is going to happen in 2026 now that we've seen this completion of this spin-off. The future, some believe, of NBC Universal needs to involve the separation from Comcast as well. That was one of the takes that I heard in the market in recent days. Obviously, it had its hand in the ring as well for Warner Brothers Discovery, so that's going to be the next move, or I should say, many are wondering what the next move could be, particularly once there's a little bit more clarity, particularly on the drama that surrounds all of that. What's interesting about the spin-off of Versant as well is that you don't really see many sort of traditional media companies going public these days. That is because of the big changes that I mentioned that the industry is purely undergoing at the moment, and it's we're seeing is very much consolidation in this space. I mean, we've seen that with Paramount, Skydance, we've seen that what's going on with Warner Brothers Discovery as well. So
don't smell too bad. Actually,
the reaction we're seeing in Versant today is perhaps underscoring some of the skepticism around just the pure media landscape, as I mentioned. As far as this stock is concerned, look, I mean, it does very much seem to be a case where, as far as the analyst consensus is concerned, many are just waiting to see what is going to happen now, because a major cohort is basically sitting on the fence here in the whole camp. You've got just over 20 that are just basically neutral right now. There are some that are in a sort of strong buy camp, or one underperform, but it does very much go to show that Wall Street isn't terribly bullish on this name right now. More analysts have sort of a more sort of cautious and neutral view. They do think that the company still continues to face some challenges, particularly in broadband as well, even though it does trade actually cheaper than its peers and generates actually steady cash flow as well. So long term, overall sentiment is really just a hold neutral rather than a strong buy at the moment. So that's where sort of the analyst sits. As far as the future of media,
we are getting close to the
really seems to be the big question now, particularly with all the
period where we got to watch our stuff for more minutes.
As far as what's next on the horizon for this one, we're going to be expecting the earnings come the 29th of this month, guys.
Yeah, a lot to look forward to. Like, the evolving media landscape is definitely transforming before our eyes. So I'm sure we'll continue to watch this space, as there's always news. It seems like in a lot of these media-focused companies. I appreciate it, Sam Vadas, for joining us, of course, on Partner 30 today, and I appreciate you all for tuning in.
She didn't say in the video.
Kick off this new year. That'll do it for us here. We have the watch list coming up next.
That's bullshit. Her name is Nvidia.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row.
Sorry, I don't know who he is.
You get the
No free. Don't know who J.C. Power is or whoever he is. Magnificent, do you know who that is? You're a rich Jewish person. J.C. Powers. Randy caught it. Woo! Another one for Jim.
Based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play and a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial
And J.C. Powers.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Oh. We got some action
Mom,
going
when
on?
my
Rob?
grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for
Oh
25
God, you're
years.
getting more like CNBC.
Opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Did you give the cartel 10 grand?
What moves markets. Download the Schwab Network app and stream
Wanna
live
find that out?
wherever you are.
Looks to me like he also gave the cartel 10 grand to come to America. She didn't know what to think. Jim was right again.
Good afternoon and welcome to the Watch of the Diane King Hall. It's 2 p.m. Eastern here at the New York Stock Exchange. Let's start out with what's coming up on today's show. We'll dive into the world of autonomy, autonomous trucking, when the CEO of Kodiak AI stops by to discuss the company's new partnership with Bosch. Schwab's very own Joe Fazzola will join me to break down the latest Schwab Trading Activity Index report, the stack, tracking the latest
121, 119.
trading data. Plus, we'll take a look at the outlook for energy markets with geopolitics in the spotlight after the U.S. captured Venezuelan President Nicolas Maduro over the weekend.
Yeah, this, you go either way for sure. Easily drop.
2 hours left in the trading day. We're watching gains on the board. The S&P 500 right now better by a little bit more than 0.75%. In terms of sector leadership, it's really been energy at the top of the leaderboard today, followed by financials and consumer. The Nasdaq 100 has gained nearly 0.9%. The Dow has been the star of the show today, hitting a record, set to close at a record as long as these gains continue to hold up. 1.7% higher. Not to be outdone, the Russell 2000 has a strong gain right now, up 1.7, more than 1.7% as well. Let's take a look at some of the other price action across asset classes. Dollar a little weaker today, trading around at 98, exactly there. Gold higher, interestingly enough, it's catching a bit. Even though we see some risk on, we're seeing some inflation, or some hedging rather, with regard to the geopolitics circling, up 3% for gold right now. Crude oil higher by a little bit more than 1.5%. This is West Texas Intermediate. We'll dive into more the outlook for energy and crude oil later in the show and talk about the geopolitics around this in the aftermath of the capture of Venezuelan President Maduro along with his wife. Bitcoin rallying more than 5%, solidly higher today, approaching 95,000 right now. Because one of the biggest stories in the markets, we want to welcome in Kevin Hayes, my co-host of Fast Market here on Schwab Network. So Kevin, we've been across this all day, moving energy, watching Chevron, watching ExxonMobil, watching some of the players in that space like Halliburton, which have been rallying double digits today. What are you paying attention to as we look across this space?
You know, the two that really stand out to me, Diane, are number one, Chevron, right? That stock's been up all day. It's up about $9 now. It was up a little over $10 earlier.
Yeah, they're nuts.
Already has a standing partnership with companies in Venezuela. So if that region were to reopen, they might benefit before others, right? There's already all ExxonMobil, ConocoPhillips. They had land and relationships in Venezuela that were nationalized and taken away. So it's possible they would reopen those. But if you think about the long-term trek that it's going to take to get Venezuela back on board as a real crude oil powerhouse, it's going to be the service providing companies like you mentioned Halliburton, up 10% today. Also Baker Hughes, also SLB, the old Schlumberger. Those names would be ones that might benefit. So as you're watching this evolve, you know, at one point, if you look at today's chart, the 1 minute chart on crude oil, it spent some time down before rallying about 1.5%. So I think there's still a lot of uncertainty there. That's why crude has drifted higher. I'm not surprised it's higher, but the long-term supply, potential supply increase could thwart the overall picture for crude oil. So it's going to be interesting, but it is not going to be settled in hours or days or even weeks. It's going to take a lot longer than that.
Okay, speaking of something that's not settled yet, manufacturing came in weaker than expected. The latest ISM manufacturing data. The market's shrugging that off, even though this has been several months of back-to-back weakening here. What's your takeaway here?
The easiest way for your viewers to understand these numbers is 50, right? Above 50, it's expansion. Below 50, it's contraction. And so these numbers will show a fair amount of contraction, except in prices. Here it is. The ISM Manufacturing Index came out 47.9. That's less than last month, 48.2, less than the consensus of 48.3, so a miss there. New orders, 47.7. Employment, 44.9. But prices, 58.5. So higher prices, although the expectations for prices were 59, came a little less, but still a number higher, showing expansion of prices, but contraction in the rest of the numbers, Diane. So not a great number out of ISM this morning.
No, not a great number, but we've got other economic data points that will be coming in this week. Job market seems to be what the focus is going to be. What are you watching in the rest of this week on the economic front?
Any first full week of the month, you definitely get JOLTS, ADP, jobless claims, and then on Friday we'll get non-farm payrolls and unemployment, where we'll get not only jobs data but wages data as well. So we'll get something on the overall economy. We'll also get some data on inflation. So yes, whenever this first week of the month is there, that's what we watch. We watch the labor market accumulating with the non-farm payroll data at the end of the week, Diane. So a big week for economic data. We also get about 6 different reports that are delayed. Not sure if those will be important, but the non-farm payroll data, always the #1 data point of the month.
Indeed, and it seems like we'll be back to our regularly scheduled programming on that front. Thank you, Kevin. over there at the CBOE, that's Campaign Skills to Fast Market. Now let's take a look at the bigger picture with Michael Bousset, CIO and Global Head of Fixed Income Principal Asset Management, joining us here at the New York Stock Exchange. So we were just talking a little bit about the week ahead and what's coming up on the economic calendar. Jobs will obviously be a central theme this week. When you think about that and what the focus has been related to the Fed recently, how much do you think it matters?
Thank you for having me. Happy New Year.
Thank you very much.
The jobs picture is really what matters today. Inflation
Oh, it did?
certainly remains a little bit elevated above the Fed's target rate, but is not at the point where
We're back to the right shoulder one more time.
Clearly would rather be approaching 2% than 3%.
Mrs. Do or Die.
That was about the employment story. Is the job market continuing to deteriorate as it has done?
Actually, I see a wick right here. If I want to count, if I want to count that, but I don't.
Uncertainty, whether that's tariff related,
I want this to hold.
now we were talking about Venezuela,
110.
What are the implications for other more challenging
Desk.
geopolitical risks?
Oak.
And so the Fed is really focused on that, and we believe as a result the Fed will
I'm stretching.
need to become more aggressive in order to counteract what is a continued deteriorating labor picture.
So need to become more aggressive. So do you share what seems to be the consensus view that we will see more than one rate cut this year?
Yes, and we have 2 priced in now, and it seems really likely that that's the floor. 2 is the minimum. The likelihood of the Fed moving with the new chairman of the Federal Reserve Board to 3 or even 4 cuts this year is not out of the question.
Okay, so you see me taking that in, and I guess I hear what you're saying about 2 potentially happening this year, but 2 being the floor. The reason I got questions that come up about 3 or 4 is I remember, was it 2 years ago when the view was we were going to get like 6 to 8 cuts, and that did not happen, obviously. So what supports that viewpoint? I know you're saying a new head of the Fed, so you think that the next head will be more likely, no matter who it is, to pursue more rate cuts than what it seems like it's penciled in right now.
Yeah, I think that's the way that's the starting point. Is that the new Fed chair, no matter who it is, will tend to have that view that's more aligned with the Trump administration, which is interest rates need to come down. That's reflective of some weakening economic data, whether that's job related or we're just talking about ISM. A little bit of an objective of lowering the cost of financing the government as we continue to increase the debt burden. Lower interest rates certainly help there. But also there is some justification. There is justification with the labor picture. There's justification with that the economy is moderating, maybe not to a level which is worrisome, that's recessionary, but worrisome enough that the Fed can move down to what we would consider a neutral policy rate.
Okay.
Neutral policy rate doesn't necessarily mean where we were at 5%, or even at 0 where we were a few years back, but it's somewhere between 2 3/4 and 3%. And that's where the economy is no longer receiving stimulus or having restriction as a result of interest rates set by the Fed. And that's where we think the Fed needs to get to in rather short order. So we're going to see this 2, 3 cuts happening in the first half of the year, maybe with the fourth coming if the labor picture deteriorates further.
Okay, and we'll certainly get more information on that. We'll come Wednesday and Friday of this week when we get both ADP and farm payrolls report, where we're finally back on track, which I'm glad for. I know a lot of people are glad. Because then we'll get to process it better, because, it's not backward looking to the degree that the late data was, or related data, I should say, was. When you think about what you cover and your across fixed income, I asked another guest who has a similar look across the space, how you would grade fixed income for 2025, what your expectation is for 2026. So how would you grade it?
So 2025 was a great year for fixed income. It was for equities, it was for pretty much everything.
Is that an A grade?
That's an A grade. You get a near double-digit return for fixed income, I call that an A.
Yeah.
And so as we go into 2026, there certainly is less upside, but there still is upside in our mind. Not only are you entering into a market that has reasonable income characteristics, i.e. you get a nice yield by buying a fixed income portfolio, but also if we're right and the Fed does tend to be a bit more aggressive than what's priced in, traditionally the entirety of the yield curve comes down. And that may be more of a steepening bias, i.e. the front end outperforms the back end, but you get a positive total return from the entirety of the fixed income market. when you add to it that corporate credit, which makes up a large percentage of the overall fixed income market, is really healthy. Companies are healthier than they've been in many decades. You can see that high yield investment grade. The risks of defaults and downgrades are much lower today. And so the short version is yes, we're pretty optimistic about both the income potential as well as total return potential for fixed income in 26.
Why do you see the risk as being more muted now today compared to what's the time frame that you're
Yeah, if you go back like 15 years ago and you look at the high yield bond market, it was 26% triple C issues. In other words, right at the bottom of the quality stack. Today, it's down to about 10 or 11%. Those companies didn't disappear, they moved into the private markets, and so what that's meant is that the overall high yield market is much higher quality today than it was 10 or 15 years ago. And those companies, even at the single B and the double B, have been able to enjoy lower borrowing costs for the last 5 years. And so they've been able to refinance their debt and put themselves in a really attractive position to be able to weather any kind of economic downturn. And so, yes, spreads are tight, valuations may be at what are people considering historic extremes, but that doesn't mean that spreads have to widen from here. That doesn't mean that you get a negative total return from that part of the fixed income market.
And isn't some of the point of the exposure to fixed income is protection from risk?
No doubt. Like, it would be nice to see that negative correlation with equities and fixed incomes reemerge at some point. You know, the reality is we used to think when equities go down,
yes, exactly. That is what it used to be once upon a time.
And that's kind of broken. And you know, our view is that as we go forward, the likelihood of having that protection, i.e. that income, as well as more duration, that protection you're referring to, in 26 or 27, if you do see the equity market stumble, if you do see the economy stumble, that you may be in a position to see that fixed income diversification.
We're 106.
All right, Michael, thank you. We'll leave our conversation there for now.
200 right here.
That's Michael Bousset, CIO and Global Head of Fixed Income Principal Asset Management. Coming up, we've got Options Corner. Rick Ducat joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news.
Come on, baby.
Freeport McMoran and Wells Fargo. Stay with us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. That's all. You can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Oh yeah. A little hot. A little hot.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at Schwab.
106.
trades seen throughout.
Could get out here
and
and be even.
Week of market technician here on the network. Now let's talk the vehicle sector. EV, BYD surpassed Tesla last week as the global EV sales king. They had pretty powerful numbers after those 2025 delivery numbers. One trader, though, you found making a large neutral to bearish trade. Tell us about this one.
Well, sure, and not really a lot of specific news for Tesla other than what you summed up there. And what we see with this trade here is perhaps it is neutral to bearish if it is a standalone trade, but in this case, minus 12,458, March 20th, 455 calls at a $41 credit. This could be a covered call type strategy that's being paired with a large existing stock position here. Either way, though, the scale of this particular trade is very, very large here, not only in terms of the quantity, the volume of the options here, but the dollar amount. This is about a $51 million credit received here for this trade, and this is an opening trade, mind you.
That's huge.
Opening trades typically, the volume far exceeded the open interest here in this particular option. So this would be a situation where there would be a limited max loss potentially if it were indeed a standalone short call here. That would make it quite a risky type of trade to make here versus a covered call, which would be more of a conservative type of trade. So now we can see though as well that the break even for this one, 496 or so, about 8.8% to the upside. The expected move for this same time horizon, 74 days to expiration, about 19.5%. So well within the boundary of that expected move here. Sizzle and Tesla options today about 1.2, so slightly elevated activity. And this trade was almost 1% of the total market.
March
so
20th.
There's 1.4 million options changing
12,000
hands so far at the time I checked. That's a
455
percentage there, Diane.
Talk about Freeport McMurray. You found some activity there. That's higher right now. It had a new 52-week high today. You found a trader making a bullish bet on this name. Tell us about this.
Yeah, again, not really any specific news about this one today, but the stock's up about 40% in the past 30 trading days. A really sharp rally.
FCX.
We have seen in tandem with this explosive move to the upside in gold, silver, palladium, platinum, etc. here. So this one here, this trade plus 7,500, June 18, 55 strike calls at a 549 debit. Perhaps not quite at the scale of our last trade, but a $4.1 million debit paid, a very large dollar amount once again here. Now, as I said, I do typically try to find opening trades. I wasn't 100% sure this one was an opening trade here, but there was no obvious corresponding trade that would suggest it was a closing trade. And it was such an interesting standout in terms of the typical activity you see in the dollar amount here that I wanted to at least throw it out there here.
I don't know about that one.
Next loss would be that $4.1 million debit paid.
I don't like it.
Case with long calls in general here, unlimited max profit potentially as well. So with this one, the break even will be 60.49, about 12% or so to the upside. The expected move is almost twice that though, about 23% or so plus or minus. A longer time horizon as well, 164 days out for this one. And this trade was about almost 9% of the total volume in FCX today. The sizzle, 2.7 times the 5-day options volume for this name.
Let's talk about who you're watching in the financial sector. You got big banks coming with earnings next week. You found an outsized trade for Wells Fargo. Those shares are moving higher today. What did you find here?
Yeah, not too much. Again, to
still even on my calls.
Developments with Wells Fargo. A couple of
what's up? Nice.
And so forth here. They did also close a big deal to sell.
I don't know. We might come down and hit the VWAP now.
Portfolio today for about $4.2 billion. So those are just a couple of more minor headlines here. But very strong chart once again. In this case, it's a trade that's much like our first trade here, selling calls. So minus 19,165, March 20th, 105 strike calls at a 150 credit. So again, paired with existing stock to make a covered call type of trade here. Much smaller scale than our first one, but again, still a very large dollar amount. About a $3 million credit received here. we can see as well the underlying price when it was done was about 97 or so. That would have meant that the break even of 106.60 would be about 9.9% to the upside, the expected move. Not too far beyond that, only about a 10.6%. So this one would be looking for things to kind of stay within that boundary. It's kind of at the upper edge of where the market is expecting this one to be moving around and during that same time horizon, about 74 days to expiration. And this was our biggest relatively sized trade of all of our three today here. This trade was about 28% of the total options volume in Wells Fargo today. Sizzle 4.7. This is the most elevated name of the three as well.
All right, thank you, Rick, for the look across some of this unusual options activity. That is the new data himself, Rick Ducat. Coming up, we'll dive into the autonomous driving and specifically trucking world with the CEO of Kodiak AI. Keep in mind, this is front and center this week as CES kicks off. The Watchers will be right back.
Well, then people say don't vote against Tesla.
Kick off the morning with the data and the decisions moving markets.
It's had a big breakout today, so.
The macro moves are driving the price action from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical
Like no right in when they jump in them trades.
charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start
They
learning
just a
today.
little bit ago had a new low on the Bittier and Apple also.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact markets. Watch live on Schwab.
Kevin, you're not green.
Trading Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I see something from Schwab.
Uh-oh. Yeah, Schwab lets you invest in trade on your own.
And if you want, they can even manage it for you.
Not to mention Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
Technical difficulties.
Carl.
Schwab, a modern approach to wealth.
Spies at 104.
Welcome back to the Watchers Banking Hotline before the New York Stock Exchange. Let's take a look at a few
Ugly charts.
in the market right now. Coinbase still higher today as Bitcoin rallies. That stock, Coinbase rallying more than 9%.
Woo!
Goldman Sachs upgrades it to a buy from neutral. It raised its price target to 303. Yeah, let's use Coinbase.
Somebody loaded.
Best-in-class play for the growth of the crypto infrastructure. Meantime, shares of Comcast are lower today after it spun off its cable networks. The new company dubbed Versant Media kicked off trading on the NASDAQ under ticker VSNT. Versant's networks include CNBC, MS Now, formerly MSNBC, USA Network, and E! Entertainment. Coming out of welcome in our next guest to talk autonomy, especially as it relates to the future of trucking. We've got Don Burnett, founder and CEO of Kodiak AI. Don, thank you so much for joining us. It's good to see you again.
It is good to see you.
Let's start with the big announcement that you all have. You're announcing this partnership with Bosch. This involves scaling manufacturing production-grade autonomous platform. In plain speak, for the average retail investor at home, what does that mean?
Yeah, what's it mean?
Yeah, this is a really exciting moment in the self-driving industry, particularly in the self-driving trucking industry. You're bringing together two of the leaders in the automotive space, Bosch being the largest supplier of automotive components in the world, along with Kodiak, who at the forefront
Jimmy didn't know that.
driverless delivery. And really what this enables is Kodiak and the Kodiak driver technology, which is our AI solution, to go to the next level in terms of scale. Bosch brings a level of sophistication and experience in providing automotive components
Jim's more drama.
that are fully validated at scale, and that's really going to enable the Kodiak drivers a solution to scale dramatically over time.
Let's talk a little bit about a milestone that I know that you all have been touting, 3 million miles. Tell me
That was a good burp.
why that matters. What is significant about that milestone, especially for someone who does not live in the world of autonomy?
Well, there's a lot of talk about AI lately, and one of the things about the physical AI world is self-driving is really the tip of the spear when it comes to physical AI. And so the challenge there is gathering a lot of the data. It's not as easy to get as just parsing the internet or reading a lot of information online. You have to actually go out, drive the miles, collect the data in order to improve your algorithms, to train these large models and train these systems. So it's really important that you have a lot of experience under your belt. You have your vehicles out there on the road gathering data across multiple different types of landscapes and lots of different environments on a day-in, day-out basis. And having driven over 3 million miles gives Kodiak leverage in our ability to train these large models to produce a safe, autonomous solution.
Ooh.
Let's talk about the future, because we're in a week where we're kicking off CES, and I know that is important for you all. What are you what message are you trying to send this week, especially as it relates to the future of autonomous driving for long-haul trucking?
Really, the number one message is autonomy is here. I think people are seeing that in their daily lives, depending on where you live, in the passenger car space. But what people don't realize is that we already have fully driverless trucks out on the road today. We have deployed driverless solutions with customers that are running 24/7 with nobody in the cab. It's here now as it's starting to scale. So really, this marks the inflection point for the self-driving trucking industry, and Kodiak is definitely leading the charge.
So some people obviously are scared of a world of autonomous vehicles, whether we're talking about the regular cars or a giant truck on the road. How do you get investors to overcome that kind of fear? And what's your answer when you think about the challenges and risks?
Well, I always tell people that seeing is believing. I think as more people have experience with self-driving vehicles, whether that's on passenger cars or whether that's in trucks, you will naturally become a lot more comfortable. We see folks who are initially a little bit nervous, experience the technology, look at the technology, drive near the technology, and they realize these trucks are at the absolute pinnacle of safety. They're mostly in the right-hand lane. They drive the speed limit. They're always aware. They're always paying attention. And actually, I think that can bring a lot of comfort to a lot of folks who are out on the roadways in and around big rig trucks. And so, to me, it's just about getting more experience, having people see and touch and feel the technology with their own eyes. And beyond just trucking and Kodiak, you're seeing that across the mobility industry more broadly, and that's a great thing.
I would say this. Once upon a time, I would have said I would never get into an autonomous vehicle, but I do think you're right. We're entering a world where we'll start to see more and more of it. And obviously, you're clearly invested in this, given your role. But again, I just want to know how fast you think that the industry is going to develop. Is this going to be like the world of AI, where it happens at the speed of light, or is it like you just mentioned being in the right-hand lane, which is the slow lane. So tell me about the speed that you expect to see here.
I think you're going to see physical AI develop a little bit more slowly than the world of kind of digital AI, and that's of course because it takes time to deploy these systems. One of the things that Bosch, the partnership with Bosch, enables us is to accelerate that timeline. And so while I don't think every truck on the road is going to be automated in the next couple of years, you are going to see substantial growth starting in 2026 and 2027. Ultimately, it's going to take decades for the entire fleet to turn over, but eventually you will see autonomous systems, autonomous vehicles, both large and small, as a ubiquitous feature on our roadways.
So, for you all specifically, for Kodiak AI, I know we're talking about kind of generally speaking for the industry, so let's zero in on for your company. If we're talking, I want to say 5 years from now, but let's put it in a shorter term, let's say 2 years from now. What's that next? I know you're celebrating a milestone here with the Bosch partnership, but what does that next milestone look like, whether it's millions of miles or the next partnership for Kodiak AI?
Well, right now we're focused on deploying with our initial launch customer, a company called Atlas Energy Solutions. We have, as of the end of Q3, 10 trucks, 10 fully driverless trucks deployed with them. We're going to be removing the safety observer for our over-the-road, meaning long-haul trucks, in the second half of 2026, and also fulfilling a 100-truck order with Atlas. So we're looking to fulfill the 100-truck order in the time frame of 2026, and then of course we're going to be scaling beyond that in 2027.
Great conversation again. That's Don Burnett, founder and CEO of Kodiak AI. Thank you so much for joining us today. So we've got Joe Mazzola from Charles Schwab joining us to take a closer look at how retail traders invested in the market in December. We'll have the details from the Schwab December Stacks report when the watch list returns.
Oh, I'm full.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Butters and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
Carl's Way is the best way.
It is the best way.
Is it?
Better
At
mine.
Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out there.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets.
all with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to Washington. I'm Diane King Hall. The latest Schwab Trading Activity Index has been released. It summarizes December 2025. For a breakdown, let's welcome in Joe Mazzola, head trading derivatives strategist at Charles Schwab. All right, we got the latest DAX report. I'm excited to talk to you about this, Joe. So when we think broad strokes about this, what's the top, I guess, theme that came out?
Well, first of all, Diane, thank you for having me, and happy belated New Year.
You lucky guy.
You know what? I think if you were to just look at the headline, which shows that the Schwab Trading Activity Index was down a minimal marginal amount for December, the first time since May, I think maybe that would stand out. But I think you need to dig a little bit below the surface. I think that there's some things that probably caused that. The biggest being that. It was the last week of December, and we ran the stacks report through December 26th, and that was the week that saw the majority of the selling. And a lot of that was probably just portfolio rebalancing, some repositioning heading into the new year, trimming some winners, which our clients tend to do towards the end of the month. And I think that probably is what set up the stacks for having a down month, like I said, although marginally down.
So marginally down. One of the things I think has been interesting when you look across, because obviously this gives great insight to the retail investor landscape, and one of the things that we talked about last year was how retail got back into the market before institutional investors, and made that was essentially the smart money. So when you look at the patterns, you said marginally down. How does that show, what stands out in terms of sector activity? Does it line up with what we saw with what institutional investors have been doing?
Sure, so the two sectors that saw the most net outflows were IT, so informational technology, and consumer discretionary. And you can really kind of break those down, right? So if we look at the three stocks that had the most outflows, it would be Tesla. Now, I'd be shocked if Tesla wasn't a top buy for January. Here's the reason why. Tesla's one of those names that our clients just really enjoy trading, right? And so when it gets to kind of all-time highs like it did in the month of December, you tend to see them trim quite a bit when you get the pullback. And we saw that pullback occur in Tesla. And so that might be something where our clients start to scoop that up a little bit in the month of January. We're only 2 trading days into it, so time will tell on that one. But two of the other names, Palantir was one that they bought very heavily in November when the stock had pulled back, and as it rallied back 25% in the month of November, once again they trimmed it. Another one would be Intel. It's a name that has just kind of really chugged along. It's had some really good outperformance the last couple of months, and it was one of those stocks that they kind of sold into strength. Now, if you look at the flip side, what they buy. Well, the biggest sector that saw monthly inflows was communication services, and if you wanted to kind of single out maybe 2 stocks that drove that buying, number one would be Netflix, which was interesting. It's the first time I've seen it on this side of the ledger really in the last few months. So Netflix was the biggest buy, and then Google came in at number 5. So really those 2 names were probably the biggest drivers for inflows in the communication sectors. NVIDIA tends to be on the list every month, so it came in at number 2. And then the third would be Broadcom. Broadcom, once it pulled back from that earnings high that it had, that's when clients really started to scoop it up.
I have to say I'm surprised about the Netflix inflows. Not surprised about Google, but Netflix. Definitely surprised about that one. When you think about one of the things I felt was interesting when I look at kind of some of the data points that you have from this DAX report is the generational divide here. Talk us through what we're seeing by generations, Gen X versus Gen Z, and then what risk tolerance looks like when you look across those demographics.
So Gen X continues to be the generation that is most willing to kind of step out and buy. That could be not only just generational gap, but it could be something in terms of monetary gap as well too, because it's Gen Z that's been a little bit more tepid in their buying. It's hard to make conclusions just kind of based upon that, but I think you could probably make some assumptions. One assumption would be, look, there's a lot of people in that generation that might be saving for their first home, and so maybe they're allocating more.
Nothing holding it up now.
As the kind of the age for the first buying of the first home is actually ramped up to around high 30s, around 40 at this point now. So that demographic has changed. The other thing that we see, there's a real widening gap, Diane, between what traders are doing and what investors are doing. I thought that was interesting. This is the widest actually we've seen in all of 2025, where traders were willing to step in, buy the dip. They kind of did it as, the trader lingo, they did it with both hands. Where investors were a little bit more cautious. And then I think the other thing that I would kind of call out is, the stacks report itself is behavioral. It means it measures what they're actually doing. Well, we also run a report every month. It's an attitudinal kind of trader report where we ask the traders and investors kind of how they're feeling. And they basically had the same level of bullishness in December that they did in November. What was interesting though is you tended to see the traders kind of skew that back a little bit, and so to me that would say that some of that end of the month selling was probably by the traders that had kind of bought heavily in November at the beginning of the month, and they were probably the ones that were willing to take some of that risk off the table.
It's interesting the point you made about Gen X. I also wonder if some of that, especially for the older end of Gen X, if that is also a bit like YOLO. I don't know if they do YOLO like, younger generations do. That's what occurred to me. When you look across some of the data, whether it's this stacks report or the behavioral data, especially what matters most right now to traders and investors?
Sure. I think there's this belief that some of the AI trade is getting a little bit long in the tooth. I think that there's this belief that there's probably some overvaluation there, and we started to see some rotation. I talked about the rotation in communication services, but there's also another rotation into financial services, right? Into industrials, into materials. And I think it's kind of provided a little bit of a bedrock, if you will, below the surface, where even if IT doesn't participate right away, since you do see that rotation occurring under the surface, there is additional market breadth that can hold the market up without something like NVIDIA participating. I mean, look, on a day like today where the S&P is basically up 50 points, NVIDIA is down, and so that I found that quite interesting to see that you can kind of have that dispersion between the two, because it kind of goes against what we've been looking at the last couple of years. I think another thing that I would call out kind of from that perspective is, if you look at the cyclical trade, and that's what I would call the financials, the materials, even the discretionary to a certain extent, that doesn't scream by any means defensive postures. To me, that's more of a rotation, and that's why, like I said, I think you need to dig a little bit below the surface as opposed to just saying, well, stacks was down, because it wasn't down necessarily because everybody was exiting. It was down more because of the repositioning, kind of getting out of some of maybe the higher beta names and using some of that capital flow into some other sectors.
Joe, any final takeaway you want to leave us with really quickly from the latest stacks report?
Yeah, like a breakout.
I want to take away on what we've seen in the last couple of days in trading. It's just, to me, it's been kind of fascinating that the leaders from 25 are kind of still holding on in 26, whether that, it is the flash, the memory, we're saying microns, those are doing really well right out of the gate. And until I see that turn around, to me, it seems like, the risk on trade. I mean, look what we're seeing in materials today, and whether it's metals and mining. Look at what we're seeing in some of the cryptocurrencies. I think you've got the beginning of the year showing that investors are willing to take on risk.
Seems to be that it's risk on today, even as we see gold rise. So we'll continue to watch that. Thank you, Joe, for the latest stacks report. That's Joe Mazzola, of course, head trading and derivatives strategist Charles Schwab, and happy belated New Year's, Joe. Still ahead, we're going to our panel to take a closer look at what we can expect in energy markets after the U.S. capture of Venezuelan President Nicolas Maduro. We'll be right back.
It's just strange. You can just walk in there and grab him. Don't say it could be that easy.
The final 9 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that have moved markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on the Schwab Network.
Opportunities don't stop when the market day ends. So what do? Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Deb Linus, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. We worked hard and after he passed away, the torch has been passed to me. And likewise with Jennifer, she was with me, with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. We've got energy facing gains in the S&P 500. Chevron moving higher. Crude oil also moving higher after the U.S. captured Venezuelan President Nicolas Maduro over the weekend. For more on what's next for energy markets, let's bring in our afternoon panel. We've got Matt Bailey, Managing Director, Chief Market Strategist, Miller Tabak, and founder of the Bailey Report, and Carly Garner, Senior Commodity Strategist and broker of Carly Trading. It's good to see both of you all. Matt, let's start out with you. You say that energy is wildly under-owned and that positioning often looks like before a rally. Tell us a little bit about that and what your viewpoints are on energy now, especially in the wake of what's happening with Venezuela now.
Yeah, I mean, this whole thing with Venezuela, it's going to be interesting, and I think it is going to take a while to play out. But, at the end of the year, we always get all the people talking about their outlook for this year. And the number of items I've read and heard about people who hate the energy sector, it just shows that I think it's very, very overhated. I guess the sentiment is not
Overrated.
But it's also at 3% of the S&P 500, less than 3%. And you look at the ownership in the institutional base, it is very, very small. And again, we look at something called the commitment of traders data, which show where the futures traders are standing. The smart money has their biggest long positions in a decade, and the speculators have the biggest short position, and that's usually the contrarian indicator. So these are the types of things you usually see at the low for the group. Now, I do question whether the oil is going to rally in a big way, but if these companies have become much more efficient in the last couple of years, especially in the last year or so, so they could be a surprise to people to the upside.
Okay, Carly, let's talk about your take. You say in the short run the events over this weekend take the barrels of oil off the market, and initially we saw West Texas Intermediate trade lower, now higher. What's the long-run view, especially as it relates to these geopolitical events?
Right, well, I can't
say this often, but I will say I think the market got it right this time, and I believe the crude oils market actually is behaving very logically and in a civilized manner. Normally with these types of events, where it's the exact opposite. We do get a little help from the fact that it happened over the weekend and people had time to digest and think about things. And the result is, as you mentioned, we got a little bit of oil taken off the market here in the short run, but if we're talking about the very big picture, I think we're going to someday look back at this and think of this particular event as in the same way that we think of fracking. Fracking was in place prior to 2014, but 2014, it took a couple of years for it to materialize. In 2014, everybody kind of jumped on board and started using it. Oil fell from $115 a barrel to about $30. I think it was actually $26 a barrel after that. And then it stabilized and moved higher, but that was a defining moment for the industry. Oil prices were relatively subdued for the next 8 years. I don't think we printed above 80 for 8 years. It finally took Russia invading Ukraine for markets to rally to 130. But I will point out that's a lower high than previously. In 2008, we were up to 150, and in 2022, the high was 130. I think what we've done is we're taming the market a little bit in the very big picture. We're talking years, not months or weeks. But what we also have probably done is make the upside potential isn't 130 to 150 anymore. Maybe it's 110 to 115. Now that assumes everything goes perfectly. There's a lot of things that can go wrong. So I mean, right now we're just talking. It's not a reality yet. We'll have to see how things unfold.
Matt, let me ask you this. So Chevron is obviously seen as a big winner here because of its footprint in Venezuela. Does it continue to stand out to you?
Well, it does, but it's going to take a while for them. I mean, they're already saying that they're not going to be moving in anytime soon, and neither are any of the other companies like Exxon or ConocoPhillips, the bigger companies that do have the opportunity to move in a big way and profit from it over a very long term. But one of the things, though, is that I argue is that you don't need crude oil to go to $150 for some of these energy stocks to do a lot better. I mean, you look at a company like Conoco. I mean, they're going to produce an extra $1 billion of free cash flow in the next couple of years. And a lot of that is due to, this big decrease in operating costs. I mean, they expect to cut their operating costs by $1 billion this year, and that's up from $600 million that they were looking for just this past summer. So again, I don't want to be pounding the table and saying that these stocks are going to just do wildly well, but there are some that should be able to take advantage of this situation. We also have some of the drillers that should do well because they're refiners. But I guess my point is that there's so many people so negative on the group right now. I think we could see a big surprise, especially for some of these key names like the ConocoPhillips.
Carly, you made really good calls on the range that you expected to see oil in 2025. Can you tell me a little bit, with your crystal ball, if you will, about what you expect for 2026 for the range for what's Texas Intermediate in particular?
Well, so Matt points out that the CO2 report, the Commitment of Traders report issued by the CFTC, shows that speculators are actually holding the type of position that you would normally expect oil to go up. But I'm not buying it this time around. The last 3 bear markets of oil ended very precipitously in washout lows. That occurred in 2008, 2016, and then 2020. The last 3 occasions, we were in very similar situations where we are now, quietly trading, relatively stable, and then something triggered the sell-off. Typically, once we get below $65 in oil, it's kind of like a slippery slope, but we just kind of find ourselves in a vacuum that attracts us down to these really low prices that don't make sense in the long run, but in the short run, that's how crude oil trades. So believe it or not, if we follow that same pattern, I'm not calling for $15 oil, but I'm saying if we end this bear market the same way we've been into the other 3 bear markets in the last 20 years, we can see $15 oil. So be very, very careful if you're trying to trade futures or crude oil directly, because there is some downside. Now, with that said, those types of washouts are amazing buying opportunities for anybody that's bullish. So just keep some powder dry, because it is possible.
All right, we'll leave our conversation there for today. Our thanks to both Carly Garner and Matt Maley Miller. Take back Carly Garner with the Carly Trading. Thank you so much for joining us. That's going to do it for the watch. This is Diane King Hall. Stay with us for Market on Close with Sam Bottis and Marley Caden. That's up next.
Schwab Bank Investor Checking. the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. They were purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can give an advantage for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl? Embarrassing us again.
A modern approach to wealth management.
We're at a triple bottom, yay. Just seems like the market says yay and nay.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley King.
It's not. It's power hour.
And I'm Sam Bottoms, coming to you live from the floor of the New York Stock Exchange.
Now I don't know if she market on close is what she calls it. Well, that's bullshit. It's power hour. Staff, please get the red phone. I need to have a conversation with Schwab.
Big names making moves. The first Coinbase shares are up more than 9% after getting upgraded to buy from neutral over Goldman Sachs.
The analyst upped the stock's price target to imply a roughly 30% upside, calling the company a best-in-class play. Also, Costco shares moving higher today on an upgrade. This one from Mizuho. The firm bumped its rating to outperform from neutral and added the stock to its top picks list. Comcast is also up on the day as its spin-off company Versant began trading on NASDAQ today. Comcast separated out the bulk of its NBC Universal TV networks, including MSNBC, CNBC, and the Golf Channel, to name a few, in a separate company that closed on January 2nd. Versant then started trading this morning. Shares down about 14% so far in their first day on the market. We'll discuss that and more coming up, but let's see how the markets are shaping up as we head into the end of this Monday trading day. The S&P 500 trading up about 0.6 right now at 69.0222. On the NASDAQ, we're trading up 0.75% higher, 25,388. For the Dow, we're up close to 1.5%, 49,070.61. That's 688 points higher. And the Russell 2000 is trading up 1.8% at 25,5312. For the 10-year, we're down about 1/3% to 417. The dollar holding mostly steady, 97.98. Gold is higher, 44.5420. That's up 2.9%. Crude oil also higher, 58.31 a barrel, and Bitcoin at 94,755, getting closer to that 95,000 mark. These are the highest levels we've seen since early December in terms of Bitcoin prices, up 5% so far today. Sam, I'd love to know what stories caught your eye today, though. It was a busy day.
Absolutely, particularly given how we woke up on Saturday morning with these developments around Venezuela and the market reaction
Venezuela
today. Firstly, on oil markets,
is that what she said? I swear she said Venezuela.
What this uncertainty is going to mean moving forward, geopolitically speaking, where things are going to land. But for now, we've seen oil companies rallying hard. Chevron, which is, of course, the only one left in Venezuela as far as operations are concerned. So was Exxon and ConocoPhillips today. But really the big winners across the oil patch were the services companies, Halliburton, Baker Hughes, just to name a few. They've all been higher, rallying on these expectations of investment opportunities to rebuild infrastructure. Now that doesn't mean they're going to walk in tomorrow. This will take some time, but for now we're seeing a reaction in those stocks. Now bond markets, relatively muted, as you just pointed out, about 417 on the
I'll be in there in a second.
Very much these investors reacting to the economic data rather than the events over the weekend. There has been a move to safe haven assets, however, like gold today. So not seeing it in the treasury market, but certainly across some of the commodities.
Say it again.
As you just pointed out, we are at a stronger level, in fact, at the most in 2 weeks. Now, we also got some information this week in what is going to be a big week as far as the economic calendar is concerned. ISM manufacturing data out this morning, not moving the needle too much as far as the market is concerned, but it was showing that economic activity in manufacturing did contract in December for a 10th month. That reading coming in at 47.9. Now, as I said, not moving the markets too much. The services sector.
Excuse me for a moment. I need to take care of some business.
There are expectations for that to be above 50. We're also waiting for jobs.
I hope this doesn't bother anybody, but if you have any children, please make sure they're in another room. I'll be in there in a second, Nancy. I gotta have a conversation. Shut up. Oh. Excuse me. I'm back.
Money, thus shorting Kellogg's network at this time. They do believe that this company could continue to benefit from the narrative as the largest pure-play vendor in the security space, but the sector they said is somewhat insulated, if not boosted, by the threat of AI. But interesting, for all that positive commentary, it wasn't really a positive note by any means. It was more of a tone of neutrality, if you will, and I think that that's speaks to the fact that it's going to be, yes, be expensive to build into AI. They're undergoing this years-long optimization push, and also, if you look at actually like the dominant market share of the cybersecurity world, frankly, while Palo Alto Networks is the largest, yes, it's modest at that. I mean, like, it barely, we could say that one name leads the rest because it's such a highly competitive, saturated market that, yes, I will stand by the fact that to build an AI is to build into cybersecurity, but to say that one necessarily could be the main beneficiary, I don't think it's true when you have a fairly fragmented, crowded space, which is all things security right now.
Yeah, I think there's no sort of a less bearish stance. I think it's going to be the argument here as opposed to some of these bullish notes we're going to get here in a minute. But interesting, we've also heard the rumblings of this Koi Securities potential acquisition. They've been on a buying spree lately, but that being met positively, whereas they announced the Chronosphere acquisition with their earnings and they were battered to the downside. You can see here on the charts we've seen that they had a massive move to the downside on that note. But let's move to one moving to the upside as well here on a more positive note. Costco. Mizuho gave them an upgrade and a new price target.
And Costco, I will say, checking in on this name, just looking back at the rest of the year's performance, it left a lot for the bulls to be enthusiastic about. I mean, it really was not a strong end to the year. So Mizuho,
my earnings not showing up on these.
That move to the downside, which has been more of a slow, gradual churn. They did highlight upgrading Costco to outperform from neutral. Price target also was raised to $1,000 a share from $9.50, highlighting those shares have corrected about 20% on the concerns of the company's membership and their comp sales, both of those growth metrics starting to slow. However, they do believe that the trade-off activity is accelerating in the first quarter, with these premium members adding roughly 2 to 3 times that of the total membership overall growth. They did say the stock is now added to their top picks list, which is encouraging. Yes, and 2.5% move for Costco is no small move. And I know this is a staple name, doesn't hugely trade with a ton of volatility to the upside, but if you look at the last year, you would say there's definitely some room for imagination as far as the growth story with Costco, as it's typically just more of a defensive play. Not every strategy can be one that is, instantly sees returns. You're going to see more of the slow, steady performance from Costco. But again, if you look comparatively to, say, like a Walmart, which I do tend to link the two, not really seeing the same degree of that defensiveness over the last year, so hopefully returning to more stability we could see from Costco this year.
Charles Moon from Prosper Trading Academy made exactly that argument on the Big Three today on Trading 360, saying that the lows that we're seeing them at, he's looking for them to get up near the 890s, 895 in the very near term. And that note also giving a boost today, up 2.5% for Costco. This next one a bit different here. We're talking about Comcast. They finally completed the spin-off company, now Versant, taking away most of their NBC Universal cable products into a new company that started publicly trading today.
Yes, so Versant now, of course, trading under ticker symbol VSNT. The spin-off was completed through this pro-ratio distribution of 100% of the outstanding shares of their Versant Class A and Class B common stock to the holders of Comcast Class A, Class B common stock, respectively, at a ratio of 1 share of Versant's common stock to every 25 shares of Comcast stock. That was held at least through December 16th of last year, with distribution completed at the close of trading on January 2nd.
It's now 10 minutes after power hour.
We see officially this spin-off now completely done, and we finally completed this chapter.
I totally disagree with what she calls this.
The question of what further consolidation in the media world will look like this year. As I mean, like, AT&T has seen some weakness. We've seen, the varying bids and the drama escalating between Warner Brothers, Paramount, and Netflix, and that whole trio. But also now, as far as Comcast is concerned, I will say I actually saw some pretty nice optimism, like Benchmark today actually raising its price target to 44 from 46, keeping a buy rating.
You're fired.
The price target right now is roughly $35 a share for Comcast, so would imply some decent upside. And the average rating right now amongst the FactSet analysts is overweight. So still thinking that there could be some room to run and perhaps, finding its identity as its own company after completing the spin-off. But both these companies taking
I'm at 94 cents.
Not abnormal though to see when you see anything related to M&A. I tend to look at the
We're at the VBOP.
as a blip, and we'll have to put this data behind us and see how this company now looks for us with Versant as its own, frankly, company.
Come on,
which
baby.
is, always welcome a new public ticker to assess and look at the media world in this time of weird consolidation, it feels like.
I'm not sure when this turned around either, because when I looked at it,
Times
it was
New.
up more than 1%, and that was just a little minute ago. But Versant having a bit of a rough day. Versant opened the day 45.17 was where they were trading. Now it's just the other chart as it's its first day. Now at 39.98, they're down more than 14% on their
Yes.
first day. But you bring up a great point. This is, we continue to hear potentially a year of consolidation
Go,
in
baby.
this media space, this media landscape. But certainly maybe not the first day they were hoping for. Let's close out with one having a very good day, though.
Did anybody take the
Coinbase
689
here.
calls?
Coinbase got an upgrade. They got a price target hike here, but also getting a major boost off the crypto rally we're seeing from the events of the weekend.
Yeah, and I made the argument that it doesn't trade
Yes or no?
the same correlation as Bitcoin or Bitcoin futures as it used to, but I mean, inarguably, so you can look at last year, it does still trade in pretty heavy correlation. But Goldman today, with a pretty optimistic note, upgrading shares to buy from neutral of Coinbase, of course. Price target raised to $303 a share, up from $294, and so obviously that's considerable upside from where we're currently trading just below $259 a share. But the company's recent product launches enhanced what they said was the competitiveness of their core business. They view Coinbase as a best-in-class play on the growth of crypto infrastructure, and the company's scale and brand recognition, they can say, continue to drive average revenue growth and these market share gains. And so looking at crypto and the overall volatility we saw, especially in the back half of the year, I mean, in some of these months like October, as it's been coined, we're also expecting a pretty nice November that never really played out. Seeing this upside today, that's only actually firmed up throughout today's session, I think is encouraging to show this risk-on appetite and the real appetite for anything linked to Bitcoin and the entire asset class. And I know news over the weekend aiding this as well, as far as mining production materials that we have received from, of course, overseas Venezuela.
Back at $1 too.
Is no small move, especially even for a name as volatile as Coinbase has been. But a lot of the still legal framework that needs to be mapped out this year. So there's still a lot of wait and see, I feel like, when it comes to this entire space for the coming year.
But a nice pop for Coinbase, up more than 9% still on the day. And I was just taking a look at Bitcoin prices. We are getting closer and closer to that 95,000 threshold. Want to thank Danny Horn, co-host of Next Gen Investing, for being with us to break down those top stories for us. And I do want to check back in with Sam in New York to find out what we have coming up next on the show.
Thanks, Molly and Jenny. We'll check in on the economy and what kind of growth we can expect in 2026. Martin, I'm going to be right back.
What can we expect? Because I have to know.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, or retiring, you can count on market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Federlides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch
Trust.
2 p.m. Eastern, only
She makes it sound so
Whether you're an experienced
sexy.
investor or just getting started,
Sexy's the word.
Webcast is right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more.
Jim should probably sell his positions.
By chatting directly with an education coach. It's interactive learning at its
Because it's going to really start to get crazy here in a second. Unless we hold to 200.
and start learning today.
I'm in calls. Yes, I am. The 689s.
From U.S. equities to global macro matters, Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Bartlett on the floor of the New York Stock Exchange alongside Molly Caden in our Chicago headquarters. Let's just see what
As the closer you get into the day, it gets a little bit more.
But obviously a very important day here as we see investors.
It gets a little bit more volatile. Definitely this Monday ain't been like the last couple of Mondays. They were just been devastating. I mean, this is no comparison. Right now I'm about even. But the time of the day, man, you start, especially this last hour, they take on a whole new world of their own, which you probably already know. If we're going to hold, we need to hold right here, or we're going to have a pretty bigger drop. 90 cents. This right here. Oh, shit. Always clean as Jim. I had an alert set there. I don't know if I had an alert set there or not. Should have set one. Because that's where I thought it would at least start to slow down right in here and hold that. And we still stay bullish. It's 218.
For the second day track for 2026, so let's bring Marley back into the conversation and welcome in our next guest, Mark Zandy, Educator, Chief Economist, Moody's Analytics. Hello to you, Mark, and Happy New Year. So you see the Fed surprising with 3 rate cuts in the first half of 2026. Just walk us through that.
Yeah, I mean, I would say a high level of confidence, and I do think the Fed will be aggressively lowering rates, and likely because of the job market. They're focused on jobs, primarily on the rise in unemployment. As long as unemployment is notching higher, I think pressure on the Fed will be to continue to lower rates. Also, supporting that view would be
I don't know about that.
Inflation. I do think we're close to the peak in inflation. Probably a bit more to go here.
I don't think their numbers are correct in a way. Their employment numbers are not correct.
Inflation will start to moderate, and that should help the Fed continue to lower rates. And then finally, Fed independence. The president is going to appoint someone to lead the Fed that is on board with his view of lower interest rates. And I think that will put downward pressure on the funds rate as well. So yeah, I think 2-3 rate cuts seem at this point the most likely scenario.
Back at the orb.
And Mark, you mentioned Fed independence. It's a conversation that keeps coming up as we talk about who the next Fed head is going to be. How concerned do you think the markets should be about the potential erosion of Fed independence? And also, if there is concern there, where do you think we see it first? In equities or in the bond market?
Never was. Never was.
There's a lot to see. There's a number of different events that are going to happen here that will give us a tell as to how big a process is. I mean, the first will be what the Supreme Court says about Lisa Cook and the ability of President Trump to fire Fed officials without cause. So that would be key. Who the president decides to appoint as Fed chair, that will matter a lot. That'll be a tell. Another important tell may be what current Chair Powell decides to do. Historically, when the Fed chair leaves the chair, he or she will roll off the Fed as well. But if Chair Powell decides to stay on, not as chair, but as a member of the FOMC, because his term will continue on, that will also be a tell, because that would suggest that he's worried about that independence. So there's a few things that we need to see here, but that'll determine to what degree. Now, if it does look like the Fed's independence will be under significant pressure, and we're going to have lower rates, all else being equal, and decisions around rates are going to be made based on political factors, not based on what's going on in the economy. I think investors should pay a lot of attention, and I think it's going to show up everywhere, but most obviously it would show up in the bond market first, because bond investors presumably are most focused on what the Fed is doing and what it means for long-term inflation. So I'd expect to see it there. But given these valuations in the equity market, if interest rates start to rise even a little bit, I think it would put tremendous pressure on equity prices as well. So both markets, both the equity and bond market, would come under pressure in that scenario.
10-4.
The economy is growing, but you say it's growing in a sort of fragile state, and a lot of fragility is obviously coming from the jobs market. I mean, can the economy continue to grow without a meaningful recovery when it comes to labour? Can it be offset by sort of the strides that we're seeing when it comes to AI or not?
Nope.
No, it can. It's not sustainable. I mean, if the job growth is insufficient or the lack of job growth
again, I got it right,
to support stable unemployment. If we continue to see unemployment move higher,
no.
It has been over the past year. Go back a year ago, the unemployment rate was 4%, down to 4.6%. Still low. I don't think that's a threat, but it's moving in the wrong direction. As that continues, at some point, that higher unemployment will make consumers turn more cautious, more circumspect in their spending, and that's when you get into kind of a self-reinforcing negative cycle. The pullback in spending means businesses at that point probably will start laying off, and if they start laying off, then that's a very dark scenario. That's how you get into a recession. But I don't think the current situation is sustainable. We need to see job growth pick up sufficiently to stabilize unemployment. Otherwise, the year is going to turn out nearly as well as investors, clearly think it's going to at this point.
And Mark, you highlighted that we've seen job growth essentially stall out, but we are seeing the unemployment rate move in the wrong direction here. How close do you think we are to a tipping point in the broader labor market in terms of a downturn that would make you move away from your base case and the baseline that you highlighted in the notes you sent over and into a more recessive call?
Not far. We'll get another data point on Friday, for the month of December. We'll see what that looks like. But, if you get a couple, 3-4 months of really weak job numbers, outright declines in jobs, unemployment closing in on 5%, sometime in March, April, I think at that point, I suspect that consumers will turn more cautious and businesses more cautious in terms of their hiring and start laying off workers. So I don't think there's much of a margin here. My base case is that we will see job growth improve here, and sufficiently that unemployment will stabilize. But I don't think we'll any significant room for error at this point. The margins are pretty thin.
Mark, the spiral that you spoke of, it feels like this is really going to be the story of 2026 as companies trying to grapple and trying to understand and assess what AI is actually going to mean for their businesses, potentially putting, as you say, some of the job and the hiring plans on the back burner to kind of figure that out. Is that something that the Fed can fix, though, as they all try to, gauge exactly what it's going to mean for their own calculus, or is this all sort of structural in nature?
Yeah, I mean, if AI comes on very quickly here in terms of its adoption and implementation, and we do start to see even weaker hiring and even some job loss, businesses start laying off workers, and you get job loss on point to rise. That's the fodder for a downturn. I don't think the Fed can directly influence that. But that goes back to where we started the conversation. One of the reasons why the Fed, likelihood will be looking to lower interest rates, more likely lower interest rates, and lower interest rates more than I think investors anticipate, is that kind of a scenario where AI is doing more damage to the labor market more quickly. Now, at the end of the day, the productivity gains are positive. So the productivity growth is an elixir for our living standards. We need that. We should welcome that. It's just a matter of timing. If we get too much productivity growth too fast, overwhelms the job market, we get that job loss at this point when we're not creating new jobs. That's the problem. But the Fed is going to be reactive here and respond to that. There's nothing they can do to head that off at the pass.
Well, Mark, we appreciate you taking the time to speak with us and look ahead to 26. That's Mark Zandy, the Chief Economist at Moody's Analytics, and happy New Year to you, Mark. Coming up next, we'll get some big picture market themes for 2026 and which sectors you should have your eye on. Mark it up close. We'll be right back.
It's trying its best. Mr. and all the rest. Come on. This PX. Kind of one of them ugly days again. Kind of blurry right now. Definitely coming up to a major support, SPY is. Sure is. Oh, my gut stuck.
Investing across assets, the news out of Venezuela at the weekend.
Hey Sam, thanks for having me. The news out of Venezuela at the weekend, frankly, is somewhat irrelevant to the broader investing theme. And this is something that this country did in 1989. We kind of read the story before. We kind of know how it's going to end. Ultimately, it will bring additional oil supply on the market, but it's going to be years away. So it just isn't really very market moving at this point. In terms of this overall market outlook, though, and the things that we think we really need to be paying attention to, the kind of the broadest way to paint that picture would be the last couple years have been about building AI capability in the economy, and the next couple years, including 2026, is going to be about the diffusion of that AI throughout the economy. So, we're really kind of talking more about a broadening out trade this year, finally, because we're starting to get fundamentals in support of that broadening out trade. By fundamentals, I mean earnings growth in small caps and sort of medium Russell 3000 stock for the first time in almost 3.5 years. And so that's kind of something that we think that could be really exciting this year. And so that dual outlook is sort of driving how we're investing our funds right now.
Yeah, okay. I mean, that certainly seems to be the story. I mean, we're seeing that as funds reaction in the market. Investors largely looking past, potential geopolitical impact of what we've seen out of Venezuela, and very much focusing still on AI. I heard Denny sort of talking about the 493 and them getting a look in because, of course, of the use cases here. So, where do we see the winners and the losers emerging this year, do you think?
School, baby.
As far as sectors are concerned and across the small to mid-cap space?
Back to green again.
As far as winners and losers, a couple of fairly obvious ones to us are, number one, infrastructure plays. This is one of the major tailwinds of this economy is the sort of the capex expensing out of the big beautiful bill, and there is a massive build going on right now in terms of 5 or 6% of GDP.
Not
capex spending, capex build, not only AI-related things, but just more broadly across the entire economy. We have a lot of infrastructure rebuild in this economy, and now we have an incentive structure policy that is aligned with that. So anything having to do with infrastructure and sort of electricity production and delivery, I think is going to be pretty interesting play this year. Additionally, something on more on the small and mid-cap side, financials. Financials we think actually going to be an interesting play this year because 2026 we're going to get finally, we think, a push towards deregulation from the Trump administration.
Yes.
I personally wrongly assumed that we get that push last year, but the priorities for the Trump administration's second go-around are more aligned with the big beautiful bill passage and tariffs than they were around deregulation. So we really just think we're not going to get that, but it's basically delayed.
Yes, I have. I've been there.
And the biggest beneficiaries of something like that, a dereg push, is going to be the small and mid-cap financials. So those are two of our favorite sectors, sort of plays for 2026. Things that we want to avoid are your classic recession plays.
This guy's funky.
Think staples, think utilities, not the electricity utilities, but utilities. Anything that relies on contracting, one of two things: either contracting nominal GDP growth or slow nominal GDP growth, or high and rising inflation. Those are things that neither of those are going to be the stories for 2026. And so those sectors we think are really going to be punished.
Look, I don't think you were alone with your outlook in 2025 for the financials, because I remember sitting here around 12 months ago, not here specifically, but having conversations around this is the year with regards to deregulation. Obviously, we're going to see these, sort of names catching a bit, but that certainly seems to be the conversation now. We've got financials very much rallying up hard today. As far as the recession plays are concerned, okay, so that's something that you would probably avoid. What about, the impact with respect to AI and some of the use cases and some of the beneficiaries of that, particularly with infrastructure on the jobs market? How do you think about that?
That's interesting. And I heard you guys' interview with Mark Zaney just a minute ago, and I think he actually identified that dynamic pretty efficiently. I mean, this is not an if we are going to get additional jobs out of AI. We are.
We are.
You have a productivity, kind of a game-changer productivity enhancing tool and enhancing technology. It always, in every single case in history, produces additional jobs. And those jobs that go away are worse than the jobs that get created. But
you're a drunk.
Potentially. This is a very fast-moving technology. The adoption of AI by corporate America.
Don't listen to him. He's a drunk.
Even set by the internet and PCs from 25 years ago. And so the speed with which this thing is getting adopted and sort of integrated into business processes could create a little bit of this sort of time confusion or this sort of temporal confusion with respect to the job market. So we don't see a big job loss or a big job sort of peril.
Yeah, can we get you back on here in about another 5 years from now, sir? Huh? Would you?
And create the new jobs later on, and that could create a little bit of consternation, especially in a midterm year like this.
Yeah, I just wanted to touch on that.
Calm down, Jim. He's just a kid.
What sort of questions are you fielding from clients around the domestic situation, but also when it comes to foreign policy and perhaps all the other geopolitics involved here?
Yeah, Sam, geopolitics is always really challenging to forecast. We don't spend a whole lot of time trying to figure that stuff out. That's more of a read and react situation for us than a forecasting exercise. But in terms of like the known risks, like what's out there that could really kind of derail what is likely to be a pretty strong economy and therefore market in 2026. Chief among those things for us is if Trump were really getting to get aggressive on basically battling the Fed and trying to Fed lower rates. Because if you just look at economic history throughout the world, the conclusion
Come
is
on.
clear. Anytime the market deems a central bank to be captured,
I'm not done with you yet.
For whatever reason.
Shut up. You've not made one word of sense yet. You're fired. You kind of like somebody you'd pick up in Mayberry. Hey, you need a job? Would you like to run my hedge fund, buddy? $100 billion in there for you. What? I used to have people ask me to run a fund for them, and I said, no, I ain't doing that. I ain't doing it. We're at 94 cents right now. We are green. No, I've never been to Diddy's parties. No. That's one list I didn't make. What we're waiting for, and I think everybody else is waiting for, is for the 200 to break. And that'll be 688.23 to really start to take off. Now, we don't have very much time, more time left. We have 20 minutes. Now, I'm at the even point, so I got to make a business decision. Do I sell and get out, not worry about it, or I just wait a little bit longer and see if we break out? So right now it doesn't look like it's going to happen. Not right now. Unless we get a real fast reversal on this one candle. Nuclear fuel markets. Nuclear fuel makers get $2.5 billion from U.S. That's what I was called in high school.
A double bottom type of boundary there. When we do look at our other studies here, exponential moving averages, they act kind of funny when you don't have the full range of data. So these are simple moving averages. You can see though that our faster 20-day simple moving average here is below our slower, longer term 50-day simple moving average. The 50-day SMA comes in right around 90, so that could be a resistance point to watch to the upside. RSI, a bit of a triangular shape here, not really making any higher highs, but we are making higher lows here. So something else to watch out for would be if that short-term trend line breaks, and if we push above the 50 midline. Finally, when we look at our volume profile study, the point of control, the heavy trading area, all the way down here, right around where we are now, near 74, another big pocket of volume to the
17 more minutes.
About 40, but 74 is really the point to beat. Things start to pick up again around 90.
All right, and as we, have talked about this note, sometimes with this analyst action, we do see increased options activity, but in this case, it's remarkable or unremarkable, depending on what metrics and variables are important to you. Did we see an uptick in the options activity today, or was it mostly in line with expectations?
Well, today was actually a little bit lighter. The sizzle was only
Is that a yawn?
So about 80% of what the typical
Did you just give out a yawn?
Options volume would be. But we did see today, though, still that equates to over 100,000 contracts changing hands, about 109,000, 63% calls or so, so a heavy skew toward that side. Most active month in terms of open interest are January 16th monthlies here. They're about 32% or so of all the open interest. One notable trade that we saw, plus 800 March 20th, 92.5 strike calls at an 874 debit. That was our biggest dollar amount trade today. That's about a $700,000 debit paid.
$700,000 debit paid on 4 week. Yeah, trading right now at 77.60. That is down 2%. Now we did see a move to the upside following this note, but now trading down more than 2%. Still well above that new price target, though, from this particular analyst at D.A. Davidson. He's got his price target set at 68. I do want to say that brings us to the end of Options Corner, though. Thank you to Captain.
Good job, Marley.
All that down and send it back to Sam in New York. Sam?
Thanks so much for that, Molly. Coming up, we will look at the energy sector and see how the conflict in Venezuela is impacting the oil markets. That's coming up next on Market on Fox.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options,
Technical analysis.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Huh.
I'm Jenny Warren. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
how's it going?
First is, sometimes, you know...
Next.
Try again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest in trade around.
And if you want, they can even manage for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets in the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Marlene King alongside Sam Vadas in New York. Geopolitics and energy in focus today in reaction to the capture of Venezuelan President Nicolas Maduro by the U.S. over the weekend.
Yay!
Military operation, President Donald Trump said
Still seems
US
strange,
investment in Venezuela's energy sector is now a core objective for his administration. Because of that comment, we are seeing some pretty heavy moves to the upside in energy and oil stocks today. SLB moving up more than 9% on the day. Halliburton 8.5% higher. We're seeing Valero Energy up more than 9%. Phillips 66 up close to 7%, and Marathon Petroleum trading almost 6% higher as well. I do want to get into this conversation how it might affect oil prices and the oil market itself, how these developments could affect it. Bring Sam back to the conversation. And welcome our next guest joining us now, Nitin Kumar, the Senior Equity Research Analyst at Mizuho. Nitin, happy New Year to you, and thank you for being with us today. Put this in perspective for our viewers. How significant is Venezuela in today's global oil market compared to its historical role?
Well, happy New Year to you as well, and thanks for having me on. So, Venezuela over the last 20-odd years has declined significantly in terms of its importance to the global market. At one point back in the 1970s, they were producing around 3.5 million barrels a day. Today, they produce roughly between 900,000 to 1 million barrels. There's been underinvestment in the infrastructure. At the same time, though, their crude is very valuable. It's a heavier crude that's more profitable for refiners.
So it is a heavier crude.
And so it is a crude that is very much in demand. Today,
It's a heavier crude oil. It's a different kind of crude.
we saw that come to the U.S. markets. It could be really valuable for the refiners.
Is there infrastructure to support such
It's a good grade.
Because that seems to be the conversation that, obviously it's heavy, sour stuff, tough to extract. It's going to take a number of years. It's going to take billions of dollars in investments as well. So just give us a little bit more context as to, how achievable and the reality of this is.
So I think a good case study would be actually Chevron. So they got the license from OFAC about 3 years ago to start producing some of their fields in Venezuela. At the time, they were producing roughly 45,000 barrels, and in 3 years, they've grown that production to 240,000 barrels. Now, this has taken some investment, but it's a lot less. They would describe this as probably operating cost type of investment, so you're replacing a piece of pipe, maybe just doing some maintenance kind of work. Now, over the next, if you wanted to grow Venezuelan production by, somewhere between 500,000 barrels to a million barrels a year, that's low-hanging fruit in our opinion. It's still going to cost some capital expenditure, but it'll be pretty low on the global cost curve. And instead of being like $40 per barrel, it could be something between $15 to $20 per barrel. Longer term, you're absolutely correct. If the aspiration is to get Venezuelan production back to 3 or 4 million barrels, that is expensive, and I think that process takes longer. First, you have to, set up the financial terms for the different companies, be it U.S. or international companies, to go back into the country. Then you have to undertake the investment, so that could take a little bit longer. So we see the near-term impact as relatively modest. Medium term, you could add maybe 500,000 to 1 million barrels a day, and then longer term, it could be more lucrative, but it would require investment.
And I was talking about, the uptick we're seeing in terms of the energy companies today on the news of what's happening in Venezuela. Is there a scenario that you see where this ends up being neutral or even potentially disruptive for U.S. energy companies?
Well, certainly the companies didn't show up there with the upstream companies, the producers of oil, right? So there is more oil in the global market that lowers oil prices, and it's the E&P sector that is not going to benefit, the shale operators. So part of the argument today is that with the ability to exploit Venezuelan reserves, does shale still play a role, especially as you're starting to see a little bit of inventory exhaustion, at least the top tier inventory. We don't necessarily subscribe to that view. As I said, we have a little bit more of a conservative view on how much Venezuela could disrupt the market. But that's what you're seeing initially in the market today, where E&Ps are down somewhere between 2 to 4%, whereas the refiners, as we were showing earlier, are up between 6 to 11%, because they benefit quickly because the oil is available for them to get even in
8 minutes left.
Quantities.
Nitin, can you just explain the reaction we're seeing in the markets today? Because we've only seen a sort of marginal uptick in the price of oil, as no doubt traders are still trying to assess the...
Because it's no big deal, baby.
From a policy direction standpoint. Molly just ran through some of the companies. Obviously, some of the big winners are those in the services. I mean, Halliburton, for instance, on this whole expectation that we could see some sort of opportunity here as far as infrastructure build-up, but obviously they're not going to do that tomorrow. Then there's also this assumption out there from a political standpoint that, lower oil prices can translate to obviously cheaper gas, which is good at the pump, ahead of a midterm. Can you just put it all into perspective for us
midterm,
as far as, justification for what we're seeing in the market today?
Yeah, I think so. I think first of all, nothing has changed in Venezuela in the flows of oil over the last 3 days. We're still under the same, technically the same government, and also the same sanctions that are on the country, the same production levels, etc. I think oil is up because there is an expectation of demand growth. That is irrespective right now of Venezuela. That is just the path of the economy. I think you're seeing the services names outperform and some of the refiners because there is an expectation that you could see more heavy crudes coming to the U.S. and potentially some investment by U.S. companies which would benefit the likes of Schlumberger and Halliburton. I think beyond that, the reason crude is up is because, as I said, demand is expected to be higher, and the supply response is not going to be as quick as perhaps we're anticipating. And so that's why you're seeing the producers lag a little bit because we don't know who's going to get the licenses in Venezuela, whether this would displace U.S. or Canadian oil, and so that's why those parts of the market are lagging.
Line for investors who are watching, particularly the energy stocks that we were highlighting today. Is this a refining story? Is this going to turn out to be a story on oil prices, or is this a long-dated option on Venezuelan supply? Because as you pointed out, this isn't going to happen tomorrow. This could take years.
So I think there's years in the short term, medium term, and long term. In the short term, I think this is a refining story. Names like Valero, PBF, TSX, they're already
taking it seriously.
The country. If they can have a more stable supply of that oil without sanctions, that benefits them. This is very, as I said earlier, it's a very lucrative oil for the refiners to process. Our refining kit in the U.S. is geared towards this oil, so that would be very helpful. I think medium term, the name that you haven't mentioned is Chevron. The company already operates in the country, as I mentioned, under an OPEC license. So they could benefit from maybe increasing production modestly with some capital investment, but also seeing a return on that investment. I think longer term, this becomes a crude oil story and a sort of a geopolitical story where if the U.S. can encourage significant growth out of Venezuela, what does that mean for Canadian oil prices? What does it mean for OPEC or Middle East prices?
Exactly.
Those countries have their
what does it mean?
Ambitions to grow their oil production capacity. So I think in the short term, I think this is definitely
a very good question.
With maybe Chevron being one of the few beneficiaries short term, and then longer term this becomes more of a cost curve, and very different companies could fall on it.
Shifting global dynamics, really appreciate it.
Applied was up $2 today.
I'm sure we'll be talking to a lot in the coming months. And
Shop.
Kuma from the Mizuho today.
Snow. Starbucks.
And Alex Coffey next to break down today's action ahead of the close.
Tesla, Amazon, JP Morgan, Morgan Stanley, Cost.
Real-time access.
All look good on my watch list.
From U.S. equities to global macro matters, Schwab Network connects the dots. Watch live, subscribe free at Schwab Network.
I connect the dots, especially when Caroline used to work here. I've not been the same ever since.
Most popular stocks and ETFs, plus a wide variety of futures.
Not even a good buy.
All with 24-hour support from trading specialists.
I had no clue.
Of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm very disappointed.
I'm Alex Coffey. And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Do.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here on Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Hayden in our Chicago headquarters. There's just a few minutes left to go now in today's session, so let's welcome in Alex Coffey to help close out the day. So we're nearing a record close here, it looks like, on the Dow. We're at 600 points there. So we are off the session high, suffice to say. We're flirting with 6,900 right now in the SPX. What are you watching in those final minutes of action?
Yeah, all things considered, guys, I look at this market, and it was relatively contained throughout the session. About a 30-point range, high to low, which is relatively small considering we're talking about an index that trades with almost 7,000 for a value, and especially given the context of the news over the weekend. But really, that doesn't even tell the full story. I mean, really from about the first hour of trading, so about 9:30 Central, 10:30 over in New York, till now, we basically traded about a 15-point range in which we're on the low points of
Alex.
the next gen. At some point, the market is telling us that there's not a lot of fear out there, regardless of what the headlines and the emotions induced by them.
I agree. There's fear out there. But it's not, I don't know what you, just shows how rigged it is. It's the only fear I see. Well, not a bad day. I mean, got stuck in one. So, It's got to kind of take my time here. It's the first of the year and see how earnings are going to be coming soon. That's going to be the next digest. So, later dates.